Clear? All right, everyone, before we get started, just to let everybody know, on the way you type in your notes, chat, you see where it says panelists, which is where it says two. Just make sure you have that to all participants so we all can read everybody's chat and share it, because we are going to be asking a lot of questions. Well, first of all, let me be the first one to thank you all for being here. My name is Fausto Pugliese, president and founder of Cyber Trading University, and this is the Cyber Trading Expo, one of our biggest events that we do of the year at Cyber Trading. We're going to have a great lineup of speakers that are going to be here for you today. If you cannot make it for all of them, I understand it's going to be a long day, but try to be there because they're gonna have some great content. You're gonna have a lot of good questions. All different types of traders are going to talk about certain different things. And also, we will send you the recording. So make sure you do subscribe to the channel, like us, friend us, and we'll get that over to you. But I'm going to kick things off here for you today. I'm actually going to talk about, the styles that we do, and you'll see the different styles that we trade between trader to trader, swing traders, day traders, options traders, crypto traders, day traders, all types of traders. And you know what? Everyone here has to learn a little bit from everyone. We all have different styles, but you know what you're going to learn? We all trade the same. And the way we trade the same is this. We focus on discipline. We focus on controlling profits. And most importantly, we control with the discipline to knowing when to take losses, because that's what's going to be my topic for today. I'm going to basically talk about traps, trends, mastering the arts of false breakouts that people get caught up on. And hopefully you're going to learn a lot from this that you could take it and, move on with it and learn with it in trading. All right. No problem, Gillis. Whatever you could say, it's fine. I could read it here. Okay. All right. Now, let me just tell you a quick little disclaimer. We are not going to guarantee any promises. Everyone's going to be a gazillionaire here. It does vary from student to student. There is a very high risk of trading. Please make sure before you go out there that you only risk what you could afford to lose in trading, because you can lose not all of it, but more than that when it comes to it. There is a very high risk in trading. But the good thing is you're here today. So hopefully we're going to teach you all, what that risk is so you don't make those mistakes. Now, once again, these are all the great speakers that are going to be here. They're going to be talking over the course of the day. A lot of you are probably familiar with a lot of them. I will be introducing them as they go on. But 2 days, I think, is a long time, which, I think is more than enough to get to some of the best speakers here. All right. So let's go ahead. Let me just change the slide here and let's talk about what's moving in the market today. Now, I know a lot of you here have been following Cyber Trading University. Hopefully you subscribe to a lot of the channels that we have, our YouTube channel, our TikTok, our Instagram, everything. And I want to kind of show you just a little bit of a style that what is moving in the market, what we're about to learn. First of all, I am going to invite all of you to come to my trading floor. And let me just share you this really quick, because this is what we're going to be looking at. This right here, ladies and gentlemen, is all our traders in our trading room. And I'm going to invite all of you to come in here, and you're going to be looking at some stocks that we're trading. Right now, you could see all the traders on the left-hand side from all over the parts of the world, all different levels, everything. We are broadcasting and talking about some stocks. Right now, Josh, our head instructor here, is talking about a stock that we're trading, ASST. What I'm going to show you here is something called payment order flow. How we find these stocks, where do they come from, how to get in, how to get out, all that good things. Okay. So let me move this out of the way, and and before we go to the market, let me just tell you a little bit about myself. For some of you who don't know who I am and why you're listening to me personally. I've been doing this for 35 years. I live here in New York. It's the financial capital of the world. I was trained and I surround myself with some of the best traders in the industry. And what I've learned on the first day on the job, I tell everyone this: I should have never made my first trade, because it doesn't matter what Fausto thinks. It doesn't matter what you think, Dennis, or you, Gillis, or you, Teresa, and everyone else here. It matters what Wall Street thinks. So the way you become a good trader is you have to follow the money. You want to follow them. There are stocks that you are not going to like. There are stocks that you wish that they will go out of business, but you're going to wish some stocks that you are so confident is the best thing since sliced bread, and it's going to blow your account up and you don't know why. These are things I'm going to show you. how to avoid them, because what we have to think about, we are traders, okay? We don't care what the company does. We don't care about the policies that they're involved in. If it's going to give me the least amount of risk with the high amount of reward, that's how you become a successful trader. All right. So by doing that, I've competed against every school in the industry, whoever wanted to compete against me, and I beat every one of them in the industry. So I beat every trader, every school that I competed against. I also have been a regular guest at a lot of the big financial stations. I also do a lot of great work for NASDAQ. Some of the tools I'm going to teach you today are some of the bigger things I do for NASDAQ, which is called the NASDAQ Total View. I like to call it AK Level 3 and Level 4. I'm going to show you all that good stuff. But the exchanges know how important it is and understand the failure rate of the industry, but they want you to know how to trade the market, which is very, very important. Now, I am also going to give everybody at the end of my presentation a copy of my book, How to Beat Market Makers at Their Own Game. Market makers don't like that name, but I'm going to show you because I think everyone here deserves to know how to play like and trade like a Wall Street market maker. You can buy it on Amazon for $47, but you're sticking around and register. I'm going to give it to you for free. All right. So like I said, been doing this for 35 years. Forbes magazine wrote a big article about us. I am actually one of the original day traders that started this industry. When I started, it was about a couple of thousand. Now there are several million of us. You are obviously one of them. So what the big thing that you're about to learn is the technology that I'm going to show you has been around for over 50 years. Some of you are going to be almost shocked to kind of say, oh, I never heard of this before. I'll give you an example. Does anyone here use AI, artificial intelligence? Anyone here use it? Great. A lot of you use it. Okay. I'm going to ask you all a dumb question. How old do you think AI is? How old do you think it is? Close, Stuart. Close, Teresa. It's been around for 60 years. Okay. We're just starting now to get into quantum. We're starting to get into artificial intelligence, ChatGPT. You hear about the robots coming out with Tesla's coming out. I mean, yeah, there's a lot of great things that are happening right now. And I'm going to show you exactly how that works because the technology is today is what we've learned, is like total view. Now, I'm first generation Italian. Just tell you a little bit about myself. My parents came here with $20, but one thing my dad always taught me is like, listen, you want to be a good trader. You want to make a lot of money in this business. Learn from people that are really good at it. And most importantly, it's okay to learn from really bad people because those are the mistakes you want to learn that you don't do. Okay. So there's a double-edged sword there. But as long as you're learning every day, that's what's going to make you a better trader. But listen, this is not about me. This is about you. Okay. I'm just telling you my journey because it is a very big failure rate in trading. It's almost 90%. It's almost like a guarantee you're going to lose money. And why is that? Well, it's because a lot of people just don't know how to play the game. And that's what I'm about to show you why people fail on this. So my question to everyone here is this. How long have you been trading for? How long have you been investing in the market? Just out of curiosity. Just to kind of get you guys to know a little bit about it. 15 years? Okay. 20 years, 10 years, 5 years, just got started, some of you are saying. All right. Okay, so that's great. Now, the next question I have to ask you is this. Have you ever been trained by a professional trader? And what I mean by, and just a quick yes or no. And what that means is, yeah, and I'm talking about paid person, someone that you hired to teach you how to trade, not somebody like, watching on YouTube or your friend is in the market. No, get a lot of no's. Alex, no. Joseph, no. What about you, Bob? Beth, what about you? Oh, well, Teresa took my classes many years ago. Okay, great. Well, it's good to see you again, Teresa. A lot of you know. Okay, so let me just remind everyone here why you're here today. You're about to learn from some of the biggest traders in the industry, okay? And they're all going to tell you this. The way we got into the education business, because we got educated, okay? And we want to educate you because a lot of the people fail is not being educated. Would you give your money to someone that never learned finance? Well, think about what you're doing right now. So that's what I'm about to teach all of you right now. Why do I need to learn how to trade? Who's teaching me how to trade and how to go about doing this? So have you guys been watching lately what's going on with quantum stocks and nuclear stocks? Let me show you the style that we do, because there are things that are big that are moving in the industry and things that are not, and it always changes. Nuclear stocks, the reason I'm bringing this up is because you probably heard what's going on with AI. You've probably heard what happened with President Trump being in Saudi Arabia, signing $1 trillion deal with them. These supercomputers, all these things. Now, you got to remember that you have two different, how could I say it, ideologies of policies that came in with a new administration. One is about the Green New Deal, and one is about not the Green New Deal. One spent a lot of money on the Green New Deal. One is trying to eliminate the Green New Deal, and it's going to happen. And then when there's a new policy, a new person comes in, they're going to have same different policies. The new thing that people are looking at is they're trying to eliminate the Green New Deal, and they want to get into nuclear. So nuclear stocks have done really, really well in the market lately. Here's a couple of stocks, for example. OKLO stock was $10 in September, shot up to $50, took a little bit of a hit. Went from 25 almost up to 40. SMR, same thing. $8 up to 32. And you're looking in basically a short period of time. Quantum stocks, another big thing that's been running in the market. This has probably been the hottest industry since the beginning of the summer. Quantum stocks, IONQ was all the way down to $10, ran to 50. QBTS, probably the biggest one out of them all. Stock was right around, I don't know, about $1. I mean, it's already at $16. You could see here on the intraday, went to almost 20. These are just little hold on, let me get my crayons here so you guys can follow along. Almost got to do that. There we go. There we go. Right here, just a couple of traders, Debbie, Deborah, Chuck, Kerry, all trading quantum stocks. By the way, you're going to get to meet all these people in our trading room, just showing you, some profits that these guys have been taking, getting in and getting out of it. But the thing is, how do we know they're going up? Okay, listen, I don't have a crystal ball. I hate when people use that word. I got a crystal ball. Let me check this out. There's no such thing. We all know that. It sounds cool. We always want one. The bottom line is, how do we find these stocks? Well, finding them is actually pretty easy. Okay. Trading them is going to be a little bit more of a challenge. I'm going to show you all. But I don't know if anyone here follows me. I am live every morning at 9 a.m. Eastern and at 2:30 in the afternoon. We broadcast on all social networks. If you have not registered, once again, you've already probably registered here, but you probably take your phone, scan your QR code, and that's how you get in there and watch us. But the way we find the stocks are very easy. If there's one stock that we know that's moving in the industry, they're all going to show up in that industry. All right. Now, the thing is it a trap? I mean, how do we know? Are we not going to get suckered into these stocks? How do we know that we're not too late to get into them? That is what I'm about to teach you moving forward. And that's basically what we're going to do right now. It's about following the money. That's all you need to do is follow the money. Now, people are like, how do you follow the money? Well, it's very easy. Most of you know how to read a chart. Okay, that's like the first thing you're going to meet everyone talking about. I go to the chart. I go to the chart. I go to the chart. Well, what is a chart? Where does a chart get its data from? Right? Well, what does that really mean? You go into the chart. Why am I going to the chart? The chart is what happened to a stock in the past. Okay, so the reason why people go to the chart is like, okay, what happened in the past at this price? Did it continue to go up? Is it testing support and resistance levels? That is basically it. Well, what I want you to do right now is forget about the past. I'm going to teach you the future. And it's not the crystal ball I'm talking about. It's about the right of the chart. And yes, there is something called the right of the chart. The right of the chart are the future orders of people looking to sell their shares and buy their shares. Those are those limit orders that you probably put out yourself. Now, how do we go about doing that? Well, we're going to start off talking about something called level 2 quotes. All right. Now, does anyone here have level 2 quotes right now? Just give me a yes or no. All right. Teresa has it. Dennis. Okay. Michael, everyone else? Alex, you have it. Good. All right. So let me just tell you a little bit about level 2. This has been outdated since the 90s. Okay. That's over 30 years ago. All right. That's how old this technology is. And I'll tell you why, because they got away from using level 2 and now we're using total view. So, but let me just explain to it because it leads into it. For some of you who don't know how to read it, let me tell you what it is. These are the bid of the buyers. The ask is the sellers. MMID means market maker ID, and then size is amount of shares. So you got 3 very important columns. 1, 2, 3. The first column tells you who's looking to buy it. Second column is telling you the price they're looking to buy it for. And the third column is telling you how many shares they're looking to buy at that price. Everything there is multiplied by 100. So 2 means 200, not 2 shares. Okay. Now, whoever wants to buy for the most is up on top. Whoever wants to buy for less money is down at the bottom. Now, what you're seeing right there as those market maker IDs, those are called ECNs. ECNs abbreviate as Electronic Communication Network. Those are technically exchanges. What are the exchanges? New York Stock Exchange, NASDAQ Exchange, the Chicago Exchange. So you're seeing what that stock is trading at that exchange. Okay, that's basically what you're seeing. Now, the question is, you're only seeing the best buyer and best seller. You're not seeing every order out there. So that's why I'm trying to tell you, you're not seeing the total book of orders out there. It looks nice. It trades fast. It's got real time, but it's also free. And free is not for me. Free is, it's the reason why you're giving something for free is because you don't want it. Okay. Or there's a catch. Nobody works for free. Okay. Always remember that. You don't work for free. I mean, we do, we might charity, but you know what you're getting. Okay. And it's obviously not that good. So let me show you what is good and what we do use. Regardless about NASDAQ level 2, we're going to talk about something called level 3 and level 4. So NASDAQ total view and level 4. This is where you have to pay attention because what you're about to see right now, fellow traders, you could apply this towards Forex trading, futures trading, stock trading, options trading, crypto trading. Okay. I'm going to show you what's called the right of the chart. Now, before I do that, let me just explain to you what we're looking at. NASDAQ total view, which is called the book viewer, is going to show you every order that is taking place at the exchange of NASDAQ. NASDAQ basically controls probably 50% of the volume of any stock. Now, there are a lot of other exchanges, New York Stock Exchange, Chicago Exchange, Philadelphia, but NASDAQ really does the most, okay? So when you look at level 2, you're only seeing the best buyer and the best seller. When you look at total view, you're looking at every order besides that number 1 order. So look at this right here. Look at all these orders out here, all the way down. So you're seeing just hundreds and hundreds of orders. Now, the first thing that you look at here is you're probably saying, Fausto, it's a lot of numbers, a little confusing. What am I looking at? Well, that's what I'm about to show you right now, because 98% of what you're seeing here is not what you should be looking at. I'm going to show you the top 2%, which is going to eliminate all those orders and show you exactly what to follow. All right. So how do we use this data? This is how we use it. We're looking at a stock SMCI. Okay. And you could see here how SMCI went from $38 all the way down to $30 and went up to 46. Now, the question people ask is, how does a stock make a support levels? Okay. How does it make it? Very simple. Buyers. Okay. Now, how do we see those buyers? The chart doesn't show you buyers. The level 3 shows you the buyers. So looking at SMCI here on total view, I'm going to work my way down this list, and you're going to see that the biggest order out here is right there at $29. and it's a blown up version right here. There are 222 orders out there that equal 235,000 shares at $29. Now, is that a lot? Is that something we call here at Cyber Trading University an iceberg order? Well, when you look at all the other orders, I don't see a 6-digit number. I see 1,300, 2,000, 3,000, 10,000, 235,000. That's a lot of shares. Now, not only is it a lot of shares, but let's add that up. 235,000 times $29 is roughly about almost $7 million worth of stock sitting there. Now, are you telling me that you think you know more than 220 people out there looking to buy equivalent to $7 million worth of stock? I don't think so. And you know what? You think you're probably going to agree with me. So why would you sit second guess and say, oh, this stock is a garbage company, it's going lower? Okay. What does that actually mean? It doesn't matter what you think. It matters what the $7 million worth of stock thinks. Now, before I continue forward, I got a question to ask everyone. Did I lose anybody yet? Is everyone following along? Just give me a quick yes or no. That's all I ask. Gillis, you following along? Okay, good. We got over 100 people in here. You all should be able to answer this question. Just give me a quick yes or no. And don't pay attention to the market. All right. Well, Bill, we didn't get there yet. Joseph, you following? Bill's asking, is this about short covering? It could be anything. At the end of the day, Bill, that's not what's important to us. What's important, I don't know if the guy's short covering. I don't know what those 220 people are doing. All I know is a big buyer out there. Let's look at this example. Let's look at Apple. Okay. So Apple, same thing, $223. Stock goes all the way up, hits a number, whatever that number is, somewhere in $224. And for some reason, it decided to go all the way down to 218. Why did it stop at that $224.27? Why didn't it go to 225? Why that number specifically? Well, if you look over here, what makes a resistance levels is sellers. So when you look at the sell column and you work your way down, you'll see so many sellers at every single price. But the biggest seller is all the way down here. That seller is 50,000 shares at that number, okay, at $224.27. Not 225, not 223, not 224.50, $224.27. That's the only reason why the stock came down. And if you didn't see that and knew that you were coming up to a big seller, you were probably one of the people that sitting there wonder, like, why is the stock going down on me? You know, I just listened to Cook on TV and he told me all this money that they're investing in US and they just beat earnings. Why is it going down? Well, why? Because somebody wants to sell and it's a lot of shares. And the only way it's going to go higher is two things that would need to happen. Number one, someone has to buy that 50,000, which is going to cause it, which obviously means there's a demand for it. Or two, that person's got to cancel. But as of right now, he didn't. And that's what you have to deal with. That's trading. Let's look at some more examples. Let's go over a couple of trades that we did in this past week. Okay. So Revlon had a really good move. All right. And what was that move? It was going down. Now, don't tell me you ever been in a stock that was going down, you were losing money, right? And I know a lot of us here want to control those losers. Well, why is it going down? How do we control it? Well, let's look at Revlon. It's going down. So the first thing you have to ask yourself, well, actually, before I answer that question, let me ask you that question. If you own a stock that's going down, okay, what is your What's the first thing that you do? Panic, freak out, sell? What do you do? Look at support levels. Okay. Anyone else? Check out some indicators. No. We'll cover that a little bit later with some of the other speakers. What do you do? What do you do? Neil, you sell? Not a good answer. Not a good answer. Buy puts? Not a good answer. Let me ask everybody this question. Ever own a stock and you're losing money? Okay. What is going to help you from the stock from going lower? You're going to look for support levels, but those support levels don't exist unless we got buyers out there. So we got to find the buyers where they are, because it might be a good time to buy right now, or crap, it might be, you better get out sooner because there is no buyers and go, because remember, the stock can still go down 15 more points. So how do we find the support? We're going to go check out on the NASDAQ total view. And I'm going to look where the biggest orders are. And if you notice, as I work my way down, right here, $14.72, we got about 44,000 share buyer out there. Okay. Now, remember, I told you 98% of the data that's out there is worthless. I'm looking for 5-digit, 6-digit, 7-digit numbers. So the big iceberg order is right there. Now, without even thinking of news, earnings, anything else, I'm going to look at this and I'm going to say, okay, what do you think is going to happen? Well, like it or not, hope all you want, the stock is going to go from 1640 because there's no buyer up in there until 1480. So you could sell now and just buy it cheaper, right? And buying it cheaper is always the better way to go. And if you were waiting to buy an opportunity, here was your buying opportunity, because look what happened. It hit that buyer right there, 1472. And look what happened. The stock went right back up to 1620. By the way, has that ever happened to anyone here? Do you ever buy a stock? As soon as you buy it, it goes down. As soon as you sell it, it goes up. And you think like somebody's watching you, right? You always feel that way. It's like, damn it, why is I make like, and it's very discouraging. Well, let me just tell you something. Nobody's watching you. The problem is you are not watching them. You got to remember, these market makers that we are, like myself, we trade millions of shares. We don't got no time to worry about your 100 shares. Okay. We got orders to fill. BlackRock, $1 trillion company. You think they really care of suckering you in? Okay. They got to worry about tricking Goldman Sachs, Merrill Lynch, Charles Schwab, Vanguard. They're not worried about you. We're just the ants on the floor, like it or not. And don't take it personal. Remember, you're just looking to make a day's pay. You just want to you want to build growth. All right. Because this is a great job. That's why you guys are all here. This is a lot of people successful at it. You're always hearing about it every day, no matter what financial station you turn on, the news, whatever. It's in your face. You just got to play the game. Let's talk about some resistance levels. Okay. So what makes a resistance levels? Let me ask everyone that question. What makes a resistance levels? Thank you. Thank you. Great question. Reg, you're right. Gillis, you're right. Anton, what about you? What do you think? Sellers. Can everybody write the word sellers? I just want to make sure that we're on the same page. Margaret, thank you. Russell, thank you. Who did I miss? Who didn't answer me back? Dan, Gene, Gillis, Lynn, what about you guys? Come on. Sellers. All right. So we had this stock we were trading this week called Pony. Okay. Pony's been having this great run up lately. And, the first thing you always ask is like, you don't want to sell things too cheap, because it keeps going up, but you got to know where the future is. You got to know where the right of the chart is. So we're looking at Pony. Pony's been on a big, big run up lately. It's been a great day trade. It's been a good swing trade. But the question is, you don't want to sell it too soon. So we're going to go check out and see who the orders are. A lot of orders out there. Remember, there are orders at every single penny. But as I work my way down and I look at the sell column, look right there at $19. 139,000 shares. There are 12 people out there when you aggregate those orders that make up that big iceberg order. Okay. Now, I mean, think about it. Are you scared of the 600 share seller? Are you scared of the 10,000 share seller? Or are you really concerned and scared of a resistance level that will make this 140,000 share seller at 19? Because guess what? Look what happened in the past. If you didn't get out on that big run, it didn't hit it once, it didn't hit it twice, it hit it 3 times. Eventually, no one wanted to take that guy out. Or I'm sorry, not that one person, the 12 people out there. And then boom, now the stock's 17. And that is everyone's issue. And I'm going to show you some stocks. In the next few moments, I'm going to show you, we're going to go out there and we're going to find stocks like this. We're going to go trade some of them. You guys are going to give me some stocks. I'm going to bring them up. I'm going to show you. You got to have a game plan. Always have a game plan. Listen, let's be honest. How many of you here had a bad 2025? Right? I think everybody did. I can go down the list. Every single the fabulous sevens crashed. What happened in the past month? Right? Probably made the most money you ever did if you bought. You look what happened with COVID. Look what happened with the financial crisis. It's called trading. You got to have a game plan. You need to know where the street is. And if you didn't know where the street was on this stock, now you convert a nice winner into maybe a small winner, or hopefully maybe a very bad loser. Now, what I want to do is I want to go into the live markets. All right. Now, by the way, who here would like to get this NASDAQ total view? Because I'm going to show you where to get it for free. All right. Anyone here want it? Russell, you want it? Okay. Now, listen, just to let you know, this is not the Fausto indicator. Okay. This is not the Fausto Nachi. It's not, this is the exchange. By the way, you can get it from your brokerage firm. Some of them do offer it, but I'm going to show you how to directly get it through NASDAQ. Now, let me explain something to you before we go into the real markets, because this is the craziest thing about this platform. When I started trading, okay, well, it's not free. It costs like $15, Rick. Okay. You don't like free. Please don't ever say that word. Nobody likes free, because that's all it's worth. Okay. Nobody works for free. If you heard me say before, there's got to be a catch, but it costs $15 a month, which is a steal. And the reason why I'm bringing that up, I'm glad that you said that, Rick, because when I started when I was 22 years old, I want to go back to my history and tell you how I got started. Everyone here wants to get in the stock market, right? Well, back then, the only way you could become a trader, you had to work for somebody. And you had to take a license. You had to get your 7, your 63, okay, your trading license. Then you had to split the profits with someone. And on top of that, you had to pay $1,000 a month out of your own pocket to get this data. Now, like I said, there are over 100 people here, right? And here I am, you're coming for a job interview. And imagine me, I'm interviewing you. And I'm to tell you point blank, you sit in a room, you're seeing everyone cheering, you see people driving nice cars, living in nice areas, buying drinks, taking you out to dinners or expensive restaurants. And then you're like, I want that job. That sounds like a great job. I mean, better than working at McDonald's for $15 an hour, or, pushing lawnmowers or whatever. I'm not saying there's anything wrong with that. But when you look at, the most prestigious and the people that have great financial careers, it's in the finance market. But now when you're sitting for the interview, they're telling you, oh, by the way, to do all this, you got to take your license. We're going to split the profits, and it's going to cost you $1,000 a month. Now, here you are for this interview. I don't think anyone here, as much as you probably want this job, you might want to sit back and go back and talk to your spouse. Like, you know what? I got to come up with $1,000 a month. Okay. Well, yeah, that's what it costs. That's what the exchanges charge. Okay. Well, the reason why I'm bringing this up is because all those jobs got eliminated. The exchanges didn't like market makers controlling, them controlling the market. So what they did was they bought out those seats and they gave it to you, and all you're doing is paying data fees, $15. Now, think about it. You're going to see, about 70% of the volume out there in a market of a stock. Why would you not pay $15 a month is beyond me. Okay. But I hope I got everyone's attention, because this is why people fail. They just, without having the right tools, you're basically just looking at your phone and you're guessing. Now, let's go into the market, because what I'm about to show you is something called iceberg orders, and I'm going to talk about something called level 4. All right. Now, level 4 is basically level 3, but just on steroids. It's a heat map. Now, what I want to do is I want somebody pick a stock. Pick any stock out here. Any stock off the top of your head. And I'm going to bring up my execution system up here. And we're going to share some stocks here. All right. There we go. So we're looking at my direct access execution. We got a 1-minute chart up on top. We got a yearly chart on the bottom. We got level 2, time and sales, watch list, and a big percentage gainers and losers. Very, very simple stuff. All right. All right. So we got HWM, Google, Apple. We got Dix, Virgo, NVIDIA. Well, let's just check out NVIDIA. Everyone knows it, brand name stock. Let's check out NVIDIA, because I actually own NVIDIA. All right. So you look at NVIDIA right here, and NVIDIA had a great run, okay, in this past month, right? You could see in December, it went from like 150, dropped down to 95, and now we're hovering around 135. Okay. Now, why did it stop at 135? Does anybody know? Why did it stop there? I'll draw a trend line here for you. Great. I like everybody's answer. Nobody's saying resistance. Everybody's saying sellers. Okay. So what I'm about to do is I'm going to show you some sellers. All right. Now, this is called level 4. And by the way, I'm going to teach you all this stuff, because I'm going to invite you all into my room, my trading room, and you're going to see this, because what we use. So follow along. Right here on the right, these are all the orders out there of people trying to sell and buy NVIDIA. And what you're seeing here is price levels. And right here in the colors, those colors indicate big block orders. Okay. That's where the biggest orders are. So you're seeing here at 9:30 this morning, this is pre-market. Okay. This is pre-market. And when 9:30 opened up, you could see how all the orders show up. And the funny part is, like here at 7 a.m., see this order kicked in, that order came in, and then also got really bright. What happens, that's called program trading. A lot of orders can't kick into like 9:30. Now, if you notice here, what do you notice? There's a nice big red line here at 135. There's another one at 136, 37, 38, 39, and a really big one at 140. Okay. So when you're looking at the chart, let me bring up the chart here again. You're noticing that there's really no buyers. A lot of sellers are right around there. And when I move this line into 140, you could see clear as day, like, oh yeah, definitely there was a big resistance levels back here, because back in May, when it ran from 70 to 140, it came back down, and listen, and right around here, 140s, 145s, a lot of resistance levels right there. It never got it here yet, but you could see that if it does, it is a really big resistance. So history has a very funny way of repeating itself. So you're seeing all these orders out there that make these resistance levels. All right. Now, like I'm going to mention, like I said before, did I lose anybody? Did I lose anybody yet? Okay. All right. No, everybody's following along. Perfect. All right. Let's go do another one. Let me move this out of the way. What else I got here? Tesla. Let's look at Tesla. Okay. So Tesla, I'm going to zoom out here a little bit, and you're going to notice that You have some pretty big orders here at 350, 355, and 360. Oh, by the way, let me go back to NVIDIA again. I want to show you something I forgot. At 140, does anybody see here on the right-hand side? How many shares is that? Can everybody just chat that in? I want to see if everybody could just write that in. How many shares is that? 1.8 million. All right. 1.8 million times 140 equals about $250 million are looking to be sold there. So are you telling me you know more than $250 million someone's trying to sell? See what I'm saying? Follow the money. All right. Let's get back to where we were. And let's go back to Tesla. So you can see here in Tesla, big orders, 350, 355, 360. Let me bring up my chart over here. And let's look at Tesla. And when you look over here on a big long-term chart, you could see, let me draw my trend line here. And you could see clear as day. Look at this resistance levels here. Back on that day, resistance. Back on that day, resistance. Back on that day, resistance. Where are we right now? We're here, but that order is right there at 360. So when you look at the orders, oops, wrong one. There we go. Look where the biggest order is. You got a little bit at 350, 90,000, 140, but the real big order is not at 160, at 360. It's really at 355. Okay. So that's how you're seeing all these orders. And if I zoom out further in the future, I'm not really seeing anybody at 380, 390. I mean, but there's a lot of orders right now hovering it. And when you look at the chart, you'll notice that it's been having a very difficult time these last couple of days getting past this 350, 360. Never got to 360. And why is that? Because those orders are out there and they're preventing it. Now, before I go on to another stock, I want to ask everybody a question. Can that order get executed? Yes or no? Great. My next question people ask me is this. Do you think that order is real? Yes or no? You sure? You sure you think it's real? All right, good, because it is. And if you don't believe me, it's real. When I invite you all to my trading room after we do the Cyber Expo, I'll find $250 million out there, and we'll use your money and we'll execute it. And we'll see how real it is. Now, can somebody change their mind and cancel? Well, can't you cancel an order? It could happen. Absolutely. It could happen at any time. So yes, those are things that could happen in the market. All right. But remember, it's not one person. It's a lot of different people out there. So don't think that it's they're all in cahoots with each other. Let's just call that. All right. Let's bring up anyone have another stock? Anybody want to bring up another stock? We had a couple of winners that moved up today. EDBL was one big mover. I don't know if you guys saw this one. That was a nice little mover past 2 days. Stock was like $2, ran all the way to $6. These are stocks that we trade. Some of them in the day trade. ASST, that's a good one. Okay, let's bring up that one. ASST. Alex. Okay. So ASST, we've been trading that last couple of days. If you've been following us on our social media, I'll bring up, let me bring this up really quick right here. This has been our watch list right here. See this right here, ladies and gentlemen. So we share our watch list on Telegram. If anyone uses Telegram, if anybody uses YouTube, TikTok, X. So you could see that ASST was right there. Okay. Also, just to kind of let you know, we got some military stocks in there too. I'll check those out. But right now, finding them, like I said, is easy. The hard part is, are we too late? So let's go find out and see what the stock is doing. ASST. Let's bring up the data on that. All right. And let me just go back a little bit further, get some more pre-market volatility. Okay, so as you're looking at this stock right here, you notice right around a little bit, right when the market opened up, you see right here at 9:45. See this order right here? I'm going to zoom out a little bit further. See how this order showed up right around the 9:40? What happened when it came up to this big order? It was like 33,000 shares, $11. It came right back down, right? And then you could notice right here around 7:50, there's about 263,000 share buyer out there. Okay. So when he showed up, it started going up a little bit. So you could kind of see where the range is. And if it's a little, if you want to get a little bit more specific, you could zoom out and you could see the orders more clearly. You could see these lines out there. So the heat map just kind of tells you a little bit more where those orders are. So instead of like getting so focused on these numbers, you can go from there. All right. Now, for some of you guys that trade Bitcoin, it works on Bitcoin also. I don't know if you guys have been following Bitcoin, but if you want to know how many coins are out there, there's about 600 Bitcoins at 110,000. It's been a big resistance of Bitcoin. Today, it's been having a tough time getting past this 108. Bitcoin's been doing great, but you got to get through this 108,000 Bitcoins price range. You can see it's been out there when it was there at 3 o'clock this morning. It went from there. It came back down to 160, 106. And now it's going back. It's testing again. So not only does it work for that, it works for options, works for everything else. All right. Now, did I lose anybody? That's one of my questions I always ask everyone. Is everyone following along? Still here. All right. So think about this for a second. How much smarter and better trading decisions if you knew where the future orders are? Okay. So think about buying a house. Right? Don't you hate putting a bid in? Wouldn't you like to know where everyone else got their bids in? You don't want to underbid, but you also want to overpay for it. We always feel that way. Well, these are the things that you have to know when it comes to trading. All right. Now, let me see. So IBIT right here is moving up pretty well. So we're going to basically test new highs. All right. So I am going to tell everyone, I'm going to give everyone a couple of videos. I'm almost out of time here. I want to get everyone registered who wants to come and join the trading room. And also want to bring on our next guest that's going to be joining us. But if you guys ever watch me, make sure you follow me on social media. I do a lot of shorts on this stock. A lot of them went viral. Basically, the big thing that I just kind of teach, I'm not trying to change anyone's style. I'm just trying to show you where the money is. Okay. It just teach you how to have a game plan. You got a style that works. That's great. Don't worry about it. It's not going to change your style, just make you more alert. By the way, regarding about Bitcoin, it just went through 108,000. Just show you here on Bitcoin really quick. You see that big green ball right there? That is basically telling me that someone just bought that big order, right? Where's next stop? 109, but the big one is at 110. So Bitcoin is doing great. You don't have to trade Bitcoin, but I'm just trying to tell you it works on everything. All right. So before we take a quick little break and get everyone registered to come join my trading room after you finish your Cyber Expo the next 2 days, just let everybody know Cyber Trading University has been endorsed and sponsored by some of the biggest brokerage firms in the industry. Names that you probably heard of: Metastock, Schwab, TradeStation, Thinkorswim. So we have a very great reputation, not only with the brokerage firms, but we're probably the only school you'll ever find. It's got a 5-star rating on Google. Read the reviews. We're ranked #1 with ChatGTP. If you like AI, you want to learn a little bit more about them. They even rank this. Now, how that is, because we spend a lot of our time talking about, we do a lot of customer service. We care about our traders. We don't tell you what to buy. We teach you how to think for yourself. And that's usually our motto. It's all about having that game plan. All right. Now, to invite all of you guys to come and see all this, I want you to come to join my live trading floor. And basically in this trading floor, you're going to see the hundreds of traders that are in there every day from all over the world at all parts of the hours. We broadcast from 7:30 in the morning to about 4:30 in the afternoon. Whenever you're free, There's always something going on. All right. Now, for that, I'm only asking for a very small contribution of a $9 trial. The reason why we're charging $9 and not 900 or 2,000 is because we just want to make sure that you say who you are. You're a real person. All you need to do is take your phone, scan that QR code, or click on the link that we just posted up there. Let me tell you what you're going to get for the week of our ed trading. You're going to get access to all our instructors at Cyber Trading University. Josh, Rich, me, John, all of us. We broadcast live audio all day long. You get to meet all the traders that are in our room. You're going to get to see that these people were just like you. By the way, it's never too late to learn, okay? But they are here because they want you to learn how to trade. And if you're a good trader and you're committed, listen, it's a team effort. So to have access to our trading floor, like I said, you're also going to get all our watch lists, our alert service. You're also going to get some videos. You're going to get access to VIP access to our podcast of some of the best well-known traders in the industry. You also, and it's all for one whole week, okay? And by the way, we're not going to charge you any more or less after the week is over, okay? We don't do that. You're not going to get caught into a subscription. We don't do that. If you don't want to continue with Cyber Trading University, you don't have to. But we want to practice what we preach, and we want to show you how we do it. Okay. Once again, all for $9. All these great things, and at the end of the week, if you feel we wasted your time, we'll give you $100 back. Listen, we don't need your $100. We don't need your $9. All right. So money back guarantee. One last thing I'm going to offer to all of you, because some people are going to ask me what's going to happen at the end of the week. Well, if you register right now, I will personally give you a free coaching class. So the thing is this, some of you are going to find out that trading's not for you, and that's a good thing. Some of you really want to do it, and you probably have a lot of great questions you want to ask that you couldn't really ask in the trading room, or maybe feel a little uncomfortable to ask. That's okay. I'll be the perfect person to answer it. All you need to do is when you register, I will personally talk to you for that. All right. So that's all taken care of. And in the meantime, we're going to get Melissa on here. We're going to give you about 5 minutes before she can get in. So to get you guys registered. So once again, in the meantime, we'll be right back. There's the link. And we're going to get Melissa on here, and she'll be able to teach you also. And what's great about Melissa too, that you're going to learn, she trades a lot like me, another New Yorker like me. And you're going to see how we have a very similar style of trading. So, but let me give you that chance to register for her before you get back. All right, guys, I'll be right back in 5 minutes. Don't go anywhere. All right, traders, we're going to get started about another minute here. So thanks for everyone registering, and we're going to get Melissa on here now in about a second. I see her logged in, which is awesome, which is perfect. All right, good. And as we're waiting for her to share, let me just do a quick little intro about Melissa. All right. So anyway, I'm really excited to have her today. Just a quick little intro about her, tell you about her. I know in her trading world for a while, Melissa Armo, she's got an amazing energy. Wait till you hear a little bit about her. She knows what she's talking about, and she's helped a ton of people learn how to trade the right way. I invited her here today because she has a totally different way of looking at the stock market that I think you guys are going to really enjoy. Melissa's been the founder of Swoosh, a company that teaches people how to trade using a strategy she created calling golden gaps. It's helped find big movers in the market by following where the big money is going, which is similar to what I do. And that's why I like to have her here today. And she's also been, on a ton of shows. She has her own show. She calls it Making a Million with Melissa. She's also been featured on Fox News, CBS, Newsmax, other major networks in the stock markets for experts. So let's give her a nice, great, warm welcome for Melissa Armo. Melissa, are you there?
I'm here. Can you hear me?
Oh, perfect. Great. All right, so Melissa, you could share your screen, and thanks for being here, and the stage is all yours.
Let me know if you can see the screen. Can you see it?
No. Let me stop and share it so you can get control. There you go. Yep, we can see it.
Perfect. Welcome. Thanks so much, Fausto. And yes, I'm in New York City, and we're having rain today and rain tomorrow and rain Friday, and I'm tired of the rain. So if you live in the Northeast, we've had more rain in the month of May than April. So I don't know what's going on with this weather. We certainly need it in Central Park to make everything green, but I'm hoping we get a beautiful, sunny Memorial Day weekend. So looking forward to trading this summer. Summer really is a great time to trade the strategy that I trade, which is based on gaps, because I'm looking for fast moves, morning moves in stocks. I like to get in and out very quickly. And I do options as well. And we'll talk about a few options I've done recently in here today. But for the options trades, I'm really not, babysitting them all the time. I put the trade on, I let the trade play out. I'm doing the weekly option. So I will check it, but it's not like I'm sitting at my desk all day between 9:30 and 4 and trading. So it's a nice career if you can learn a system where you can consistently make money in the market. It's a nice career to have all year, I think, but particularly in the summer, because no one wants to be outside when the weather is beautiful and sunny and you can go to the beach and do other things. So today I'm going to talk to you about learning how to short on the side of institutional money and gaps. I trade gaps. And again, if you have questions, you can plop them in the room as we go along. As Fausto said, I appear on TV on every major network. I've been talking a lot this year in 2025 about tariffs. We're going to probably hear a lot of talk about tariffs in the next month or so. I'd say towards the third, fourth week of June, end of June, beginning of July, we could have a lot more volatility coming our way in 2025 because, of course, the pause on the tariffs was put for 90 days out, and that's going to come up in about another month or so. So I think that it's going to be an interesting year to trade. If you've already traded so far this year, you know that. If you have questions, you can always email me after today at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. If I don't answer the phone, I will call you back. I'm a real person. Again, I live in New York City in Manhattan. So I try to get back to people in 24 to 48 hours. So let's talk about trading. Again, it's the official start of summer for Memorial Day this weekend. In fact, Fleet Week starts in Manhattan today. It's launching today. All these naval ships come into New York. It's really neat to see them. You can go tour them, and it lasts a week into Memorial Day. So again, like I was saying, summer is a great time to trade the stock market, specifically trading gaps and fast trades. Now, I like to short. I will go long, but I prefer to short. And one of the reasons I prefer to short is because stocks sell off faster, then they rally. And again, if you can trade in the morning, make a couple $1,000s in the morning, be done by 10 o'clock, 10:15, you can have the rest of the day to yourself, which of course, you know, like I said, is good at any time of the year, but especially in the summer. You know, I've been, you know, teaching people for about 14 years. I've been trading now for 17. And, you know, when I decided to do this, I wanted to do it because I wanted a different career. I wanted a different job. You have to find a way to move into trading as a career and make the money that you want to make before quitting your full-time job if you're working full-time now. I have people with me that are retired, making extra money on the side. Some are working part-time, some have their own businesses, some are doing this full-time. You have to make it happen for yourself. If you want to do this, you have to find a way to figure it out and do it. And again, I think when people start to trade, and I was in this camp, you know, I thought I was going to make all this money really quickly, like the first 30 days, and it didn't happen. And then I felt discouraged. And then somewhere along the way, in the first 6 months, I realized it was going to take more work for me than I thought to get where I needed to be. And you might be trading for years and have lost money in the market or paid for classes and not gotten anything out of the classes, and then lost money taking the trades from the classes that you took. The reality is, don't give up. Don't give up. You can make it. It's the path is different for everyone, you know, but no one is born or starts to trade or takes their very first trade and then all of a sudden makes money and never looks back and knows how to do it. That's just not reality. It's not realistic. So you kind of have to make a decision that you want to do this and then take actionable steps to make it happen for you. You know, whether you want to trade full-time or part-time, like I said, it doesn't matter. Even if you're only going to trade for half an hour a day, you need a strategy and a system that has more winners than losers, or it's going to be very difficult for you to be profitable and continue doing this. And again, there's nothing like making money to motivate you to keep going. You know, everybody makes money when they take a trade, if it's a bad trade or a good trade, but is it a good trade? When I say good trade, is it a trade that actually you could replicate over and over that you could use? So even people that have bad strategies and know what they're doing make money in some trades. It doesn't mean it was a good trade. A good trade to me is something that you can do. You could say, okay, I did this today. I can do this tomorrow and the next day and the next day. I can do it under any market conditions, whether the market's bullish, bearish, whether we have tariffs. I can replicate this particular set, strategy, and system for the next umpteen years. That's really what you need to find and do, because things change. Things change. We've already seen things change tremendously since the election of 2024, since November. Again, we're pretty much at the six-month mark since the election. Hard to believe, but a hell of a lot has happened since then, particularly in stocks, if you own individual stocks, and also the market. So anyways, like I was saying, you need the right tools to be successful, and you need the right tools to get good results. So I developed a rating system. It's a method. This is the tool that I use every single solitary day to make a decision if I want to take a trade. So I go through a checklist. It's a 26-point checklist. I rate it. I rate the gap. And I'm going to go over what a gap is in a minute. If the rating system tells me if it gets a 20-point or more rating, then I take the gap in the direction of the gap. Okay, so I'm never ever going long a bearish gap, and I'm never shorting a bullish gap. So I'm always looking to do the rating in the direction of the gap. Okay, and again, 20 is my cutoff. So this is a very useful tool. Instead of saying, well, you know, this thing's happening and that's thing. Actually, I'm going to talk about UNH. UNH is a good example where if you're trying to trade the news, you're all over the place. Same thing with the QQQs and the SPY with tariffs right now, or even the last month. Like on UNH today, there was the stock gap down today. There was negative news that came out. There was positive news that came out. What do you do? Again, sometimes a story or an article that comes out or something somebody published is done by a company's PR firm. Again, I appear on television. PR firms put out information to try to help the companies. So how do you know whether or not to believe it? And all of these things, a lot of times, are based on opinion. When I make a decision, when I do the rating system, I'm looking at the technical analysis, I'm looking at the price in the stock chart, okay, which we can all pull up the same price at the same quotes. We get the same quotes, we get live data feed, and I'm looking at it and making a determination based on technical analysis. Now, what is technical analysis? Technical analysis is looking at past price data, to predict future price data. That's something that you could do. And again, that's something that's real, and we can see the price of things that happened yesterday, last week, last month, and then live time right now today. And actually, here's the UNH. Actually, so this was a chart from yesterday. One of the biggest option shorts we did in the last week was UNH. This was, again, a gap. So let's talk about what is a gap. So when a stock gaps, the closing price at 4 o'clock, whatever the stock is closing at 4 o'clock, again, could be a market ETF, could be the stock. When it opens the next day at 9:30, it opens at a different price. So this was an example of a bearish gap. Again, you also have bullish gaps. I did not play this long, but UNH also had a bullish gap here where it closed at one price at 4 o'clock, opened at a different price at 9:30. In this case, it opened up. In this case, it opened down. So this is a bearish gap. This is a bullish gap. Anyways, long story short, we did this gap here. Okay, this was the first one that we did. This was 513. So it feels like a long time ago actually now, but today's only 21st. But this was the first gap that we did. Again, if you like to read fundamentals, if reading the news, if whatever, if that helps you get conviction to do the trade, fine. I have no problem with that. And sometimes maybe it will. But if the news is the opposite of what's happening in the chart or the rating system, then you got to ignore it. And again, it's very hard for a lot of people to do that. So I called the 340 puts that expired the 16th. This was tight because I called this trade on the Tuesday, expired on the Friday, the 13th, and it was a great trade. So I call trades a lot of times in the morning before the open. Sometimes I call them on the day, but you would not take this before the open. You can't. You would take it after the open. This was a really nice trade. And again, I'll go back to the chart and show you what happened in a minute. So we were in the 340 puts, okay? So again, cost was $14, which is kind of pricey, but again, I'm going to show beginner risk in a minute. If I did 7 contracts, risk was 9,800. I've been trading, like I said, for a long time. Sold at 80. That was not the high of the options chain, just so you know. I think the high was like we're 90. It didn't quite get to 100, but it was just unbelievable where this went. Profit was 46,200, and it was a 471% return on investment. What if you did 1? Oh shoot, I didn't put the beginner in here. I put sorry about that. If you did 1, it cost you 1,400. Sorry about that. I thought I put the beginner in here. If you did 1, it cost you 1,400 and you could have made $6,600. So again, this was a good trade no matter how you sliced it. So we did it here. So I took it, bought it. So I bought the put and then I sold it to exit it. So what am I doing when I'm doing options? I'm trading the gap and I'm trading momentum. Okay. Again, this trade was up actually into the close here, but because it was so expensive, I stayed with it and I did think it was lower. And then it went a little bit here, and then here's the day you want to exit the trade. So again, this did another gap here, closed here, gap down, open, dropped, went all the way down to 250. So this was almost 100 points through the strike. Okay. These are the types of trades that can take a small account and make it a big account very, very quickly. Or again, if you have a big account, it can really help to grow your account. We don't get these trades every day, but we do get them. And so again, this is a great chart because it's a really, really good example of what institutional selling is selling, okay? Because it got dumped from the day that this opened, the very first day, this was closed here. Again, snug as a bug. We weren't in it yet here. It was around 370 and change. Gap down here, actually opened under 340. You could have done a lower strike if you didn't want to pay the $14. And then crashed. Boom, boom, boom. So again, this is momentum. So again, I trade gaps because I'm trying to find momentum because that's how you can make money in the market. It's very, very difficult to make hundreds of thousands of dollars a year if you're trying to scalp for 5 cents, 10 cents, 25 cents. You're gonna have to take a whopper of a size to do it. It's too much risk for too much size, in my opinion. So every stock we trade, we're trading stocks again that you know of, that you've heard of. I'm sure everyone has heard of UNH. So any questions here so far? How are we doing? Okay, so why do I like to short? As I was starting to say, UNH is a great example. It's panic, okay? So panic comes in and it's like that. Again, it's like a car crash. It happens sometimes like that. It's an emergency. What happened? Again, it's panic. It's selling. when people panic, like when we saw the sell-off actually in the market, when Trump put the tariffs on, we had that massive sell-off. That was the end of March and the beginning of April. People panicked, okay? People are panicking in the UNH. And then you saw selling. So I'm shorting then and taking advantage of that panic. So one of the reasons why I prefer to short is, again, short moves happen quickly. Panic comes in fast. It's not to say that there isn't something called panic buying. Sometimes you get panic buying, but panic buying is very, 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 very rare and almost never happens. Actually, let me see if I can pull this up here. Can you see the SPY here without me moving it back and forth? Can you see my SPY chart? This is the day of the pause day, 4/9. I don't know if anybody remembers this. This, you can't even tell unless you watched this here. Like you're like, oh, that's a green bar or whatever. No, this actually on the day that the pause happened with Trump, everyone was screaming on TV, oh my God, we're the biggest rally of our lives. This, you can't even tell unless you watched it that the day didn't really transpire the way that the bar looks. So we actually gapped down on the day to start the day. And then it was doing this. The market only had this whole move at 115. Again, you cannot tell that there looking at the daily chart, but it literally was like Trump came out with the news. It made the spike. It happened in every chart. I could look at 1,000 things. From 115 then until 4 when the market closed, you did have what could be, described, because I'm just trying to give you an example, panic buying. That's very rare. Very, 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 very rare. Almost never happens. May never happen in the market again the rest of the year. But you did have that. Okay, when he dumped the news and tweeted or whatever he did. So this, you can't really tell it because it wasn't like the market opened and went do like a lovely rally. It was like nothing here. Could have fallen off a cliff again, and probably would have, except for at 115, then Trump did the tweet or whatever and paused tariffs, and then it had to move. So that kind of was like panic buying, really. Again, you look at the size of the length of the bar from tip to tail, it was an unusual bar for the market because the market doesn't move $50 usually in one day. So that's an example of panic buying, okay? Anyways, most of the time, though, you have panic selling, just so you know. And that's more prevalent. That's something that you can find almost every single day. And that's what I really, like to trade and look for. And again, if you're following the smart money, I call it institutional money. It's whatever you want to call it, professional money. That's the intelligent choice. And in my opinion, in trading, like I said, for 17 years, in fact, it's the only path that will ever lead you to success. While there is lots and lots of chat rooms and lots of meme stocks that are out there and they've popped up in the last 5 to 6 years, the reality is that sometimes you can have a group of traders, retail traders, that can take hold of a stock and move it temporarily. Could be for one day, could be for an hour, could be for 5 minutes, that's it. But for the most of the life of the market, if you want to be successful, and I'm talking about year over year, month over month, week over week, you have to look for what institutional money is doing. That's how you're going to be more consistent with your trades and your wins. Like I said earlier, anybody, anywhere, a bum on the street can take a trade and make money. It doesn't mean he's going to make money consistently. So you can take bad trades and make money. And that's really honestly the worst thing that can happen to anybody, because if people take a bad trade and they make money in it, then they have in their head that they associate a positive thinking with it, that they think that it works. But it doesn't work if it's not something that you can use all the time. Again, longevity is extremely important in this industry. And I realized that early on, when I first started trading in 2008, that I had to find something that had a high odds of working. Nothing's 100%. And anyone that tells you that is just, don't believe them. It's not true. I'm a very good trader and I take trades that lose, but I have more winners than losers. And that's how you move forward and can keep doing it. So, you have to say, okay, let me look at the odds. Like going back to the UNH, like what were the odds that this could have rallied? Not high. That's how I looked at this. So I rated it, followed the system. Again, I have a very useful tool to rate the gap. I said, this is high odds to drop, not high odds to rally. Okay. So I shorted it. I did the put, and we did a day trade too. Okay. Again, that's how you have to look at it. So you have to weigh the odds because there's no 100%. Okay. So again, how do I determine what the smart money is doing? I use my tools. Again, this is a rating system that I invented, but it's based on technical analysis in the gaps. Like I said, sometimes the news will match up with it. And if that helps you, fine. But you should not be taking trades for that reason of the news. Again, because it could trip you up. It could trip you up. Again, all before I remember being on TV and someone was telling people to buy the dip back here in February, and then we crashed. And then I'm sure that hurt a lot of people and took out a lot of people and probably wiped out some people. Again, while the pause that Trump had was not something that anyone could have predicted, and there's things that happen that are unpredictable in the market, the reality is that if you're trying to trade and watch the news and make trades based on that, you're all over the place with this market because we're in an administration that's very active. Trump likes to tweet a lot. And again, Scott Bessent's on TV trying to calm people down. Where the market goes from here, I really don't know. Because if we were going to make new highs, I think we should have done it by now. Could the market still set off? Yes. Could we go up and make new highs? Yes. Right now, it's getting into a holiday week. I'm not sure the market's really going to go anywhere until June. So be very careful if you're in trades looking for the market. I know people love to trade futures. I don't trade futures. Again, one of the reasons I don't trade futures is because I don't think you have enough picks to do. Because you can't trade the market every day and expect to make money. The market doesn't have a good gap every day. Today is a big fat nothing burger, to be honest with you, in the market when I look at the gap. So again, I look for specific stocks because I think there's more picks if I'm trading stocks. Whether I'm doing an option or day trading, I'm going to get more moves, more picks, more trades than just doing the overall market. Here was Apple. We did a put in this. I'm actually going to put in this now. And we did a couple of day trades in this too. So what happened in this recently, stock closed here, gap down, open, dropped, boom, fell. So this was the 19th, this was Monday. So again, what is a gap? A gap could be bullish, could be bearish, but this was an example of a bearish gap because the stock closed here on Friday and opened lower on Monday, fell. Okay. And we shorted it. We did that trade. On Monday, we did it. On Tuesday, we did it. So let's talk about, again, being a professional trader. I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. That's how I know what to do. So again, I'm trading on the side of institutional money for the momentum moves. Big momentum can equal big money. All of the stocks that I trade are stocks you've heard of, companies you've heard of. You know them. They all have volume. Again, this particular one, UNH, while it's been in the news, anytime that you trade it, it has volume. Again, this has been on top for lots of reasons. Part of it's the DOJ investigation, the Medicare fraud, the man that was killed, remember, in New York, that happened last year. I mean, this has been really, has had a lot of problems. It's going to continue to have a lot of problems. And again, it's something that we've been watching and watching and watching, because when you have momentum, that is how you can make money, whether you take 100 shares or one contract, or take 1,000 shares or 10,000 shares of something. And again, this is a fun stock to trade, to be honest with you, because it can move 50 points in a day or a week, or 30 points. It can move. It's a big mover. Okay. Now here was the trade that we did on the 15th, actually. Stock closed here, gap down. So this is a 1 minute. So I rated it on the daily and I said, this is a high odds it's going to sell off again. So we didn't. Entry was 275.10. Again, this is a margin trade. So I run a live trading room every day. You have to be able to short the trade on margin, or you could have bought the put. We were already in the puts. Anyways, entry was 275.10, dropped, boom. Exit was 270.20. This was a really, 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 really nice trade. Again, I want to show you that it kept going. This came all the way down here. I could have held this all the way down to 2. I could have held this for 20 more points on the day I did it, the day trade. Again, I was ready in the put. So I think it's easier to hold options. There's not much wiggles and jiggles than it is to hold day trades. And again, when I say day trade, I'm shorting it on margin, have to have a margin account, or you can open up a prop account, and I have to be in and out of it before 4 o'clock, between 9:30 and 4. So I got out of it quick, boom, done, out. But I want to show you here, this kept going. And again, the put paid. The put paid. Now, again, you could have done 100 shares, could have done 1,000 shares, you could have done more than 2,000, okay? But like I said, how did I determine that UNH was going to fall? Did I know anything about the DOJ investigation? No, I did not. I knew nothing about it. Not that it would have had any effect on my choice to take the trade. I used the tool of the rating system that I developed each morning to determine what stock to trade and when. It is a very useful tool in any market, but particularly in this type of market, it also can help you decide if you should exit a long. It's a very useful tool. It takes the guesswork out of your trading, okay? Because again, you could be questioning yourself all the time if you're guessing. And so it's really difficult if you're in and out trying to decide, do you have conviction? Do you not have conviction? It's so hard for people sometimes to try to just, put their really money on the line and say, I believe in this come hell or high water, even if it moves against me first, I'm going to stay with it. That's why I ended up developing the rating system, because I'm like, okay, if it rates 22 points or whatever, then that's how I go at it. And then I let it ride. I put the stop in for my day trades. I take the risk for the option, and I will hold a trade into the last day if it never goes right, to give it a chance even in the last day if I'm in it. Again, I was talking about this earlier about news and also fundamentals. It's very similar. Again, the Fed is going to talk again in June. They've been having different people have been speaking even this week. If you're trying to predict what the Fed's going to do, again, we're not psychics. You're not going to be able to do that. And even if you could, you wouldn't be able to predict how the market's going to react. Some people are saying we're in a recession. Some people are saying we're going to go into a recession. Some people say there's no chance we're going to go into recession. The economy is too strong. But again, what does that have to do with your positions? You have to make the trading choices based on looking at the price action in the chart. And then if something happens after the fact when you're in the trade to help you, great. Because again, trying to predict the reactions or what people are going to do with the Fed is impossible. It's just, again, whether it's fundamentals, whether it's news, whether it's the Fed, don't. And I'm sure there's a lot of people that do trade like that are still trading like that, and that are back and forth with this whole year. Again, right now they're trying to pass the spending bill, and they say now it's not going to pass the vote today. But again, will it, won't it? How will the market react? You have to look at what you're doing and say, I want to do something that doesn't have anything to do with this, so that I'm not affected by it, because it could affect you negatively, is the point. And it can get in your head. Any questions here so far? We doing good? Okay. Next thing is AMAT. This was another bearish gap. Stock closed here, gap down, open, dropped. This was actually earnings. This was Friday the 16th. So stock closed up here around 175, gap down here around 169, open, fell. Again, a nice flush. Again, nice selling came into this. So again, there's gaps almost every day. We're still at the tail end of earnings season. We have some things. I didn't look what's Thursday and Friday. We have some things this week. I do gaps for earnings. I do gaps for, could be the news gap, could be a sector gap, could be a gap with the market. Again, the news could cause the gap, but I'm not taking it because of that. I'm rating it based on the price action in the chart. Because again, the news could cause the gap, but that's not why I'm going to take it. Okay. And then also, how would you be able to know the direction based on that? You can't look at that, because lots of times, actually, when I'm doing earnings, you could have a good earnings, you could have a fabulous earnings, and the stock tanks, gaps down, and falls off a cliff. So it's not even like you could even say that. You're saying, oh, it's good earnings, it's going to rally. No, it could tank. Okay. And lots of times people want to buy gaps for gap fills, and that does not have any consistency either. So why sometimes something will work where you could say, oh, it filled the gap. It doesn't consistently work as a way to make money. Okay. Do I use a VIX? No, but again, if that helps you, it's fine. I can see the volatility in the stocks I trade and the market. I mean, today, since we're talking about this, we may as well talk about this. This morning, this was insane. So I don't need to look at the VIX to see anything with the market, to see what's going on in this thing. Again, this gap down this morning, I'm in UNH's gap down today. Then again, like I said, the spokesperson came out and said, oh, we're really not being investigated by the DOJ. And then this had a huge fat megalodon bar up. And then it gapped down anyways and continued to sell off. Then another report came out that said, oh no, this thing, that thing they're paying people, whatever. Again, you can't even follow it all. So don't even worry about it. You're rating the gap and making the decision. But again, I can watch a stock or pretend this was the market here in the morning. I can see it. I can see it. I can just see that I'm looking at the candlesticks. Again, one is technical analysis, looking at past price data to predict future price data, which you could do it here. You could do it on the daily. You could do it in the 1 minute. You can do it on any time frame. Okay. Like you got to get good at chart reading. You know, if you really want to delve into it over the holiday weekend, if you're bored, you know, you can get a book on just a flat, regular book on candlesticks and technical analysis, just to get the basics. Again, you see my charts. I don't want to get too far off here. My charts are very clean, very clean. I don't have any mumbo jumbo on here. The cleaner the chart, I can see what's happening really in the price. Like, again, I could trade and read the tape. Like, I could just read the numbers and see what's happening. Yesterday's close, today's open, see where we're at today now. That's something that not a lot of people could do and make trading decisions. But back in the day, that is how people traded before we had live chart data or instantaneous, you know, data like this. That is how people made decisions before we had this type of environment. So again, that's like not relying on any indicators at all. And that's kind of where you need to be. You know what I mean? And then you can really get good at reading price, whether it's panic buying or panic selling. So again, you must become an expert. Like, so I've become an expert in reading gaps. I've become an expert in shorting and fast trade specifically. In order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Reading this is a skill. The skill can be acquired through education. And so education is very important. When people start to trade, if they take a class and they lose money, then they kind of get down on classes. And then if they start to take various classes, they even get down on it more. You might go through 100 classes till you find a system and a strategy and a mentor that you connect with. That's, again, it's the luck of the draw. You may, just because you find one thing that doesn't work doesn't mean nothing works. It's just going through the process of getting to the right people, which sometimes takes time. And it takes trusting yourself, knowing yourself. You know, like, again, anything you do, like I live in New York, there's a million different hairdressers in New York. There's probably more bad ones than good ones, just like trading educational places. But you take a chance. It's like either I cut my own hair or I go to somebody till I find somebody good. Actually, I had a hairdresser that was in New York for a long time. Then COVID hit, he left, he went out to Westchester. Well, I'm not driving to Westchester to get my hair done. So it literally, I'm not even making this up, took me until just like March that I found a good hairdresser. Like, so it was like 10 years. Like the guy left like 2018 or 2019, like almost 10 years, like seven years, like to find the person that I found now. And the only reason I even found him was because I went to so many different people and they had a horrible haircut at the beginning of March. I said, I have to find somebody to fix this. And I found this guy and he was really great and I loved him. But since 2018, I've been trying to find a good hairdresser, paying a ridiculous amounts of money to go to places in New York. You wouldn't even believe if I told you what I paid for a haircut here. And it's like, I didn't stop trying to find somebody good. And then like I did. So that's like trading. That's like trading systems. That's like trading mentors. That's like trading classes. You got to keep going after it till you find somebody good, till you find a good system, till you find somebody that you connect with that's a mentor. You don't want to give up. I mean, the other choice is giving up. You know, like I said, I could have cut my own hair. So it's anything in life, anything that you're trying to do where you have to hire someone for help, whether you're paying them for service, like to paint your apartment or do lawn work, anything, you're going to find good ones and you're going to find bad ones. That's just part of life. Anyways, trading education is very important. Far too often traders don't understand exactly how important it is, but it is important. And especially in this type of market, it is okay to ask for help though. And it's okay to say, I don't know. I don't understand what you're talking about. I don't know what you mean. It's okay to say, you know, you're losing money. You feel really down. It's okay. It's okay to admit all those things. It's okay to admit what you're doing is not working. In fact, I'd rather hear someone say what I'm doing isn't working. And so sometimes I talk to people and they try to tell me that what they're doing is working. And I'm thinking, okay, what you're doing is not working, or you wouldn't be talking to me. Don't lie. Like, just look in the mirror and say, this stinks. Got to do something else. I can't go on like this anymore. Because that's really where you got to get to that point where then you're like, something shifts. And you say, I'm going to do something different. I'm going to learn something different. I'm going to spend the money and learn a whole new system. I'm going to stop doing this thing that hasn't worked for the last umpteen years or months or weeks. I'm going to stop losing. Because if you continue the same actions and you're losing, you will keep losing. And you're just going to dig yourself a deeper and deeper and deeper hole. You know, so you can change is my point. And it's okay to say, you know, that you're not doing good. It doesn't mean it's anything to do, particularly with you. It just means the system that you're using doesn't work. And the sooner you come to terms with reality, if you're losing money, that you don't know what you're doing, that you need help, and then that you need a mentor, you need a new system, both probably, the faster you can turn it around, and then you can turn it around and turn it around quickly. You know what I mean? So that's the best thing to do. James is agreeing. Yeah, he's been trying to train since 2008. Well, that's a long time too. That's a long time too. So again, what if I get up in the morning and I don't see any gaps? Well, then I don't do anything that day. Like, again, it's getting into a holiday. I don't know. Friday might be dead. I don't know what Friday morning is, but Friday could be dead. Day before the holiday, a lot of people go on vacation from Memorial Day weekend, take time off the long weekend. But if I find something, I'm going to get up in the morning early and read it. Could be 6 a.m., could be 7 o'clock in the morning. Again, this ended up gapping down today. I showed you, it was very early. Here was the trade we did on the 13th. Again, this is so crazy looking at this now compared to where the stock is today. This was less than 10 days ago. Stock closed here, gapped down, and we shorted it. This was a day trade. 336.95, boom, dropped 327.55. This was a good trade. Again, this kept going. Okay, I did not hold this all the way down, very similar to the 515 trade, but I did stay with the option. I was in the option. Remember, this is the one I said I called the 540s. You could have done like a lower strike here. You definitely could have done a lower strike. But anyways, I did this trade, got in, got out, got the drop done, boom. It came all the way down in here. I could have held it like for another, you know, at least $7, but I was already out. Again, day trades, I like to be out fast. Options, I will give a little more time, wiggle and jiggle. It doesn't mean I won't get out the day I do it if it has a big move. You know, you have to weigh that with the cost of it. Coach is asking me about the cost of this position. Let's be exact. So when I'm saying I'm day trading, I'm taking trades on margin. I said that earlier, you have to have a margin account. The exact cost of this position with 800 shares was buying power. That's not cash. So let's talk about it. 269,560. That doesn't mean you needed that much cash, Coach. Do you understand that? So when I'm saying margin, that means you have a margin account at a broker. Say, for example, you have a margin account at Schwab. I talk on Schwab's TV channel. You would have needed $67,390 in an account, for example, at Schwab to take this position. If you didn't have that, you could have bought the put. I did the put. I showed you the put. The put cost $14 for one. So obviously the put was less expensive. I did both. But do not confuse buying power with cash, okay? Because you didn't need 269,000 and change cash to take this. Let me know you understand that, Coach. Now, there are prop places out there that give you 10-to-1 margin. I don't trade at a place like that. I trade at a retail firm. But if you have a retail account that gives you 10-to-1, then you could have done this with like 26,000 and change. Okay. And actually made, 30% of your money. Could have made $7,500. You were at a prop account with this on 10-to-1 margin. So again, I don't want to get too off topic here. We got to keep going. But the reality is that every single type of person here, if you're going to trade on margin, you should know what it is. If you're trading at all, you should understand margin and the difference between margin and buying power. And if I'm in and out of a trade in 5 minutes, 10 minutes, 15 minutes, that does not mean that the entire amount of the margin that I'm borrowing is at risk. Do you understand that? How many stocks do I scan in the morning? I don't scan thousands. If I'm scanning more than 100 stocks, there's nothing to do, probably. Like, if I have to scan for like longer than an hour, it's like a nothing burger day, basically. Anyways, I think I only have 10 more minutes here, so I might have to skip through some of this. But again, how can you become successful trading? Number one, you need a winning strategy, learn first. Number two, you need a supportive mentor, do and follow. I offer that for people. And then number three, become an expert in one thing, implement a winning mindset, trade daily with conviction and confidence. So it's extremely, extremely important to be confident in what you do. Am I confident in what I do? Yes. Why? I invented the system myself. So I know it better than anybody. That's number one. Number two, I'm running a trading room every day, talking to people live and trading myself. But you have to be a confident person to do that. And I also appear on national TV. You have to be a confident person to do that. So I'm a confident person. If you're not that confident of a person, you definitely need a mentor. You need someone like me to say, this is good. This is fabulous. This is so, 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 so good. This rates really good people. And then I call it and you do it. Like, if you're not a person that has a lot of confidence, you need to gain the confidence by following a confident person like me, so that you're like, oh my God, I don't know if I should do this. This is down a lot. It's very expensive. Doo-ba-doo. Again, following a mentor that has a lot of confidence can really help you put the risk on. And I don't care if you're risking $500. It's $500 you could lose. So you need to feel like, and again, I say the word 100% conviction, you need to feel like it's going to work. Like, every trade I take, I feel like it's going to work. I never take a trade and think it's not going to work. And I certainly don't feel like 50-50 crapshoot is good odds. Again, we already started talking about this, so I'm kind of skip through this. We talked about what a gap is. I'm looking for who's in control. Again, direction is key, because if you get the direction wrong, you're going to lose. If you get the direction right, you're going to win. And again, what will you learn from me? You're going to learn the 26 points. But 20 is a cutoff. I don't need 26. I don't need a perfect score. But this rating system is such a useful tool, because then I don't have to worry necessarily about the news. So again, the checklist tells you what to look for in the trade every day. This was the Apple one we did last Thursday. Last Thursday here, I entered this trade. This is a nice trade. Thursday, Friday, Monday, boom. I did the put here, got out yesterday, boom. And again, if you don't want to trade on margin, you could still be in this, actually. We did the 210 puts, 280 I paid, sold at 6. It's a good trade. 114%, bing, bam, boom. I call right now, chunk it out. The market is in a tight range. Take a trade, book it. Take it, chunk it out. That's how you build up your account. And I don't care if you have a small account or a big account. You want to book money in trades. You don't, not holding them forever, Again, if you risked 1120, here's a beginner risk for this. You could have made 1280. Again, that's taking it Thursday. This is the put, getting out of it on Monday. But everything I'm looking for institutional money. Every time I take a trade, I'm trying to determine, is the institutional money buying a stock or are they selling a stock? Okay. And again, the benefit is that you can win big trading with this side of power, because institutions move stocks, hedge funds move stocks, big professional traders move stocks. And again, it's not like I'm living, and working down in Wall Street. I live in New York, but no one really hardly is down in Wall Street anymore. You don't have to be on the floor at the stock exchange to trade. You could be anywhere in the world and trade, and you could be anywhere in the world and make money. And there are so many actually funds that moved their offices even out of New York City down to Florida when COVID hit. So, I mean, you can see these moves. You can see things that are happening in the charts. You can see them in stocks. You can see them in the market. And again, you have to have live data. You have to have live data feed. You have to have good charts. So number one, you need a good strategy. Number two, you need a supportive mentor. I try to do the best to help people when they have questions. Again, I'm not going to abandon you after the class. I'm here. And if you're in the live room with me, you can ask questions every day. But the reason I like apps is because they have big moves. Again, I'm taking what I consider an advanced trader size because I've been trading for a while. But again, you can take smaller size to use my system. You can open up an options account with $2,000. You know, I wouldn't risk more than $200 a trade if you're doing that. So it's like I've shown you the UNH because it's been on the news. It's been such a highly rated one. It was gapped down this morning, but there are many things we do that cost like the Apple $2, $3, a buck. We did one that was 80 cents the other week. So, I mean, there's not like everything we do is $14, and that I would consider that actually kind of expensive right now. I do options in the market. I'm in nothing with the market right now because I think it's crap. I think it's crap. My take on the market is that I still think we're lower. I'm not basing this on my system with the points. We gapped down today. I did not short the market. I'm not in any trades. Don't short the market today based on what I'm saying. I'm telling you with experience and knowledge and everything I know, I think the market's still lower, but I'm not in any trades right now because it may not sell off like a hot cake till, September 15th at this point. 100% conviction and no chance of failure. The market would have continued selling off if Trump had not paused tariffs. So again, someone talked him into doing that. He did it. And now every time Scott Besson, who's great, he's fabulous. He's like, couldn't be more fabulous. When he goes on TV and talks, the market just says, oh, everything's fine. Now, the one issue is that neither Trump nor Scott Besson can control the Fed. So if the Fed does something or says something, and they can't control the bond market either, then that could affect markets. Or if everything falls apart in the next month when the tariff pause is over, that could happen too. And there's also all kinds of wars going on overseas. So I'm not long the market right now, and I'm not short the market right now. I'm in nothing to do with the market right now, either way at all. So I do play the market, but I'm not right now because I think it's a waste. We're really not moving up and we're really not selling off. Anyways, the rating system helps me determine who's in control. And again, it's about the bulls or the bears. I'm looking for institutional money. Are they buying the stock? Are they selling the stock? And I'm trying to find a trade every day that I can, trying to find a good one, looking for the quality. People come into my room every day and they want to see my picks and they follow the trades. And then they, base that off of that. Someone's asking about NVIDIA. I would do nothing with that right now. Earnings on NVIDIA, I think, are next week. So any option in that into next Friday is going to be crazy expensive into the earnings. That's number one. Number two, we're going into a 3-day weekend. NVIDIA will go with the market today, tomorrow, and Friday. And I would wait till the earnings on NVIDIA. So I have no opinion on NVIDIA right now because NVIDIA has earnings next week. They could bomb or it could gap up and make new highs. So because of earnings, getting into it, I think it's the 28th, I would leave that being. That's my opinion on that. So whatever I say today really doesn't have any meaning because the earnings are next week. So it's in an uptrend. It's true. We did a couple trades in that long. We did a couple calls in that in the last week, but that was not into their earnings week expiration. And I would just lay off that until after the 28th. Anyways, like I was saying, chunk it out in the live room, and then you want to become an expert again, which is learning, understanding, trading, doing it, and becoming more consistent. And even if it's with small size, there's nothing wrong with taking small size. There's nothing wrong with taking one contract. There's nothing wrong with taking 100 shares. There's nothing wrong with, like I said, chunking it out. You could start with a small account and build it up. There's no shame in taking small size. But again, this is like taking 100 shares and trying to make $100. This isn't taking like 2,000 shares and trying to make $100. That's scalping to me. But the reason that I like to short is the idea of the panic. Because again, panic comes in very, very quickly in a stock. So we can get those kinds of big moves like we had in the UNH. But I think consistency helps. And if you think about it, it totally makes sense what I'm saying. Stocks fall faster than they rally. That momentum is key to making money, whether it's small size or big size. following the institutional money is extremely important. Doing trades where you don't need the market at all is important right now too, when the market is in a range like it's been, and you can get chopped up. So again, you have to look for things that have nothing to do with the market conditions. So what will you learn in my class? You learn the 26 points, you learn the rating system, you learn the entries, you learn the exits, you learn the targets. I'm looking for a big move in the day, hopefully a morning entry. 1-to-1 is my goal, but some of the trades, like I showed you, are huge. And sometimes you just don't know. You don't know when a trade is going to go huge or not. It's not necessarily something that I plan out in advance. I rate it, it rates good, I take it, and then it goes. But again, like I was saying at the beginning, people go through this process. Don't give up. If your dream is to trade, you can do it. I have people that are with me for a long, long time. They know how to do it, but they like me doing the ratings, me, getting my mentorship in the room every day. And of course, being there to call the trades, rate the gaps, answer any questions for them, and so on and so forth. So again, the system I use to find gaps each day is a 26-point checklist. It helps get you conviction, and understanding why something works will help you take risks, will help you trade better, will help you hold something longer. So empower yourself today. This is a complete system to use to trade. So the next class is in June. So it is a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. So the bearish class is $69.99, which is June 7th and 8th, 9 to 5. It's always Saturday and Sunday. It's online. It's a class on how to find, pick, and play professional bearish gaps. I am doing some Memorial Day packages going on through Memorial Day. If you know you want to sign up and you want to join and can start trading with us now, you want to do the bearish class, it's June 7th and 8th. The bullish class, which I don't do all the time, but I am doing in June, is June 22nd and 23rd. Same price. Again, if you want to learn both, you can sign up for both and save. You can sign up for both and pay $99.99 and do the 2 classes, which is both Saturday and Sunday, 2 weekends in June. I'm not doing anything Father's Day weekend. And then if you sign up, the Memorial Day special is this. If you sign up for the Memorial Day special by Monday, Memorial Day, you will get the Wealth Manifestation course free, which is in July, and you will get all my subscriptions free through the end of 2025. So you will get all my options trades for the rest of the year, all my trading room trades for the rest of the year, and then the market report subscription through the rest of the year. And that's whether you do the bullish class, bearish class, or you do the combo for both. So it's a great special. I have people already signed up, they're already trading. And so again, you can get in, sign up today, get tomorrow's trade. I think that this has been an exciting year to trade. Some things have happened that were unexpected. To me, the most unexpected thing was, though, really the pause that Trump did, because he was so on top of this Liberation Day. But I think when the market sold off as hard as it did, people talked him into pausing. But what happens in June and July when the next 90 days is off? Honestly, I have no idea. But I don't need to worry about it because I'm not in trades out till that long. I'm not in any trades out till June. We're doing the weekly options. So like I'm in trades now that expire next Friday. That's it. That's the longest I have out. And I only did them out to next week just because of the Memorial Day holiday. Or otherwise I would have done everything for this Friday. Any last minute questions from anyone about anything at all? How are we doing? The class here, the Golden Gap course is $6,999, whether you do the bullish or the bearish. If you want to do both, you can sign up for both, which is a special, which is $99.99. If you want to sign up for the options newsletter separate, again, you can just go to my website. All of this is on the website. If you want to go to the website, it's here, thestockswoosh.com, or you can email me at melissa@thestockswoosh.com. The options newsletter subscription, I have a 6-month subscription for $49.99. That 6 months will take you not till the end of the year, but that's a pretty good period of time, 6 months. And for the 12 months for the option subscription, which would take you into May of 2026, is $6,999. And it's a lot of trades. This is the Memorial Day special here. If you sign up for one of the classes for Memorial Day, you get the options newsletter free through at the end of 2025, the trading room free through the end of 2025, or the market report subscription free through the end of 2025, and the wealth class free. This is a Memorial Day sale. Any other questions? Be careful out there, people. I know people are doing all kinds of things. be careful. Think about what you're doing before you risk money. Think about your trades. I don't care if it's a small amount or a big amount. You can sign up for the $49.99, which is just the options newsletter, James. It will get you 6 months of the subscription. If you go to the website, I list all of my prices on the site and all of the explanations for every class and subscription I have right on the website. Listen, happy Memorial Day, everyone. Relax. Don't think about the stock market or anything on Monday. Have good picnics. And you too, Fausto.
Melissa, same thing to you, and thanks for being here. Like I said, happy Memorial Day to you too, and hopefully we'll get a chance to meet up sometime in the city. We have a busy schedule and everything, but thanks for being here, everyone, and take her up on her offer. And like I said, she's been around a long time. Trades very similar to me, the way we're both day traders and so on. Very well known in the industry, and like we always say, if she's around this long, she's obviously doing something right. So appreciate it, everyone. All right, so we're gonna take a quick little, just basically a 5-minute break, and then we're gonna bring our next speaker in, and she will be joining us. So let's just give Heather is going to be joining us, Wagenhals, and just give her a minute. Making success simple.com, and talk a little bit about psychology and everything like that. So let's just wait for her to get here, and we'll pick up right from there. All right, everybody. All right, everybody, let's get started. I want to bring in our next guest in here. So everyone can hear me loud and clear? Just quick little audio check. All right, good. Well, welcome back, everybody sticking around. So it is 12 o'clock. And like I said, we're going to bring our next speaker and very happy to have her. So everyone really excited to bring her aboard. She's been a pretty big impact in today's industry, growing the financial education. Her name is Heather Wagenhals. Hope I got that right. Wanted to introduce her because she brings something different to the table. She doesn't just talk about money. She talks a little bit about the mindset behind success. And it's something that we all need. And no matter what kind of trader you are, which is great. Heather has a best-selling book, media personality, and a creator of some awesome platforms. She started a couple of great websites, Making Success Simple, which helps people build better habits and crush their goals. She also, Unlocking Your Wealth, where she teaches smart money moves based on how the brain really does work, something I always need to myself. She also talks a little about, she's the author of books that literally change people's lives. She runs a book review, TV show, a little bit of that. But she has over 30 years of media, finance, and help people become their best themselves. So Heather is the real deal. So let's give her a welcome for being here. Heather, welcome to the Cyber Trading Expo.
Thank you so much for having me, Fausto. And I need to bring you on the road to introduce me everywhere I go. That was so awesome.
Well, thanks for coming. I know it's your first time here. Well, great to have you. I'm looking forward to having you. I'm looking forward to hear what you have to say.
Excellent. Well, thank you so much for having me here. Let me ask you this. Have you ever felt like the market's changed, but nobody told you, hey, by the way, the rules have changed? Well, welcome everyone. I'm Heather Wagenhals, and I am the host of Unlock Your Wealth TV. And today we're going to dive into why the market you thought you knew is gone and what you need to be doing instead. So it's not about hype, and it's definitely not about hope, because hope isn't a strategy. So I want to get you to start thinking about things just a little bit differently. This is about true strategy. It's about structure and momentum. And it all starts right here. So let's take a look. Let me get my PowerPoint up. And hang on, I got to cheat with the glasses. Ta-da, ta-da. All right. I just love technical challenges, don't you?
No problem. You able to find it?
It's just not showing up in the Zoom share. Like I'm hitting the share button, but it's not pulling up the presentation for whatever reason. So
Just make sure you're sharing an entire screen. That usually helps.
it didn't even give me that option.
On the bottom, does it say where it should share screen?
It does. Well, so it's showing, hang tight. Let me get there. So I hit share. And then, okay, so
Oh, there you
can you
go.
at least, whoops. That, why is it pulling from, it's not pulling from PowerPoint. That's really strange. I've got the PowerPoint program open.
I think you share by only share by screen. So maybe you just share the screen that you want to share and just go from there. You just had it up.
Oh, did I?
Yeah.
Okay. Let me try this again. Goodness gracious. Let's go back to the Zoom. There we go. Ha 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 ha. I don't know why I didn't want to do that before. All right. Has everybody got that?
Yep.
All right. So, okay. All set now. All right. Helps with the glasses. The strategies that we used to have in 2019, just really, while we were able to do a whole lot through COVID, they're just not working anymore. Buy and hold strategies, they've kind of got punished also. And really in 2022, but now lately, with all of the chop and flop and with what's going on in the headlines, do we even really know what we can count on? And that's what we're going to answer today. And we're going to work irrespective of that. So what about meme stock chasers? Those are some other folks that have also gotten wiped out. Even companies with great earnings, they got crushed by market sentiment and timing. So while we're entering yet another market cycle, and what we know is that it doesn't reward hope, it rewards precision and a framework that you can trust. So have you ever found yourself sitting in a trade and thinking, wait a minute, what do I do now? Do I hang on to it? I know what I've achieved so far. Do I stay with it? These are the questions that are on a lot of people's minds. I know that I've made those same questions. Once I got into a stock, I was like, okay, now what? And a lot of traders are feeling that way. They're following stock pickers and sometimes without context. And I know that that's exactly what I did, because I was like, oh, well, they have the crystal ball. They must know everything. And so I just kind of went with that. And I'll tell you why that was a really unusual position for me to be in based on my history. But they're like watching YouTube setups that don't actually match their goals or their risk profile. But what happens when the market turns or the chart surprises them? They freeze, they panic, and they hold. That's when they cross their fingers and start hoping. And I know that that's what I did too. And I got baked several times because that was not a strategy. Hope is never a strategy. So all of these mistakes, I've been there and I get it. And that's what was the impetus for me to actually build a system and to get out of that cycle and to try to really figure out what works, not just following somebody blindly. Whoops, I'm pushing all kind of buttons here. Not just following someone blindly, telling me to get into or out of something. I needed to know why I was doing it so I could be successful. And even if my connection to my stock picker timed out or I was cut off for whatever reason, I needed to be able to make those decisions effectively myself. And quite honestly, right before the trade, before I was even in the stock, I needed to know when I was getting in and when I was getting out. That way I could mitigate my risk and manage my risk tolerances more effectively over my whole portfolio. So what if I told you that the only thing standing between you and your trading chaos and your next breakthrough is this repeatable strategy that fits you? So you're going to walk away today with a real system. It's the one that I used to go from ground zero to six figures during one of the hardest times of my life. And I'll show you how to use options and not to gamble, but to gain control. I'm going to teach you my basics framework, and I'll also show you how you can create your own wealth velocity blueprint with the ground zero to growth option strategy I'm going to share today. It's a step-by-step process for trading with clarity and confidence. So if you've ever been hesitant to trade options because you thought they were too risky or too complicated, or that it was probably a setup for failure, when actually used correctly, options let you control more with less. They allow you to define your risk before you ever click buy. And then when they're paired with smart timing and filters, they don't just work, they win. And that's the lever I want to hand you today. So let's take a look at some examples here. So moonshots are real. If you know when to exit, and that's the key. Getting in, finding it before it runs, that's one thing. But when do you know to get out? And this is a really great example. So it's stock symbol VGVYF. And everybody wants to chase those moonshots. I mean, who doesn't want to put in a dollar and get 1,000 out, right? So they do exist. They are real, but we have to meter the exit. So VGVYF, they were a cryptocurrency exchange. So if you've ever seen a stock explode upward and thought, if I had only gotten in early, this was the one. Now, if you had gotten in, what if you decided to switch your strategy midstream because you didn't have one to start with and you thought, oh, well, I got in so cheap, I'm going to just buy and hold this. and you didn't know when to get out. That's what happened with Voyager. I got in before the crypto hype wave caught fire, and we rode this until 189% return we were able to realize. But the biggest problem with these guys, they went bankrupt. So a lot of people were holding back. They just closed the exchange. Nobody could get any money in or out, and they're still in bankruptcy courts. The stock isn't traded, but this wasn't what I would call a quality win, because I got lucky. All right. I was doing a system of someone else's and I didn't know why it was working. Even while I was still learning and following someone else's pick, the system that told me why it was a good time to exit was when I exited. And I had to go back and study that to really figure this out. And a moonshot without a plan is not a win. It's a time bomb. And as the futurist George Gilder said once in an interview on my show, the greatest fortunes are made on moonshots. But I want to caution you by saying the only disciplined folks get to keep it. So that's what you have to think about in terms of moonshots. Yeah, we all want that grand slam, but it's okay if we just take profits before we get there, before we do this buy and hold strategy. Now, there's myriad strategies out there, but if you're like me when I was in my 50s or my 40s and I had to start over because I got wiped, I made some improper business investments, you're like, okay, I can't dollar cost average like they taught me when I was 18. Now you have to be able to create some velocity with your money, and options chosen strategically is the way to do it. So we're going to talk a little bit more about discipline, and I'm going to hand you that structure today. So everybody wants that moonshot, right? But what about something that looks really good on paper and then all of a sudden you get wiped out? That's this next one here that we're going to talk about. And I was a really big fan of this, WWE. So it was a perfect looking trade. And then something totally unrelated to the business tanked it. And the chart was clean, the setup was solid. And then a scandal broke out involving Vince McMahon, and the headlines lit up. I remember it clear as day. I was walking out of a real estate closing and everybody started blowing up my phones. Oh my gosh, did you hear what happened? The stock dropped like a rock, but not because of fundamentals, but because of media pressure and the public narrative. His daughter was already running the company. He was just pretty much the figurehead holding the seat, and it wound up costing. The financials were super strong, but the public did not care. They cared about the scandal. And in the aftermath of Me Too, the narrative took over. And this is where the overreaction happens. Unchecked physiological dysregulation. Our emotions hijacked our trades. And this is what happens and why psychology plays a huge part in what we do as we set up our trader confidence. Because we act instinctively when we feel threatened. It's part of our DNA. And instead of thoughtfully responding, we instinctively react and we get into or out of a trade too soon. And that's this layer that I use in my filters when I start screening for stocks. And this is called the hype factor in my strategy, because the market isn't just driven by the math. It's driven by emotion and noise. And if you don't know how to track the crowd, you'll end up on the wrong side of the pop, or in this case, the drop. So we saw a huge number. Take a look at this. So I got to cheat again so I can look at this. So before the scandal, $68 a share. Following the revelations, $60, and they lost $500 million. That's $500 million. And all because of somebody's poor choices that got amplified by the media. So this is where you can get cooked, even in a good trade. This was totally solid, but life happens. So we can screen for stuff as best we can, but we have to be aware of those influences and be able to move strategically and exit a position if all of a sudden the tides change. But now I've got another one for you. So you don't need a moonshot to double your money, all right? So this one, NVIDIA, right? Everybody loves NVIDIA. So this trade, if we take a look here in October of 2024, they had formed a classic double bottom around the 120 level. So I use specific filters. My momentum was right where I wanted it. The sector strength was picking up. The hype factor was fading off just enough, and smart money started to trickle back in. And key earnings data was now coming into view. So the stock went from 120 to 140 in just a few weeks. That was a 16% move. So if you're in the stock, woo, right? It's like so great. So that sounds like a big win. However, all of that made the options move 100%. Think about why that's important, because in options, you only need to risk a fraction of that capital to control the same amount of shares. And so your capital isn't tied up. You can also now have additional positions, because instead of spending all that money in one share, you can now control 100 shares for a fraction of what it would cost you to buy 100 shares. And we all start at the very bottom, right? When we're entry level traders. So that's a good move for us, because what if we don't have tens of thousands of dollars to get started trading options, right? Or to even trade the base stock itself. So it's important that we use contracts to help us amplify our earnings and create velocity with the money that we have, so we can make more of it in less time. So this was a really great one, and I was really happy with this guide. Now, the reason why this is so powerful when we pair the stock with the option is, I call it our stock flow multiplier, because it's the strategy that let me rebuild when I had no room for error, right? I didn't have another 30 years of youth on my side to work those 80-hour work weeks to make the money back. And it's not about swinging big, right? We can have those moonshots, but it's about setting ourselves up smart. Base hit, base hit, base hit. NVIDIA's October 24 performance is a great example of a base hit. We got the double bottom. Most traders were scared. Headlines were noisy. I mean, that's just not that many months ago. It didn't look like it would be so great, but the setup was clean. And again, when I ran it through my filters, we saw all of the right moves on each layer of risk that we evaluate. So taking that slightly out of the money call, just above 140, and I gave myself about a month or so to make it come in. The stock bounced, and there you have it. Now we have a nice tidy win. We close out and we look for more transactions. So it's not gambling when we think about options, because we're doing it strategically. We're just not randomly hoping to, oh my gosh, I wonder if I can get that candlestick to move in the right direction for me, so I get this trade today and I have to sit there at the screen all day. Because all of us have lives. We're professionals, we're at the height of our careers perhaps, and sitting to make up that money that maybe we made mistakes with before isn't at the forefront, nor do we even really have time. So that's why we have to have a more thoughtful approach when it comes to trading. So the 5 trade filters that I used before I ever enter a trade, a stock or a contract, it doesn't matter. I run it through these 5 filters. So we've got momentum and timing, sector flow and seasonality, contract quality and delta, narrative check or my hype factor, and exit logic before the entry. So this will take me from, this looks good, to, wow, this is actually worth my capital. These filters don't just reduce risk, they give me confidence. And it's called the basics framework. So have you ever stared at a chart and asked, what am I even looking for, right? What am I even looking for? And that's where this basics framework comes in. It's how I break down every trade from idea to execution. And it's not about being right, it's about being ready. So think about that. Would you rather be right, or would you rather be lucky? And I'll take lucky every time over being right, because that's where we make the money. So let's take our first letter here in our basics framework. So first is behavior and bias, right? This is where we want to regulate before we execute. So this is about making sure that when we're trading, we're not upset because our kid just got into a fight, got kicked out of school, or the dog ate the sofa cushion, or your wife forgot your dry cleaning and now you don't have a suit to wear to work. This is about setting all of that aside so you can think clearly and not have a physiological response, right? This is what's key, having clarity before you take and act. And I like this because it starts with the letter B. And one of my favorite observations over the years and after interviewing over 3,000 people on my various television programs is there's one thing that separates billionaires from everybody else. And you know what that is? It's simple. The thing that separates billionaires from everybody else is physiological and emotional regulation. They don't get super worked up or excited when something goes well. And again, they don't get super disappointed or frustrated or angered when things don't. Because what billionaires teach us is that all emotions are neither good nor bad. They're just information. And so we have to interpret the information in our highest and best resource state. So we're not making emotional decisions, we're making strategic ones. So that's where this behavior and bias have to do with it. So now we're going to talk A. This is analysis. So this is our chart setup. So we're not chasing patterns, but we're using that information to help give us the data that we need to make effective decisions. We want to look at earnings. We want to look at all sorts of different fundamental analysis, layer that with our technical analysis from what is going on, but we're not going to overly rely on any one of them. We need to think of this in terms of layers of risk, like lenders do when we talk about mortgage or loan underwriting. They have layers of risk, and you don't have to be 100% in each one, but you have to have enough in every category to say, I'm going to take this risk. So we're not chasing patterns, but we're using them to give us more of our timing that we need to be paying attention to. Sector strength is our next one. You want to swim with the current, not be fighting the tide. You know, something that really is funny that my grandfather used to say when I was younger, and it used to always confuse me. And then it would make me laugh because it had like a naughty word in it. And I was like, ugh. But my grandfather used to always say, we should all eat more poop because 5 billion flies can't be wrong. And when he said that, I was like, ew, that's gross. But that talks about lemmings or following the herd. But if the current is going that way and you see others making money and you can get in and set your get out properly, then don't fight the tide, roll with it. Institutional flow. So this is another flow that we need to be paying attention to. Are we watching whales swimming in, or are we just with a bunch of minnows? So we want to look for quiet accumulation and pay attention to who's buying and not just what's being bought. But we want to pay attention to who is buying, because that'll give you an indicator of investor confidence at the institutional level, because they're not going to take a ton of risk, right? They have so many people that they're responsible for. So when you see that money going in that direction and you see the institutions coming in, that's a level of confidence from tons of analysts, right? Much smarter than me. So I look at it in that sense. So if I can get information from quality sources of people that are smarter than me, then that's where I want to go. And so when the institutional flow kicks in, that's just another layer of confidence that helps you mitigate some of the risk. And catalysts, right? You turn on the TV every day and you hear the catalysts, earnings, Fed meetings, presidents doing things, making, ultimatums and all kinds of comments in the press. We watch business titans doing their thing, right? And so we hear these people making these moves. Some of them are legal. Some of them are part of our hype factor, which we're going to talk about next. But it all matters because these things move markets, because people trade on emotion, right? Most investors trade on emotion unless it's their business and they're running an institution or trading on behalf of others. So if they're not professionals, that's what's driving your market. And you need to pay attention to the things that can influence investor sentiment. And some of those things are your catalysts. Earnings reports are big ones. We've just been going through a bunch of earnings lately. Fed meetings, everybody's anticipating what's going to happen with the Fed. So these are things that add another layer of risk for us to analyze. And then finally, the setup and hype factor. So narrative is almost more important than what the company is saying about themselves. It's what everybody else is saying. I remember probably 25 years ago watching Oprah talk about how she picked stocks. And she says, well, I just looked around and I saw all these kids with sneakers with swooshes on them. And that's what drove her to invest in Nike. So narrative can move the chart silently by just seeing what's happening around you and being aware of trends and also what you're hearing in the media. So we can take in all of these sources, and that hype factor, whether people are for it or against it, can give us investor confidence, especially with options. Because the beauty about options is the stock doesn't have to perform depending on the type of option you buy. You can bet on somebody going down just like you can somebody rising up. So this is the one that gets us ready for the pop or drop and how to move accordingly. So, oops. I lost my thing here. Okay, here we go. Whoops, I skipped too far. All right, here we go. So I'm going to tell you something that I don't ever get to talk about as much. This system that I devised over years of making mistakes and learning, right? So I look at life like I never lose. I either win or I learn, right? And people pay to go to college or technical school, right? So when I make a mistake, I just paid to learn what not to do again. So that's kind of my thought process from that. But in addition to making mistakes, my ability to win has come from a lifetime of learning how to ask better questions. You know, I had my stockbroker's license in my 20s, but all I learned, other than passing the exam, was that it taught me how to sell products, not how to think about the market. I wasn't an analyst. I wasn't picking anything. I walked in and I saw what symbols were on the board, and that's what we were selling that day. So what changed everything was being able to make my own mistakes and ask those better questions, sitting down with people who actually move markets. So I got to interview Art Laffer a couple of years ago, the guy behind the Laffer curve. And he had a really interesting perspective on taxation. And if you followed any of his work, if you sat in that Ferris Bueller class and listened to Ben Stein tell us about money, then you know who Art Laffer is. And one of the greatest things is to be able to glean the wisdom from others so you don't have to make those mistakes. Dear friend of mine and behavioral finance strategist and wealth manager, Harry Abramson, he's also the author of Money Rules. He's helped me understand a whole lot about investor psychology and why you need to learn how to manage the small money. Otherwise, you'll never be able to manage the big money. So when I say that, think in terms of professional athletes, actors, musicians, people that struggled, and didn't have the investor wherewithal, and then all of a sudden made it big and lost it all. So understanding how to manage money on a small level lets us manage it bigger. And Harry Abramson started helping me think like the rich. Rich Checken helped flesh out my background as a precious metals expert. I never thought much about precious metals until I had the opportunity to spend some time with him, and I got to interview him. I participated in all kinds of speaking events with Rich, and he was able to share why we need to use it as a tool and not a goal. These people, what do they all have in common? They don't guess. They use systems. And now it's your turn. So if you had access to a system that made you feel clear and confident and in control every time you traded, would you use it? So I just shared with you how I think about investing, and I want to give you that same process. So it's my wealth velocity blueprint from my ground zero to growth strategy using options. It's not a course, it's a system. And here's what you get with that system. So you get the 5 core training modules. And in these modules, I give you these specific techniques of how I select my stocks. We go into each layer specifically, and we learn not just what should we be measuring, but what makes it a successful measurement, or maybe this isn't an effective trade for us, and maybe we need to let this go for a while. It also gives you real trades broken down in 5 separate steps. So we'll not only take the theory of how this strategy works, but then we will take this formula and we will apply it to individual companies to see how they rank. I've created a ranking system that allows you to determine if this is a worthwhile investment based on not just the trade or the company itself, but on your investor risk profile. So I'm also going to include in this a position sizing calculator so you can invest at your level and at your risk tolerance. And something else that we have that we're launching is a founders only support group. And this is our own private community where we can start evaluating companies and sharing what we've learned and have conversations, because everybody brings something different to the table. And maybe your opinion about a particular company is weighted by hype factor. Well, someone else might be looking more at fundamentals. So here's a great way to exchange with other folks, like-minded individuals, learning at the same pace that you're learning. And what's really great about this is because I have pulled together a really neat bundle for you. So for this webinar, you'll have, in addition to all of the course, you'll have the market timing blueprint. You'll have our time advantage playbook, our trade ready checklist, our founders group access. And for the first 10 who enroll today, you'll get a private one-on-one strategy call with me. And in this strategy call, we're going to go over your risk tolerance and your goals and find out what's right for you. So here's what you're getting in this. So we've estimated the value at $1,879 with all of the bonuses included. So when this website goes live next week, we're going to be offering this course at $595. Because you're here live, you're participating in this event, you'll get all of these things, and you'll only have to pay a one-time payment of $295. It's your system, it's yours to keep for lifetime. You get access to the group, and there's no upsells. There's no subscriptions. Everything that you need to start trading options successfully is in this system. No assistant, no junior coach. When we do our one-on-ones, it's just you and me, and we dial in your blueprint. So all of this stuff, the training, the tools, the bonuses, again, you're getting almost $2,000 worth of value. And all it takes to get started today is $295. So I'm looking forward to all of your questions, because I see that I'm getting messages that they're starting to come in. So no subscription fees, no surprises. You just get to make it happen. So if you're done guessing and you are ready to move on with purpose, just keep this in mind. I didn't build this course to sell it. I built it because I needed it. I had to have a strategy to make up for all of that time and lost money. And now I want to hand it to you. So if you're ready to stop chasing trades and start building wealth, all you have to do is go to tradethirsty.com/earn, and you can get started today. And let's get started together. So our class that we will do is going to be boot camp style, and it'll be a full workshop, and we'll spend one day at it. And it's on June 3rd, Tuesday, June 3rd. Join me and let's learn how to trade options successfully together. So I see here we have some questions. So let me go quickly to that. And so I have to push other buttons here in order to get back to that. All right. I'm pushing all the kind of wrong buttons. So it says, Mac is asking, is this really everything I need, or are there other tools? Nope. This is the entire system. One payment, no renewals. You get the full training, all of the tools and all of the bonuses. Oh, you know what I forgot to say? So on those analysis tools and this system that I built for ranking companies, yeah, I've built a little piece of software now, so you can have that answer in minutes instead of having to do hours of copious research and number crunching yourself. I've made it super simple for you. Okay, Samuel says, how much time does this take each week? Everybody learns at a different pace. We'll all go through the system together. It's about your building your confidence in being able to make effective decisions. So that part's on you. But the amount of time that you need, maybe 30 minutes. Once you make your stock selections, and you'll see why we do it in this fashion, and it's because the way we set it up, we're not looking for that day trade. We're not looking for that quick hit. We're looking for patterns. We're looking for where the bulls are running, where the bears are dropping, and we want to be strategic in our efforts. And so we want to evaluate the companies using these filters that I will teach you in the Ground Zero to Growth class. And it's important because you don't want to have to sit around. That's why I designed it. I've got things to do. I've got adventures on top of like working, right? I'm an adventure babe. I got to go out and do things, right? And enjoy the money that I'm making because tomorrow's never promised. So I don't like spending a whole lot of time trading, and I spend 20, 30 minutes a week at it. So you can do the same thing too with these tools that I've built and the system. Okay, Tran is asking, do I need to already be trading options for this program to work for me? No, not at all. I walk you through it step by step. Beginners and experienced traders will benefit on this. Okay. Philip is asking, how is this different from other trading courses out there? Well, the one thing that makes ours unique is that it's strategy first. It's not theory or signals. You're going to learn how to think like a trader with a proven strategy. So you're going to have the mental framework to make decisions on your own. And you won't have to follow someone else to get those picks, or you won't have to wonder, why is somebody investing in this? Like, if somebody is deviating from the flow, could there be a good reason? And is that within your investor risk profile to do so? So that's something that's really important to think about, because most of us don't think in terms of strategy first. What do? Like, you're sitting around the water cooler at work and somebody says, oh, hey, did you see this? And everybody starts talking about a company or a stock. And then you're like, oh, well, I'm going to get in on it. And then you jump in and you buy it. And now you're watching it and you're like, okay, what next? How do I know how long I should let this go? Should I just take, this $1 or $2 gain, or do I wait and see what it's going to be? So this is why you need to have a strategy, because you'll know based on all of the criteria that you go through and all of the filters that these companies have to perform before you even say, yes, I'm going to make this trade. So that's something that we have to really consider. And we're not trying to follow signals or read signals or interpret them. We're trying to execute a strategy that's repeatable over and over, irrespective of what the market's doing, whether it's going up, down, or chopping all over the place. These are the things that we want to focus on. And with a strategy, we can avoid getting caught up in the hype factor ourselves and make effective decisions. Okay. Kane asks, what if I've lost money before? Will this help me rebuild? It's a great question. And the short answer is yes, because that's what I did. I used it to rebuild. I didn't build it for anybody else. I built it to make money for myself. And I thought, this is crazy that I was a stockbroker and I didn't have the wherewithal to make my own picks, that I relied on someone else. I had to pay them. And then it's not like I could pick up the phone and call them and say, hey, what do? How do I sit tight? Like, I'm getting alerts, what, once a week? if that. Maybe they haven't talked about my particular holding in a couple of weeks, but I'm watching it move, but they haven't addressed it in their newsletter. What do I do? And I didn't want to be in that place anymore. I wanted to know what to do. I wanted to know when I was in, when I was out, and what to do in case a hype factor caused some sort of an influence. So, so yeah, I created this after losing everything. And because I had to sit and rethink how to approach the markets after this, because I was like, there are people getting rich every day. And all strategies have value. I mean, just think about a slot machine. If you sit and put in enough coins, at some point it's going to pay out, right? But you want to be able to put in the least amount of coins for the most amount of return. And so, how do we find a strategy that's effective? And that kind of is what drove my decision to figure out, how do I create velocity with money? I don't have time on my side to buy and hold. I need to start building back that wealth that I lost. So, how did I do that? And it was this strategy, using quality companies and buying the right options at the right time, knowing when I'm in and knowing when I'm exiting. And that makes it easier for you. It's like a rite of passage as a trader, to be able to get that level of confidence. And if you're not experienced and you've blown up quite a bit in your account, it's okay, because we can hit the pause button and reset and start working on this. And how about this? All of you in the chat, if you're following along, put a B in there if you're brave enough. B for brave, and B, I blew up my account, because I know I've done that. And you watch the zeros just drop off and you're like, what did I do? What did I miss? How did that happen? So the bottom line is, this is your stopgap, so you don't keep blowing up your accounts, right? Because practice doesn't make perfect. Practice makes permanent. So we want to perfect our practice, and that's by having a solid strategy that's repeatable. Some other questions here. How long do I have access to the course? So you'll have lifetime access. You'll have no renewals, no expiration. You can revisit the content anytime. And of course, this online community that comes with the training is one of the biggest bonuses of all, because it's not just enough to learn it. We have to practice the application of it, right? So if we think in terms of practice and what it does, we need to perfect our practice. And by being able to bounce our ideas off, is this an effective trade? Is this ineffective? Is your risk tolerance the same as mine? The ability to connect and communicate with other individuals at the same pace in your personal founders group, that's going to make all the difference for you, because now it'll allow you to start cementing that theory into practice. It'll help you start becoming more effective at it. And we need to think about this in any new educational endeavor, whether we're learning to play golf or snowboard for the first time, whatever it is. We have to think of it as the first time we're going off-road mentally, right? We're in new territory. We don't have a path to follow. We're just going, right? But if we end up on the other side, we're like, oh, okay, so now we can traverse that road back. And guess what? It's not as foreign as it was. And then the more we work that same path, the smoother the road gets. And then finally, we're kicking butt and we're hauling ass, right? And that's where we want to be able to be. And that's what the brain does, right? So the brain works, that you've probably heard of the term neurons that fire together, wire together. Well, that's what happens every time you carve a new path. And so learning this new skill, there's going to be a little bumps along the way. And so you've already had those bumps experiences. So what we're trying to do is mitigate that experience for you by giving you more tools to blaze your own trail and smooth that road as you go. And that's what the ground zero to growth strategy does, is it gives you that framework. So now if you just execute the framework consistently, that's what'll get you an amplified, quicker response, because you'll be able to follow a proven system for success. And now all you have to do is emulate it. So you're going to shortcut the learning curve, because you don't have to make all the mistakes I did in order to get that. Okay. Let's see what we have here. Okay. I'm already in a few trades. Can I apply this right away? Well, yes. trading is risky, as you know, especially if you've been burned. But because I'm not familiar with the trade that you're speaking of or what company you're looking at, but the short answer is yes. If you apply these filters, and once you start using this little piece of software that I helped you, that's going to cut your research time. So now all you have to do is make sure it meets criteria so you can start making more effective decisions with your trade. And based on how you come up with your risk profile assessment and whether or not that company meets that criteria, you can get started very quickly applying the system. Get your feet wet, and that's the key. Is we're only going to learn by experience, right? All of the information in the world until practically applied doesn't become knowledge, right? Until we apply it. And then how the outcome we generate from that knowledge is what gives us the experience. And then that experience says, okay, I can do this, I could be successful, and that'll just reinforce your confidence and keep you going. So, oh, okay, this is a good one. So, can you explain more about the private call bonus? So this is really fun, and I'm really excited to be able to do this. So the first 10 attendees here today that enroll in our Ground Zero to Growth system, you're going to get a private one-on-one coaching session. And this is not just going to be about how much do you have, like where do you want to end up. We apply my 3-5 millionaire method from my personal finance section. And so the 3 questions that we're going to ask ourselves, and we're going to address 5 areas of concern. And then we're going to show you how this strategy fits into that. And those 3 questions are, where am I going, and what's the difference? So I'm going to give you not only this framework, but I'm going to give you this 3-5 millionaire method that you can focus on to put the pieces together in the right order. And we just need to know, where are we? What's our balance sheet? How much do we have to invest? What kind of goals do we have? We go from that to goals first, or to goals next. And then once we understand what it is we want to achieve, and we set timelines, because most things are achievable. Are you going to be a millionaire by Friday? I don't know. Did you pick the winning lottery numbers? Because even that is risky, right? So you can be a millionaire. Everybody has the capacity to be a millionaire. You just have to ask yourself, when do I want to be that millionaire? And what am I willing to do to get there? Because choices have to be made. If you want to be able to make big money fast, you've got to be able to risk money, and you have to have the intestinal fortitude to see it through, right? And then we have that third question we answer, which is, what's the difference? And we have to measure our efforts and our outcomes. And did what actions we take generate the outcomes we desired? And if they haven't, then we've got to go back and just kind of rework all of that. And I'll just give it to you guys now, since we're on this subject of the 3-5 millionaire method. So you ask yourself 3 questions. This is from the book. And so you ask yourself 3 questions and address 5 areas of concern. And so these are income, expenses, and credit, right? Because we all have money coming in and going out, and some of it's not ours when we borrowed it. Then we have protections, right? So think of protections as insurance, but not in the traditional sense that insurance costs you money. So insurance is actually insuring your success. And I think about it, insurance kind of works like options in a way, because you're renting millionaire status before you get there, right? So I don't have $1 million in the bank, but like I drive on the road, and what if I cause a car accident, right? So I'm going to need to have money to pay this. Well, cars crumple up pretty quick, and they're quite expensive these days. So that bill is going to be high. So we use insurance to rent millionaire status to get us there, to cover that gap, right? And that's kind of what options are doing. We pay a small fee for a period of time to control part of the marketplace that we don't own, but we can make money on that control. And that's part of why I really like options a lot. And that's how insurance works as a tool for you. So then we go from income accumulation, that's the making and saving of money, the income acceleration, and that's what we're doing here today. This is where this piece fits in, because we are creating velocity with our money, and so we're using our money to work alongside of us. So we can have a job and we can collect a paycheck, But wouldn't it be great if we had little employees? And so if you think of your dollars as like little workers that you can put to work and make some money with. So now our money is working as hard as we are. And so that's what's really great. And then that final area of concern and the biggest piece of that puzzle is asset preservation. And so now we're talking about legacy building. We're talking about wealth preservation, tax mitigation, and how do we leave a legacy for our family and those who are important to us. And so that's the 3-5 millionaire method. And so we'll get a chance to go through that on this. And this one-on-one strategy will also be able to answer any questions you have, because you'll want to schedule your one-on-one after you've taken the boot camp and we've gone through the entire system itself. So that's the key piece for this. And that's what makes me so excited, because everybody has different goals and dreams. Everybody has a different vision for what they think wealth is and what they want to be doing when they are unable to work. And so so you want to start having your money work alongside you right now. And this is the way to do it. So let me just bring this offer up really quick one more time for you, so you can see all of the cool things that you can get. I'm trying to find it here. Where did it go? Where's my list? All right. And then back to Zoom. And then share. Whoops, there we go. Okay, here we go. So this is what you get. 5 core modules to master the basics framework. You get the stock flow multiplier training. So this is the methodology that we use as we generate our stock and options choices. Then we're going to walk through all kind of trades using this system, and you'll get to actively work alongside me and understand the framework and help create the system so you build the foundation for success. We're going to give you our position sizing and risk profiler tools, because these are important. It's not about how much do you have to invest. It's like, do you have the intestinal fortitude to see the trades through? And how do we build that up? Just by doing it. But having this methodology in place gives you more confidence to be able to do it successfully. And then you'll also have access to our founders only group. And then just for folks here today at the expo, market timing blueprint. So this is a great tool, because this is going to tell you about intraday trading, where we're bleeding money when we make trades, what's the best trading platform for us, and how do we deploy using seasonal times and intraday and time of day, time of week to our advantage when it comes to entering and exiting these trades. Because again, we're not day trading, so time is on our side. We have a little bit of a luxury with that. And so this market timing blueprint is going to give you a way to fundamentally look at market timing differently. You'll also get the time advantage playbook, our trade ready checklist. So this is going to be a bulleted list to say, yes, I went through this particular section. I did this filter. I did this filter. And you work your way down the checklist for every trade systematically. And my little software tool will totally help you out with that. You also get the founders group access. And again, if you are one of the first 10 to enroll, then you will get the one-on-one strategy session where we customize your wealth blueprint together. All of this is in the ground zero to growth options system, and it's what saved me. So now you can have it too. So if you want to get in on June 3rd, I encourage you to visit tradethirsty.com/earn. That's tradethirsty.com/earn. And then join me on the inside on June 3rd. I'll look forward to seeing you there.
All right. Thank you very much, Heather, for that. And Heather, thanks for coming on. You did a great job. Hopefully everyone takes up your offer. And like I said, we'll have her on again. You'll get this thing recorded. You'll be able to see it. and review all that. And once again, psychology has a lot to do with it. And it's all those things that you cover are very important. But thanks for coming, Heather, and look forward to having you back again. Enjoy your Memorial Day.
It's my pleasure, Fausto. And by the way, your people are already scheduling to have you appear on my show. So I'm really excited about that.
Well, looking forward to have you on. All right. Have a good day. So we got about 5 minutes, and I'm going to bring my next speaker in a little bit, which is a very good friend of mine, Jeff Gibley. But in the meantime, as we're waiting and for 5 minutes, and let me just share my screen with you, everyone. All right. Can everybody see my screen okay? All right, perfect. All right, so just want to kind of talk about a few things. If some of you were listening to me earlier, and we were talking about some of the stocks that were moving, and you can see the Dow Jones right now is around 300 points, and a lot of greens in certain stocks. Tesla's back up, everything else, but that's not what I want to really kind of point out. I want to point out a stock that's really making a big move that I showed you earlier. And for some of you, we were talking about this. Remember, I was showing you Bitcoin, and I know Jeff Gibley is also a very big Bitcoin fan. But when I was on around 10 o'clock this morning, remember we saw this big order out here around 100,000 and 108,000, and he got filled. And big order. Look what happened to Bitcoin. It literally almost ran an additional $2,000 till now. And now we're going to be testing this 110,000 Bitcoin at 560 Bitcoins. So once again, the whole idea, what we try to teach at Cyber Trading University and what all the speakers have here is we don't want to change your style. We're just trying to enhance it. If it's psychology, if it's platform, whatever it is. But I thought that was pretty cool to show everybody to kind of see what happened on how a stock made a big breakout. Now, remember, I always kind of tell everybody that when you see big iceberg orders, you see block orders out there, that is a game plan where people are trying to get out. But then I was talking about breakouts, and this is what's called a breakout. Just because you see an order out there doesn't mean someone is not interested in buying it or interested in maybe the change of mind and cancel it. And in that situation, it did exactly that. And this is basically applies to everything. Now, a couple of stocks also we've been sharing in our trading room, which everyone here is more than welcome to join us. I gave everybody the log-on instructions for that. A lot of things that are moving pretty well in the industry is we're following the stocks of, if you've been regarding the dome that Trump was talking about putting over the United States, the Iron Dome. This stock NUKK has been doing really well. This back in the day with Israel, this stock went from $1 all the way to $80. And you can see in the last couple of days, it's been moving up pretty well down here. A couple of the stocks also follow along with it. RTX is moving up pretty well. And that's another one that you could see here, 115 to 130. That one's also part of the Golden Dome. And you have, I don't know if you listened to me this morning, but even it's not public, but SpaceX from Elon Musk, Tesla, is also in the runnings for that big contract. Another big thing that we're keeping a very close eye on too, that's doing pretty well, is a lot of the nuclear stocks. SMR, you could see it right here, been moving up really nicely, $16.25. You can see it's been on one of the very few stocks that's up pretty big. And what also trades with that stock is OKLO. So between nuclear stocks and quantum stocks that are moving pretty well also. You can see the quantum stocks here have been doing absolutely fabulous. They've been on our watch list for the past week. So, but it all turns out to finding, listen, if you believe in quantum or don't believe in quantum, I know Jeff Gibley believes in quantum. It's all these stocks are moving it. And a lot of the quantum stocks and these supercomputers that are going to be taking over with AI, remember, you need a lot of energy for that. And, believe it or not, solar panels ain't going to work. So that's why nuclear stocks also have been taking a very big step. Once again, President Trump is not a fan of the Green New Deal. He likes the nuclear and oil, drill, baby, drill. You hear it all the time. So, regardless if you're a fan of him or not, it's all about politics. When you have a new president come in, you have all these new policies that come in. You got to follow those stocks, because if you don't, I only say one thing: short them if you really don't like them. So and let me see how that works out. All right. But I want to bring on my next guest. Okay, so and we'll as we go on, the days go on, we'll bring in new guests. I'm going to show you some things that are going on in the market. But like I said, I want to bring on my new guest here, and let me just share this really quick. All right, so everyone, let me introduce somebody that's been really, really special, to Cyber Trading University, and as a personal good friend. I've known this guy for over 20 years, Jeff Gibley from Metastock. Jeff isn't just a great speaker; he's an expert with his trading tools. I mean, he also, is a good friend of mine, like I said. And over the years, I got to know Jeff not just professionally, but personally. And I can honestly say he's one of the most knowledgeable and genuine people in this industry, which is really kind of hard to find. I know a lot of us here, we think we find someone, you see these people on YouTube, but he's been around for a long time, and he's a very, very honest person. I brought him here today because he's amazing in breaking down complex tools and strategies in the way of actually makes sense. Jeff's been with Metastock. I mean, it's got to be over 20 years now, maybe 25. And he serves now as the director of sales. And he's worked closely with the sales and education team to help traders all over the world use Metastock and make smarter trading decisions. So he's spoken on stage around the world, and he's done everything from stocks to crypto. And I think you're going to learn a lot from what he has to say here. So let's give him a big warm welcome. Jeff, thanks for coming to the Cyber Expo.
All right, thanks. You should be able to hear me and see me. So there we go. Let me go ahead and share my screen before I let you go. I'll just make sure you can see everything. So let's see. Pastor, can you confirm that you can see that, if you don't mind?
Yep, can see it fine.
Okay.
Perfect.
And
let me just correct something. It's Gibby, not Ghibli. Sorry about that.
No worries. I was laughing every time you said it, so it's all good. Jeff Gibby. Anyway, it's great to be here. Fausto's a good friend of mine too. We've done events forever, since his kids were literally being born, to now, and I think it's amazing how time goes. I've been here at Metastock for 27 years. I can talk a little bit about kind of like a lot of people are kind of new to trading. They don't know kind of what strategy to use. They don't know what their strategies are going to look like. They don't know what they don't know. And really kind of what I want to do today is actually talk about those things that you might be missing, and how having a structured trading plan might be helpful. I do have the chat open. If you have questions as we go, I want to invite you to answer those. And let's go ahead and get started. The first thing I need to do is actually make our lawyers happy. So let's start there. And I'm going to go ahead and move this just out of my way a little bit. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of this software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. I hope you enjoyed that. All right. Let me go ahead and kind of just talk a little bit about me. I did start here in 1998. So it's 27 years in March, as long as I've been here. When I started on the inside sales team, and that means I talked to a lot of traders that were kind of frustrated with kind of the methodologies and the mentality, and kind of generally when people call us, they're looking for ways to trade better and how they could improve the trading. So we'd ask a lot of questions like, well, what is it? What is your issue? Like, are you looking to improve your trading by finding better stocks? Do you need to find a better methodology with which to trade? All of that kind of stuff. And I very, very, very much enjoyed working in inside sales and talking to traders and help them solve their problems. Just for the last 20 years, I've worked hard in our partner programs and worked with people like Fausto and some of really the leading minds in the industry to kind of help them get stuff ported over into Metastock, arrange events with them. It's been a lot of fun. It's a great company to work for. So Metastock itself, I hope you read this because I'm not going to read it to you. But we have been in business, just the high points, since 1982. Our software helps scan for stocks. It can help you test trading ideas. It can help you identify the best methods to use in a stock. It can give you alerts, all that kind of stuff. And we're very, very proud of the heritage. And I'll talk a little bit about it as we go today. But really, one of the things I want to start as we start is just I want to talk a little bit about the fact that it's been rated #1 32 years in a row. And as a software that's been kind of developed and designed and been winning this award for 32 years in a row, there's a ton of stuff that are in there. So what I want to focus today is not really kind of go into every nook and cranny in Metastock. That would take a few months. What I want to do is kind of just talk a little bit about the idea of a trading methodology, of having discipline in trading. And I want to kind of just do a few things to kind of help you with that. So what I plan on talking about today is the importance of a trading plan, understanding a trading plan. I'm going to teach you all about MACD, whether you know it or not, how to test different trading ideas. And my goal today is I hope you learn something. Really, we're going to talk a lot about MACD and kind of how it works. One of the reasons I like to talk about MACD and how it works is I find a lot of people trade MACD, but they don't really understand kind of how it's constructed, how to use it, how it's interpreted, and all that kind of good stuff. But I really want to talk about that as a reference so that you kind of understand what a trading methodology is. So we'll talk about testing. We'll talk about scanning for trades. All of that stuff is stuff that Metastock does really, really well. So there we go. Let's go ahead and get started. If you have questions, let me know. Every time I look in this direction, I'm looking for your questions. So Richard Dennis, if you're not familiar with Richard Dennis, he had a friend that was by the name of that had the name Bill Eckhart. They were good friends. Richard Dennis was actually called the Prince of the Pit. He was a very famous futures trader, and his friend Bill Eckhart and him had a huge disagreement in terms of kind of if you could teach trading. He said he believed that you could teach anybody how to trade, and his friend Bill Eckhart disagreed. He thought there was a genetic component and that kind of stuff. So if you've heard of the turtle trading organization, or the turtle traders, I guess is the better way to say it. These are the two people that formed it. They actually put together some funds. They funded a bunch of traders. They taught them how to trade. And they ended up doing the turtle traders, which was a hugely successful venture in trading. And one of the quotes that I really like from it, there's a couple of really good quotes that I like from Richard Dennis, but this is one of them. I always say you could publish my rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. And with that in mind, I just kind of want to ask a little bit of a question for the audience. So I want to kind of get your opinion in terms of this. I've put it as a multiple choice so that you can participate more easily. But what do you think is the best profession to have before you start the profession of trading? Here's the options that I put together, and go ahead and type them as we go. Would it be a teacher or an educator? Would that be A? B, engineer or architect? C, psychologist, psychiatrist? D, a pilot? A performer would be E, or an artist musician would be F. What do you think it is? And we're getting some answers. We have B, B, and D. Now, over the years, I've worked with quite a number of very, very successful traders and people that have created trading systems that have been very, very good. And actually, I think a couple of these answers have some real validity. When I think about psychologists and psychiatrists, a good friend of mine, Chick Bernstein, and another great expert, Dr. Alexander Elder, come to mind. Actually, I think Dr. Alexander Elder's book should be required reading. It's actually a really, really good book. But they both started as psychiatrists, psychologists, so they started in the C category. But the actual answer is a farmer. That's an interesting one. Teresa says all of the above. I like that answer. C. Don says D. We got a B. We got some. Thanks for all the comments there. Some really good ones. Dawn has it nailed, though. Actually, my wife's name is Dawn. So anyway, she says, follow checklist before starting. deep pilot. And actually, like right now, we're doing some stuff with a top market timer, Chuck Hughes, who was a Top Gun. We have a good friend of Metastock who's retired now, but he ended up managing about $19 billion worth of funds for state and money management. He's a very good technician. Wrote a book about that graded all the candlestick patterns. Greg Morris, a literal Top Gun as well. And the answer is pilot. And Don nailed it on the head. Exactly the reason that I think the answer is pilot is because of the checklist. When they take off, they have a very specific set of instructions that they follow. When they land, they have a very specific instructions that they follow. They have a lot of discipline. And so as we talk about trader psychology and stuff like that, that's very, very important stuff. The speaker before me, Heather, talked a lot about psychology. Very, very important. I think one of the things that leads to help you with that psychology is understanding the business plan behind trading. And so that's what I'm going to talk about today. When I want you to kind of imagine a scenario where you're going to start a business, right? Let's say you're going to go ahead and that business can be anything. Let's say we wanted to make cookies. I'm making this up as I go along. But let's say you wanted to make cookies. You're going to have, before you probably invest any money in this cookie making venture, you're going to understand kind of like what your flour costs are going to be, what your kitchen costs are going to be, what your, overhead, if you're running a retail establishment, is going to look like, what your initial investment capital is going to look like. You're probably going to put a lot of thought to, hey, can I actually pull this off? Or is this something that maybe I shouldn't do? Maybe it's not going to be profitable for whatever reason, right? I see the thing about trading over the decades that I've been doing, 28-ish years right now, 27 years. The thing about that is a lot of people will just jump in. They'll go into a market and say, hey, I'm going to start trading, but they don't do any initial research into, okay, here's why I'm going to trade. Here's kind of when I'm going to get into a stock. Here's when I'm going to get out of a stock. These are the reasons I'm going to buy the stock. And as a result, they're not as successful, or they're not successful. Maybe they're just listening to advice that they're getting from a chat room or from the television or from their Uncle Joe. They just don't have a very, very clear idea with why they're buying a stock. They'll get into a stock, it might start moving against them. They don't have any idea of where they're going to get out of that stock. There's no discipline when you don't have these fundamental rules in place in terms of, okay, what is my risk strategy here? Where am I going to get out of this stock if it goes against me? I like to know those types of things in advance before I'm in the trade. Not as I'm trying to kind of decide, okay, well, this went down a little bit, is where am I going to cut this loss? Those are the things that I want to be able to know in advance. So the thing I've always liked about technical analysis is very digital. With technical analysis, what I'm going to do, we're going to talk about one indicator of several hundred, but what I want you to understand with technical analysis, typically what you're looking at is something that is very objective and not subjective. And that allows us as traders to kind of understand, okay, what are we going to do? So today I'm going to kind of just, and the idea behind talking about MACD, again, I could talk about any type of indicator here. The reason I want to talk about it, MACD, is I want you to understand kind of like what methodology or technical analysis method looks like, and then and understand that it's objective. It's something that is duplicatable. It's something that's testable. So you might have guessed, because it's right on the slide, Gerald Appel is the person in this slide. He developed the MACD. He developed it over 40 years ago. He actually wrote about 17 books on trading, published a newsletter. It was called Systems on Forecast. It was in publication for 46 years. And he also published 5 books on photography, which I really like that as a kind of just a note. The reason I like to talk a little bit about MACD is very popular. It's objective, not subjective. It's pretty easy to interpret once you understand kind of the construction of it. And it helps you trade in the direction of the trend. A lot of times, it's not just a trend indicator. It measures trend and momentum, and we'll talk a lot about that. But in general, you've heard a lot of discussion, probably, that the trend is your friend, or befriend the trend, or a rising tide lifts all boats. MACD is a very, very good indicator to look at if you want an objective way to look at the trend. Okay. I'm looking over here for questions again. All right. There are some disadvantages to MACD that's prone to whipsaw because it uses moving average. It's a little bit of a lagging indicator. So those are some disadvantages to that. I want to talk a little, so let's go ahead and kind of dive into it. And does anybody have a stock symbol that they want to look at? And if you do, hurry and type it in the thing. What I want to talk about is when Gerald Appel created the MACD, he didn't use whole numbers. He used a 0.075 exponential moving average and a 0.15. In terms of how close numbers, that would pretty much match up to a 26-period exponential moving average and a 12-period exponential moving average. Jennifer, you got it. We'll look at TRNS. So I want to first talk about how MACD is constructed, okay? Because I think that helps you understand kind of exactly what you're looking at with it. Let me go ahead and change this chart to TRNS.O, Transcat Ordinary, okay? I'm going to go ahead and just kind of clean this chart up. It's got my default indicators on here. So let me go ahead and remove some of this stuff. Detach, edit, delete all. Okay. All right. Now what I want to do, I want to do that correctly first. Okay. Delete all the indicators. Okay. All right. We have just a clean chart. We come up here in Metastock. We've got we've got an indicator quick list. There's several hundred moving average or indicators in Metastock. And I promise I can talk and type at the same time, just not very well sometimes. I'm gonna go ahead and type in moving average, and I'm just gonna grab a regular moving average. I'm gonna kind of plot it on the chart just by dragging and dropping it off. I'm gonna go 26-period exponential moving average. I'll go ahead and click on, let's go ahead and make this a little bit bigger while we're in here. Green, okay. All right, there's our 26-period. Gonna do the same thing. I'm gonna add a 12 though, okay? Okay, and these are both exponential, okay? When we look at MACD, we're comparing, I'm gonna make this a little bit bigger as well. So let me kind of just double click on it. I'll go back into it, make it a little bigger. I just want you to be able to see it. And you would think I haven't done this a couple thousand times. I actually keep hitting the wrong buttons. Anyway, let me go ahead and grab a MACD too while we're talking about it. And we'll just go ahead. I'm going to go ahead and do a MACD histogram. Okay, and we'll just plot that here. Okay, with its normal signal line. Okay. Actually, I'm going to make this a little thicker too, so you can see these a little bit better too. So let me go ahead and kind of just thicken up the defaults, the weights. Okay. All right. You can tell it's pretty easy. We've really designed this software to work like other Windows applications. It's double click, drag and drop, that kind of stuff. If I wanted to calculate the MACD at value, what I'm comparing is a shorter term moving average to a longer term moving average, and that's it. Okay, so the calculation of the MACD is I take my shorter term moving average, this red line, and I subtract it from our longer term moving average, which would be this green line. And the result of that calculation would be the red line here, the MACD line, Okay. So let's just kind of talk about basically what that means, and I'm going to check my time just to kind of make sure I don't go over. Want to do fast to a solid. But since I'm comparing two moving averages, a shorter term and a longer term one, a lot of the same kind of stuff if I'm just doing like a simple moving average crossover applies. In other words, if we're in a period of time where the instrument we're looking at, in this case, Transcat, is falling, your shorter term moving average is going to be down below your longer term moving average, and it's going to give you a negative value. Okay. If we're in a sideways region here, I could make an argument that this was pretty sideways. What you're eventually going to have happen is that MACD is still going to stay low, but it's going to be a lot more shallow. See, because we're comparing two moving averages, it kind of gives us an idea of what momentum looks like as well. Okay. If we're in a period where we're starting to go up, like we've been going up recently with Transcat, then what'll happen is your MACD is going to rise. Okay, and going to give you then eventually a positive number. So in terms of just understanding that it's constructed off these two moving averages, we get a good idea of the momentum of the stock. How fast is it moving? If it's moving really, really quickly, you're going to have a real quick, sharp decline or increase of that MACD value. The next line I want to talk about, and I think I'll just stay out of the PowerPoint just to kind of walk you through this because I don't necessarily need to kind of lean on it. This right here is kind of what they call the MACD signal line. So we've got the red line, which is the difference between the longer term and the shorter term moving average. And then we've got basically the blue line, which is another moving average. By default, it's a 9-period exponential moving average of this line. Okay. And Gerald, when he created it, he called it the signal line. Okay. So right here is the signal line. The reason he called it the signal line is he would, if your MACD is up above your signal line, it would be in a bullish phase. And if your MACD is down below your signal line, like it is right here, then you'd be in a bearish phase. Okay. When it comes back up, it gets into a bullish phase. When it comes back down, it comes into a bearish phase. So MACD can help you identify trend. That's how it identifies trend. I'm going to attach a tool we call the Expert Advisor that just helps me illustrate this a little bit. I'm going to come in here and do MACD. Go ahead and attach this to the chart. And it's actually going to draw a trend line on the chart. Right here, up at the top, you'll see back. I'm going to actually move this down a little bit. Right here, you see bullish, followed by bearish, followed by bullish. Okay. When we're in a bullish phase, it simply means that we're trading up above our signal line. When we're in a bearish, it means we've dropped down below our signal line. Okay. He also called it the signal line because it is a signal. When that crossover happens, you see we just had a crossover just yesterday on what are we looking at here? Trendscat. We had a crossover of the MACD line yesterday, which issued a buy signal. And you can see there's a MACD buy signal in there. So the first way we can interpret the MACD is, are we above our signal line or below our signal line? That gives us a bullish and a bearish reading. In addition to that, when it crosses up above the signal line, that can give us a buy signal on the MACD. The MACD on Transcat literally generated a buy signal yesterday. Hopefully that's clear. Before I kind of talk about two other ways you can look at MACD, I just want to kind of talk about this histogram line. The histogram line basically is just a difference between the histogram, the MACD, and the MACD signal line. The MACD. So the histogram, if I took this value and subtracted it from this value, it gives us this value in the middle. Okay. And so when we have a crossover, you see this goes positive. When we have a cross under, it goes negative. It's basically another way we can visualize these two indicators. Okay. Bruce says I periodically fade in and out. Okay. Admin, if that's a problem that you're hearing, let me know too. And I do believe in Zoom, I can boost the volume just a little bit. Maybe. We'll test it right now. I also have a tendency. Okay. It looks like it's automatic. Okay. I'll try and talk a little bit more consistently as well. Thank you for the feedback. I have a tendency to kind of go through it, although I just lost my chat. Where'd it go? Huh. Oh, no. Okay. Okay. In any case, I hope you guys can still see your meet. Okay, there it is. It's back. Okay, thank you. Thank you for the feedback too, Bruce. I have a tendency to kind of talk this way and talk this way. I'll try and talk this way and look at you in the face. All right. So that's the first way we can look at MACD. Again, this is pretty objective, right? Like this isn't rocket science. We can duplicate this. We know what the settings and the indicators are. We know why we're getting a buy and a sell signal. Again, not subjective. We're not trying to guess what's happening. And that's one of the beauties of technical analysis. It's a study of the charts, not a study of kind of what the latest chaos is going to be with, I've seen a lot of crises in 30 years. Like the tariffs definitely caused a bit of an issue. Corona definitely caused. I was here for the housing crisis. I was here. And all of that stuff had different impacts on the market, but what we're looking for here is an objective way to analyze the trend that we can duplicate every time. Okay, very cool. Let me go back into my slideshow just real quick. And we'll kind of jump ahead a little bit because we talked about the signal line. We talked about this. Actually, Thomas Asprey actually developed the MACD histogram, the subtraction of the two indicators anyway. All right. So we talked about how you can identify the trend. We talked about the signal line. We've already covered that. The other way you can use MACD is you can use it to identify overbought, oversold readings. Okay. So since we're looking at momentum, we can kind of say, are we getting high in momentum? Is there an increased likelihood that we're going to see a reversion to the mean type of a play? And MACD does a really good job of that because we're looking at how fast something is rising. And the faster something goes up, the more likely it might have a little bit of a reversion to the mean play. Okay. And so what we're going to look at here, I just want to kind of come in here and identify a couple areas on the chart for you where we're detecting overbought, oversold. Now, I always want, when I talk about overbought, oversold, you can look at overbought and oversold on a number of different indicators. One of the things that kind of comes to mind when we start to talk about overbought, oversold is I always think of the statement, I'm kind of paraphrasing this from memory. I always think of the statement that the market can be irrational far longer than you can remain solvent. I should look up who wrote that. And if you know, say it in the comments. But I just want to kind of point out a couple areas on the chart where we've highlighted overbought, oversold areas. So right here, you notice where we start to highlight these bars blue, we're noticing an overbought, oversold area. Here, when we start to point at blue, we're noticing an overbought, oversold reading. Here, and you get the idea. Every time where we're kind of coming in and pointing out these blue areas, we're saying we might be in an area that's overbought and oversold. Now, with overbought, oversold, I would encourage you to always look for a confirmation, okay? Because again, the market can stay irrational for longer than you can stay solvent. But you can use it as kind of a leading indicator that it might be time to start getting a little bit more protective, or maybe move your stops or something like that, or even be looking for a reversal, but you'll want to confirm that with another indicator or price action, right? And I like the way that we've actually worded that in our commentary. So I'm going to come in here, I'm going to open up what we call the expert commentary because it can kind of help you understand these methods and these indicators. So we talked about the signal crossover. You see this little red arrow is pointing right down on today. That means it's looking at today. It says it's bullish right now and had a crossover yesterday. Okay. If I kind of move back in time, right here to this last blue area, I can kind of show what it said when it was overbought, oversold. And I think I didn't word this, but I think it's worded well because overbought and oversold, I think, always requires a confirmation. Right now, in this particular blue spot right here where we're looking at, it's saying that the MACD has reached an overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before considering a short position. So again, it's just an early warning. You could also use it a little bit more defensively. You could take profits. You could move your stops if this is something that you're using. But again, it's an overbought, oversold reading. Okay. It has been pretty good here. We did get an overbought, oversold reading here, and it kind of bounced a little bit. We got one a little bit here. It kind of went down more and then bounced up. And so again, you want to wait and use confirmation. That's two. That's the second way we can look at MACD. Is it overbought, oversold? The first way was signals. The third way I want to talk about actually is divergence. Okay. And I'm going to come back into my PowerPoint real quick. Okay. We talked about overbought, oversold. I talked about Dr. Alexander Elder before. One of his books is called Come Into My Trading Room. The other one is called A New Trading for a Living. Both of those are great books. I'd recommend them. He's a great technician. I love having him in. We'll have him in and we'll do presentations and talks with him. He has a pretty interesting take on the market. What he has to say about divergences, and he loves MACD divergence, but he says divergences are among the most powerful signals in all of technical analysis. When prices make new highs and MACD fails to make new highs, this is called a bearish divergence signal. Okay, let me go ahead and kind of illustrate what that means. I'm going to come in here. I'm going to kind of look at where we might have had a divergence, or how we would kind of look for divergence. And let me kind of just, one of the things that I will kind of look for is across. If I'm looking for a bullish divergence or a bearish divergence, I'll look for a cross down below 0. Okay, so right here we have a MACD peak. We cross down below 0, and we're kind of coming up to another peak. Since this peak hasn't formed yet, or maybe it has, we don't know yet, I'm going to kind of come back a little bit to this one, and we'll start here. So here we've got a little bit of a peak of MACD. I'm going to call that peak right here. Here we have another peak of MACD. Okay, and what I'm going to do is I'm going to grab a horizontal tool, or a trend line tool in Metastock right here. I'm just going to draw a line from this peak to this peak. Okay, that's all I'm going to do. Okay, that's obviously pointed upward. It's pointed upward. Okay, let's look at what price did at about that same time. So I'm going to grab the same trend line tool. I'm going to draw a line from this peak to this peak, and that's pointed up as well. That's not divergence. That's actually convergence. Okay, but if we were looking for something with divergence, what we would look for is something more similar to this. Let's say MACD peaked up here. Then we had a lower peak. Let's say we peaked down here for MACD. Well, we had a bit of a peak, and I'm kind of making an idealized case for MACD. Let's say our price peaked here, but that wasn't supported by MACD. Dr. Alexander Elder would call that a bearish divergence. He would call it the breaking the back of the bulls, and it would be a bearish signal. You're making a new high in price that isn't supported by the MACD. So that's the third way that you can use a MACD. All right, there you go. That's it. Now, a few things just to kind of wrap. Let me look at the time. Okay, we're doing fine. Again, everything here that we were, also, if it does find a divergence right here in the commentary, it's going to tell us a divergence was found. So this expert advisor is actually pretty cool because it helps me understand kind of what the signal is, why I'm getting the signal, if we're overbought, oversold, and if there's divergence. One of the tools that I just literally fell in love with was the expert advisor, because I could attach, there's different experts. We have a few hundred different systems in there. One of them just identifies candlestick patterns and tells me what a doji is and what that means on the chart that I'm looking at and that kind of stuff. There's tons of different stuff that can help you educate yourself on technical analysis. Okay. Now, one of the things that I'll kind of really point out, again, I've said this a couple of times, but I think it's important. Everything we've talked about here is objective. Okay, we haven't talked about whether it works or not. We could look at that real quick. It's objective. We had a sell signal here. And if we would have sold here, maybe went short, bought here, that would have probably been pretty good. If we would have bought here and sold here, that wouldn't have been so good, right? If we bought here and sold here, that would have been good. If we would have sold here and bought again today, that wouldn't have been good. But we kind of have a good idea of exactly what our performance could look like because it's objective. We can kind of go in and see it, and everybody in the room today can come to the same conclusion, right? Since it's objective, we're not guessing. We're not trying to make assumptions. We're not trying to say, okay, well, are they going to raise rates? Are they not going to raise rates? What is Trans doing? What's their business model? We're looking at the chart and say, are investors buying this? And a pure technician would say that technical analysis is a shortcut to fundamental analysis because everything is reflected in the price. Okay. Now, if I'm looking at this from a perspective of I can identify exactly how profitable this is, I can understand how well MACD might work on Transcat. And there's also a couple other 100 systems that are in Metastock that could compare it to. And so let's go in here and just kind of take a look through how MACD would perform on Transcat. Is that the best indicator? Are there other indicators that are useful or would be more useful, less useful? Let's find out. And that's a tool that we call system testing. I'm going to go ahead and click in here. As we call our Power Console. It just allows us to go in and kind of use some of the powerful tools in Metastock. I'm going to click on the system tester real quick. I'm going to grab these ACT systems because I know those are included. With Metastock, you can actually go in and fairly easily create your own systems. We're not going to do that today because, oh, well, I don't have time. But let's go in and I'm going to include ones that I know are included in Metastock, like the Ichimoku Master. We're going to go ahead and include those. all of these PS systems. I'm just going to select those all. These PS systems are pretty cool. They've all been kind of tested over a lot of data for profitability, and there's about 200 of them ish. I'm also going to make sure I include MACD because we were talking about MACD, and we'll want to make sure we've got the MACD histogram, the MACD. I'm going to use the one for the expert systems as well. Okay. Search and nav has also gotten tons easier in Metastock. And so right now I've got about 91 systems. There's more that are in Metastock. Those are the ones I'm going to go through because what I want to do is show you how to use it and kind of give you an idea of how to use it. So right here, I've got the systems that I'm going to test. There's 91 of them. You can see that number here. And what I'm going to do is we're going to welcome back, Dennis. It's good to see you. And now we're going to test that on the stock that we had before. And the stock that we had before was TRNS. I just saw your question too, TRNS. I'm going to start. I saw another question in there about Y26. I also want to point out you can test multiple systems against multiple stocks. We have one of the, I'm biased, one of the best testers that are available in the market. So let's throw in Meta. We're the original Meta stock, but Facebook can go in here. And I don't know, iBit. Just because Fausto was talking about Bitcoin a little bit. So we're going to test these 3 stocks. We're going to test them about these 91 methodologies. What I'm going to do here is we're going to do a hypothetical test. So we're going to go back in time, and I'm going to kind of limit this down to 500 days. That's about 2 years, not quite 2 years, but about 5. And we're going to take long trades and short trades. So we're going to do both long and short trades. Okay, daily. In my trading simulation, just so you understand how this works, I'm going to, it's set right now to 100,000. I'm just going to leave it there. I'm going to trade based on a percent of available equity. I'm going to actually change this to 75%. You can also change it based on trading a number of units or transaction costs. You can do those as well. In broker, I'm going to leave 0 as my commission for ins and outs. And trade execution, what I'm going to do is I'm having it do it realistically. With the MACD signal or any of the signals that it's going to get, it's going to wait till the end of the bar. And it's going to wait to the beginning of the next bar. So if it gets a signal today, it's going to verify that that signal existed at the end of the day by waiting until the bar closes and enter at the beginning of tomorrow. You can change that if you want, but that's how I'm setting it. Okay, we'll go ahead and test this. Okay, and so it's going to go through a number of different simulations here, and it should be running a bit of a I did something a little bit funny. So let me see if I can kind of do this real quick. And it should be running the system test right now. Okay, so we'll see exactly what happens when the report comes back. Okay. Usually it kind of gives a little bit of a status display here. Not important if it doesn't. It might be behind my PowerPoint or something. This isn't my computer, so sometimes somebody does something weird. Did it go? It is going. Okay, very cool. The question came up earlier, and I appreciate the question from James. He wanted to know why 26 and 12. I don't really know why. Actually, when Gerald Appel developed it, he used the 0.76 and 0.12, which are as close to 26 and 12 as you can get. Okay. Why he didn't use a different number, or maybe I'm sure he played with it quite a bit, but those are the numbers that Gerald Appel settled on. And so that's why it's 20, well, it's 0.76 and 0.16. So there you go. Let me see if I can kind of get to the report here, because I think it's probably done by now. It usually gives me a little bit of a simulation status, but something went a little funky. That only happens when you're doing demos. Let me go ahead and go down here. The last one I'm showing is 4.2 though. So what is going on? I have this little thing. Oh, I think this annotate button might be. Something's a little funky. And I think it's maybe still running. In the purpose of going through and kind of showing you this, I'm going to go ahead and kind of just go to the report. And or a report. Looks like the last one I had was done in here on April 2nd. Go ahead and click on view. And we'll just kind of show you what this would look like. So this was this particular system would have been done on one stock. We'll know what that one is in a minute, and not multiple stocks, but it just shows average net profit. So I sorted it by average net profit. Over here, you've got green bars. Okay. Over here, you have red bars. The green bars performed in the test period, the red bars did not. Okay. So if I'm looking at this particular system, I actually kind of want to drill in real quick. This was done on CMP and Enphase. I actually remember running this one in the office in a thing. But if I'm looking at this, I'm going to go back a little bit. I'm going to go ahead and refresh this screen a little bit. Okay, so that we can kind of see it again. Our best performing system out of all of those systems would have been the Ultimate Oscillator. If you're not familiar with that, I know who it is. It's Bill Williams. Okay, he created it. We've got the Bull Power, Bear Power. We've got the MACD. There's one that it's in the top 3. I didn't teach you a crappy indicator. This one's in the top 3. But we kind of get an idea of how well this performed on the stocks that we tested on. So in particular, this Ultimate Oscillator by Bill Williams had a 41% profit over average. The best profit was 13,000, while the worst profit was about minus 1,000. In the test period, it had about 114 trades. Okay, I'm not sure how long the test trade is because I'm just showing one that was already run, but I can compare that objectively to the next one. This is the Bull Power, Bear Power system, number 3. It didn't make as much money. It was 38% on average as opposed to 41. But the thing I'd like much more about this one is it only traded 16 times. So from a perspective of 16 versus 114, I know that as a busy professional, this is something I'd be more interested in. Okay. And you can keep going down the list. The MACD had about 4 trades. It was about 31%, with its best being 11,000 and the other stock being a negative performer. So we can kind of get an idea of how well this worked. And because we're comparing it over multiple stocks, in this case just 2, we can get an idea of what stocks it works well. And we could, if we wanted to, come in here and do a big system test against like the S&P 500 and get a really good idea of how something worked in a very broad base. And I think that's helpful. But from a perspective of that, we talked about MACD. I'm going to say that based on the amount of times it is traded and my personal trading preferences, I would take the one right here, the Bull Power, Bear Power number 3. So just go ahead and click on View. We had Enphase Energy that was in the system test and center point. I'm going to click into Enphase Energy and take a look at that. And it's going to give us a very detailed breakdown, or breakdown, depending on if you want to say it right or not. It'll compare it to buy and hold. Buy and hold actually lost money, so we did way better than buy and hold. It'll compare how many profitable trades versus unprofitable you had, 11 to 6 in this case. It'll tell you what your average profit is, what your highest profit, your lowest profit, your biggest loss, your average loss, your lowest loss. It'll tell you how many losses you had in a row. There was 2 in a row. I'll give you a bunch of information about how well this worked on this particular stock over the course of our test period. And in this case, it was April 5th through 2023. So it was about 2 years to April 2nd of 2025. Okay. If I kind of take a look at this and I like it, I can also look at the equity lyric client curve, which we can kind of see how our equity grew over time, see if we like it. If I still like it, I'm going to go ahead and plot it on the chart, which will open up the chart for me and display the equity graph. I'm going to go ahead and close that. Close, and then I'm going to look at my timer quick. I'm doing okay, but I need to hurry up a little bit. Okay. Here we have an idea of exactly where all the buys and sell signals would have been on this Bull Power, Bear Power 3. Okay. I'm going to kind of zoom in just a little bit. We're looking at a lot of data here. Okay. If I want to understand why we're getting the buy and sell signals when we're getting them, I'm going to go ahead and just first, this is the Bull Power, Bear Power 3 system. I'm going to delete all the symbols on the chart just because when I put the expert on there, it's going to be on there. The expert that we had tested that had worked really well was the Bull Power, Bear Power 3 system. So I'm going to just search for that real quick. I swear that it was just that. Okay. Bull Power, Bear Power 3. There's 4 different versions of that. I'm going to attach that to the chart. We can see exactly where the buy and sell signals came in. So we had a sell here, we had a buy here, we had a sell here. I'm just going to go back to the buy signal. And if I want to understand this system a little bit more, which I'd encourage you to understand your systems that you're using, it's going to say the concept of bull and bear power was developed and introduced by, Dr. Alexander Elder. Bull power is calculated by doing this, subtracting a 13-period exponential moving average from the high price. This is typically displayed. It's explained, I'm not going to read this whole thing out loud, but it's explaining just where the system is from Dr. Alexander, how it's generating buy and sell signals, and what to do with them, and how to look at it. So from a perspective of this, we spent 30, 35 minutes talking about MACD. There's several hundred indicators. And I like the ability to go and say, okay, how did this perform? Is this an indicator that worked well on this stock that I'm looking to trade, or did it perform poorly? Can I focus my education on just the indicators and the methods that work best? And I did say education on purpose because I always think that when you're trading for discipline purposes alone, it's helpful to understand why you're trading. But by doing a system test, I understand what my profit is, what my drawdowns are, what my losses are. All of that stuff is kind of illustrated. Okay. The last thing I want to talk about before we kind of start to wrap up is scanning. If I do find something that I like, whether it's like MACD or the bull power, bear power, or whatever it might be, I can scan for it. I can scan all the U.S. stocks. I can scan all the international stocks. If you're not using us or if you're not joining us from the U.S. and you want to trade Indian stocks or Australian stocks or Singapore stocks, we cover a few hundred exchanges. We get all of our data directly from London Stock Exchange Group, which they bought kind of the Reuters infrastructure from Blackstone just a little bit ago. And you can literally use any data that you want. But just to show you how easy this is, I'm going to come back into our power console. I'm going to go to the scanner, and let's just say I wanted to find a MACD buy signal. I go to MACD right here. Let's just look for a buy signal, okay? And then if I wanted to scan, right now I've got the Dow Industrials, the NASDAQ, and the S&P 500, maybe another couple lists, but I can very easily say, I want to look for this. I want to look for it in this market, go. And it'll open up a scan window. It'll start doing that, and it'll tell us exactly what stocks have a buy signal. And it's chunking them through them pretty fast. It just lists them out. We can save that list. We can go open up the charts. I've been trading for, been working here for 27 years. I've been trading for probably about 15 to 20 years now. And what I would say is I scan every day. I scan sometimes twice a day. And for me, the ability to kind of ignore those stocks that don't have an opportunity and focus on the ones that do, super beneficial, super helpful. So let's kind of go back in here. And I just want to reiterate, we have a kind of a special offer that's available for you. Metastock has been rated the best software in its price category this year. It was rated that for the 32nd year in a row. Okay. All of our software, we used to have like an end of day version and a real-time version. That doesn't happen anymore. We have all of our software is at least delayed. Our delayed version is called Metastock DC, and it's delayed on a 15-minute basis, which means you can do everything that you can, everything that I showed you just now in DC. Okay, I want to kind of talk about the difference between the two products just so you can understand. We have the Metastock RT is the real-time version. Starting cost on that is $210 a month to $265. Depending on kind of what instruments you want and that kind of stuff. And that's all. That's all you pay. That's it. With Metastock Real-Time, we also include, I mentioned the Reuters infrastructure, an institutional quality newsfeed and data feed. Both comes with the same data feed, but the news that they put together, the news infrastructure they put together, and is supported by something like 2,000 reporters and 200 different news bureaus. They spent $1 billion designing the interface. It's very, very cool. If you were subscribing for news and fundamentals from a broker, you're probably getting a very similar product. They developed it to compete with Bloomberg. And to give you an idea of Bloomberg, I think that cost on that is about $1,300 a month. This is 210 and it includes everything I showed you, plus a whole bunch of research and news and anything you want to know fundamentally. Okay. The other version that we have is $74.95 a month. It's our Metastock daily chart version. It'll look at daily, weekly, monthly. It gives you an updated bar during the day. You can kind of go in and run scans, everything I did today, basically. And it's only $75 per month. What we're going to actually do as part of kind of getting you set up is we're going to include quite a bit of training to help you get started. We have a number of bonuses. The first one I want to talk about is a really, really cool bonus called the Ichimoku Master. If you're not familiar with Ichimoku Master, this is something that's included as part of the product. It's a product that used to retail for $400, but helps you understand the Ichimoku method. It allows you to scan for buy and sell opportunities. The Ichimoku is very, very good at helping you determine bullishness and bearishness on a chart, shows support and resistance into the future, shows you the future expected trend, helps you identify potential reversals. I should probably correct that spelling on that. That doesn't seem right. Okay, in any case, we also are going to include a bonus gap identification system. Steve Bigelow said a lot of people would stay away from gaps because they didn't understand them, but it was a very, very powerful signal of investor sentiment. With our gap identification system, it's included in Metastock. It's a $300 value, helps you identify and scan for gaps. It includes a volume verification function in there and has a simple expert commentary just to help you understand what the gap is and what you should be looking for with it. Dennis says, I love technical. Dennis, we should be friends. We are friends. I love technical analysis. That's my go-to method. Michael Murmer, the late Michael Murmer, wrote an add-on that was very popular with Metastock called Expert Trading System. We call it ETS 2.1. It's also included. It's a simple, powerful trend following system. It helps you trade on the right side of the trend. It helps you scan for entries and exits. Helps you test. Yeah, it has a tester in there that helps you understand the best candidates. It's an included bonus as well. So lots of stuff that's included with Metastock. Another thing that is an included bonus is Jake Bernstein's expansion contraction. It's really good at identifying a lot of things. I call it the Swiss Army knife of indicators. Long-term trend and trend strength, short-term swing and swing strength, expansion contraction. So this is an overbought, oversold, support and resistance, divergences, breakouts. All this stuff can be found with this new included indicator from Jake Bernstein. Jake, I think he placed his first trade, and my memory isn't great, but I think he said he placed his first trade in 1969. It might have been 67. Tons and tons. This is a very, very cool inclusion. It's just a bonus that's included. So it is a powerful toolbox. We've been developing it. One of the things I love about Metastock is like it's $75, right? I've seen so many tools come in that you just quickly grow out of. This is something that you can create your own scans, you can create your own systems, you can create your own alerts, all this stuff, that kind of stuff. Again, it's been rated #1 32 years in a row, but because it's a toolbox, the better you understand how to use those tools, the better it's going to work for you. So I want to include our Unleash the Power of Metastock. It's normally $99. I want to include it for free. It includes 14 new videos, and of course, it comes with a PDF, kind of help you kind of get everything started. And it goes everything from like how to open up charts to indicators to scanning to testing, all that kind of stuff is included. Okay. Another thing we do that's just a really good bonus is what we call our white glove service appointment, where we sit down with you. We'll kind of, if we need help installing the software, we'll make sure it's installed. They'll give you a guided tour of Metastock. They'll answer any questions that you have. They do a really, really good job. The reason we kind of implemented this a few years ago because Metastock is a powerful tool. And the better you can use that tool, the more likely you are to get better trades. The more better trades you get, the more you're going to like Metastock and keep going with it. So this is just complimentary. We want to make sure we get you started on the right foot, because a lot of our customers have been with us for decades. And if you become our customer, we want you with us and happy for decades. With the software, we give unlimited support. You can call them, you can text them, you can chat with them anytime that you want. There's never a charge for that, unless you want them to design a formula. There are some custom programming services that are actually $30, not very expensive. But anytime you have a question or need something answered for you, they're there and they do a really good job. Actually, we keep more people on our support desk than we keep in sales and marketing combined. And there's many weeks where on their customer exit surveys, they get 100% across the board, people happy with them. So very good bonus. To recap, what I'm going to do for the offer today is if you buy a month, I'm going to give you the second and the third month for free. That's going to include Metastock DC19. It's going to include the delayed market data. It's going to include the white glove installation and support. It's going to include the Unleash the Power of Metastock. It's going to include the Jake Bernstein expansion contraction, the gap identification, the ETS, all that kind of stuff, the Ichimoku Master. I might have mentioned that twice. All that stuff, if you bought them separately, would have had a retail cost at $1,320, $75. Okay. That'll get you going with Metastock for 3 months. All that stuff is yours to keep. If for some reason at the end of, that's $25 a month. That'll have you running until August 21st. And if for some reason after the 3 months you just don't see how Metastock can help you find and identify those better trades, cancel it. There's no ongoing commitment. I've been using it. I'd use it every day. It helps me identify those trades quickly. Helps me make those actionable decisions I need to make quickly. Because they want me to work here too. So I just say that a little bit in jest. I love working here. It's a great software. It's a great company to work for. It's a great software to represent. So if you're interested in doing that, give us a call, 800-882-3040. You can chat online with us, metastock.com/sales chat. And you can also just go to metastock.com/CTU, which is right there in the chat. As I kind of get out of here, I want to say thank you to Fausto for having me. Really appreciate him over the years. Really, and thanks for being here. I hope you'll learn something. All right, that's all I've got. Thanks, Jennifer.
Thanks a lot, Jeff, for coming, and happy Memorial Day for you too. And look forward to having you back again, buddy.
Right on. Thank you, Fausto.
Good. All right, everybody. So as we bring in our next speaker, John Hutchison would be with us for first. We'll be here in the next. He's logged in, but we're going to give you guys a few more minutes to just take and follow up Jeff Gibby on his promo here, and so you have time to go sit there and register, find out more, and then in the meantime, couple of little updates on the market. I don't know if you guys have been watching, but some bad news came out in the market, and the Dow is down about 680 points. S&P's down 70. Something about these chips with China, with the United States, something like that. And market didn't like it too much, so again, a lot of bleeding going on. So hopefully everyone is keeping an eye on that. But that's why we're here, because we had to learn how to benefit from these things. So let's just give everybody a minute here and go back and just get ready for our next speaker. So let me just share the screen and just give me a minute. All right, we'll get started in about 2 minutes. All right, traders. Let me just get things going here and rolling along. Hopefully, everyone is hopefully having a little bit better weather than me. Now that not only is the market going down, but rain here in New York. Weather looks pretty bad. I don't understand. It's pretty funny, but usually say April showers bring May flowers, but kind of worked opposite. We're getting a ton of rain in May, nothing in April, and looks like summer's coming late. But anyway, regarding about what's happening in the market, just let's just say this is the beauty about learning, because these things do happen, and good traders need to know how to control these big losses. And when things reverse, got to know, is it a shake? Is it, is it maybe some opportunity to buy more, but knowing when to get out and take some of those profits. But that's why we have all these great speakers today. So why don't I just want to step in here and just once again just introduce our next biggest speaker, which I'm actually looking forward to hearing from him because he was on my podcast and I got such a great response from all the listeners that learned a lot. Now, he has a very unique way of teaching or his style of teaching options, which we're going to talk about. So I'm really really excited to introduce someone that has been helping traders and investors for a long time. His name is John Hutchison. He's a partner at Trader Reserve, where he's worked and created smart trading strategies that help people grow their portfolio and earn steady income, especially with the stocks and options. One of the coolest things that John teaches is how to sell options to create a regular revenue, which is what he was talking about in my podcast. And basically turning in the market into something that can put you in a weekly profit in getting paid. So it's super useful stuff, especially if you're looking to build consistent income through trading. Now, John's not just into trading. He's also known for a ton of marketing, writing, building businesses. So he's even a member of the Forbes Finance Council, which is a group of top finance experts that share advice to help people succeed with making money. Now, before we start Trader Reserve, John worked at other trading companies called Profit Run, where he helped people become better and safer traders. And so, yeah, he's been in the game for a long time, really knows his stuff. And I'm really pumped to have him back on again. And I'm really looking forward to hearing what he has to say. So let's give a big warm welcome to John Hutchison.
Thanks, Fausto. Hey, it's really great to be back and to see you here in the month of May. I know usually the old adage is sell in May and go away, but I think this year it needs to be learn in May before you go away. It's been a crazy year. I don't know about anybody else, but outside of 2008, 2009, I cannot really remember a year where the first 6 months, not even 6 months, first 5 months have been dictated by uh, extreme roller coastering in the major indices, and uh, yeah, it's going to be a fun ride for the next 7 months of the year. But um, before I kick off my presentation, two things to remember: markets always correct, one way or another. They always correct themselves. They always adjust. The hardest thing to do as a trader, as an investor, is to look past the news and the noise. And right now, the real difficulty that all of you have, that even we have, is the news is creating the noise. So if you can look past the news and look past the noise, uh, in time, you'll be okay. And the second major thing is, and we've been talking about this with our own members and traders, is in times like these where things are much more volatile, treat your trading, your profit measurement, if you will, just like a Fortune 500 company would. Quarterly earnings, right? What is your profitability on a quarterly basis, not on a daily basis, not on an hourly basis or a weekly basis? Lengthen your assessment of your overall profitability, because that allows you to psychologically remove some of the fear of a losing trade or of a series of losing trades, and balance yourself out over a longer stretch of time. So for whatever it's worth, fortune cookie advice before we get underway, let me drop my screen up. And let's get underway. I just created this concept of this shortcut to $1 million. The $1 million is foundationally, it's the target that everybody sets for retirement. So that's why I'm using this. But I fell into something kind of by accident, and I'm going to sort of put two things together. One is an investing concept and one is a trading concept, and show you how they can work cooperatively. And what you will find, as Fausto said, I do things differently, so please forgive me, but you're not going to see charts or indicators or things of that nature. In fact, you're going to see something really weird. You're going to see a thermometer, water, and hot chocolate. So depending on what your thirst is today, we will fulfill that, but we will get to that here in just a little bit. If you don't know Traders Reserve, and 99% of the world does not know Traders Reserve, and that's okay. We've spent the last 15 years providing education and trading services to self-directed investors who want to generate income from selling options. We provide content 3 times a week on our primary website, tradersreserve.com. We also provide additional content, ideas, and reports via email newsletter. Now you know us. You've probably seen this lovely slide multiple times throughout the day. Trading involves risk. Trading involves risk of loss. It involves profits that can't be guaranteed. Nobody can tell you you can make money. Nobody can tell you you won't lose money. Nobody can ensure that anything wins 100% of the time. So now that we're all friends on that front, the one thing I will ask is, when I share trading results a bit later in this presentation, they are from a live money IRA, a real money trading account. You, however, should consider those results hypothetical, because you did not make the trades. Just because we did, and just because we made them in a real money account, doesn't make them, I don't know, real, for example. So please treat them, even though they are from a real money account. I'll remind you again when we get to that point, but please do treat those results as hypothetical. What are we talking about today? I'm talking about a shortcut, $1 million shortcut. And to get to that, I'm going to share with you the dead simplest investing plan, literally proven to reach $1 million. It can't be argued with. This is both amusing and I think it's cool, but I'll let you decide. I'm also going to share with you the obvious catch, because you know as well as I do, there's always a catch. And then I'm going to share with you how to use options to solve the catch, how to overcome that hurdle. Share with you why this works in every market condition, including current market conditions. Show proof that this works. Share with you the risks and rewards, and then let you answer the only question that you need to ask yourself. I can't answer it for you. Only you can answer this one question. And I'll share that question with you at the very end of this presentation. This shortcut today is for anyone who has an investment portfolio, $100,000 or higher. You can tap into what I'm doing with less money. It's harder to do, but setting that sort of bar, $100,000 or higher, just gets us on solid ground. For those of you who are far behind in retirement needs or goals, as most Americans are, larger portfolio investors, and this is the fun part, I'm talking 7-figure portfolios. These are folks who can use this approach as a hedge to a percentage of their portfolio, a way to hedge your portfolio against bad things happening. It's also for people who are late retirees. Like, you just retired, maybe you're in your late 60s, your early 70s, but you still need some income and security from your portfolio. And of course, the early retirees, the retire early people, anyone who wants to get to $1 million before retirement. And let's clear one thing up. The $1 million goal here or objective, it ain't like getting to Disneyland and you get out of the car and you say, we're here. It's just it's a starting goal, because I guarantee anyone who's ever made it to $1 million, the first thing you think of is, how do I get to 2 million, right? So it's just an initial goal. You're not limited here. It's not the end point. It's just a point on your financial journey, whatever that journey is. But this chart is still the problem in America today. The average retirement portfolio in the US is still below $180,000. So it isn't anywhere close to $1 million. And yet You could research. I've done this across Google. No shortage of research that says you need 1.25, 1.5, 1.75 million dollars in order to survive retirement. And most of those models assume portfolio drawdown, meaning you're taking your money out in order to support your income needs in retirement. One of the fascinating uh, points that you'll discover from today's presentation is you don't have to draw down your portfolio because your portfolio can actually pay you in a different way. But at the end of all of this, what I keep finding is that roughly 3% of Americans have reached $1 million in retirement assets. That's it. So 97% of the people have not. That's too many. So how can we fix that? Well, we're going to start with this idea of the simplest investing plan. And let me be blunt. It, on its face, it's laughable. Because it's so simple. I've tested this concept with a couple of people, and their responses almost prevented me from sharing this with you. But I'm going ahead anyway, because you may even consider like, okay, this is a waste of time. But I'm telling you, if you listen to this, it is not, because what I'm about to show you is both historical and mathematical fact. It is not a strategy, not an algo, not artificial intelligence. It is not some newfangled technical indicator. It's not a shiny object. It's exactly the opposite. It is the analog to the digital. It is old school with a little bit of new school sprinkled on top. Now, what is that plan? This is the simplest investing plan process. 3 steps. Make one simple investment using the second safest investment on the planet. I can tell you that it's even backed by Warren Buffett, and I'll prove that to you in a minute. You make this investment one time each year on the first trading day of each new year. That's either January 2, January 3, or January 4. Those are the only 3 days that can qualify as the first trading day of the new year. And then you repeat this process every single year for between 5 to 30 years. And that will get you to a retirement portfolio worth up to $1 million. In order to use this process, just remember these 3 simple numbers: 10, 30, 7. It ain't the Powerball, but the lottery at the end could be worth more for you in retirement. Now, what does this formula mean? This is the process. This is the formula. Let's put it all together real quick. The 10 is $10,000. Make one $10,000 investment each year on that first trading day of the year in one ticker, which we'll come to next. You repeat that process for up to 30 years, and the 50-year compound annual growth rate behind that one investment is 7%. That's as long-term as I can realistically leverage. But if you follow this process over the course of 30 years, $10,000 a year over 30 years, getting that 7%, this is what happens to your money. It grows to potentially $1.1 million in up to 30 years. Now, in shorter periods of time, you can do certainly much better than the 7% this investment has. And it continues to be the best, the simplest and best plan that I keep coming up against or for anyone who's just, even people who are just getting started. So if just take this plan and share it with your kids and your grandkids, and they're going to be in better shape than we ever were, because we never had this kind of knowledge or the level of knowledge that we have these days. And I told you, it's one ticker, one investment, and that's the S&P 500 index, the second safest investment on the planet. Specifically a low-cost S&P 500 index fund, and I'll explain that in just a minute. But I told you, it was a little laughable, right? Overly simplistic, and yet, wait for the next couple of slides. Number 1, it's backed by Warren Buffett. In the only media interview in which Warren Buffett has ever disclosed the dissolution of his estate upon his death, which was March of 2024 to CNBC, he said that he has directed his estate to invest 90% of his wife's inheritance in a low-cost S&P 500 index fund. 90%. Now, let's be honest, we're talking about billions of dollars, so I'm sure his wife is going to be just fine. You, on the other hand, I don't know. But the second part of that interview, Buffett said this: given the choice between a 10-year treasury bond and a 10-year investment in the S&P 500, he'd buy the S&P 500 in a second. And the numbers back him up, as do the numbers behind the simplest investment plan. Because over the last 10, 20, and 30 years, if you had done nothing more than this, $10,000 a year, once a year for 10, 20, or 30 years, your portfolio would be worth anywhere from $259,000 to $2.4 million. Surprised? And that's including the dot-com crash, the recession of the early 2000s, the great financial crisis, the collapse in 2018, the pandemic in 2020, and the bear market in 2022. And yet, doing nothing more than that one thing every year for an extended period of time, $250,000 to $2.4 million. And let's go a different direction using just an example index fund from Vanguard, their Admiral Shares Fund, which is symbol VFIAX. They need to work on that. That's too hard to say quickly. Their returns mirror that. This is a 15-year table of the VFIAX's returns with the same $10,000 investment once a year, every year, over the 15 years since 2010, nearly $500,000. We don't have to make life complicated. Sometimes simple is better. Sometimes simpler is easier, and sometimes simpler is more profitable long-term without necessarily negating or affecting the other trading that we want to do in the short term. But at the end of all of this, when we look back at this problem, it's clear that people aren't doing this. And my question really is, why aren't people doing this? This is what got me going down this rabbit hole, asking this question. If the numbers behind the S&P 500 as an index fund are historical and mathematical fact, which they are, why aren't more people doing this? There are two reasons. Number one reason is most people don't have the extra $10,000 per year to invest because they have been trained to believe that the money that they invest in the stock market must come from their income or their paycheck. Well, it's not true. And I'm going to show you that it's not true in a minute. But if we can break that one belief that there's a better way to make those kinds of investments, and you have another path to using your capital to continue to grow your wealth, then we're on to something. Now we're working toward a betterment for your future, simplifying things, keeping it easy. But the question really comes down to, why don't more people have that $10,000 to invest in? It's because they don't know how. So if I could show you how to create that $10,000 per year, just that small amount, right? I'm not talking about six-figure incomes here from a portfolio. I'm talking about 10 grand. I mean, 10 grand is what most of us made the first year we got a job coming out of college. Well, I did anyway, but that took me longer. But if I can show you that, then what does that change for you? How can that change for you? And the way that we're going to do that is with the shortcut, which is selling options for income. Now, for many of you may have sold options, may have bought options in the past. Selling options is a little bit different. So I will walk you through some of the basics, some of the foundations here that you want to know, because it is a little bit different. And we'll start with the who. Who should consider selling options for income? I'm going to start at the bottom of my bullets here. And for options traders out there who are typically options buyers, the advantage to moving to the other side, to moving to the selling side, is you become the house. As an options buyer, and there are many strategies out there, but as an options buyer, you know that it can be difficult sometimes to achieve reliable profits, in part because options buyers are typically forced into the belief structure that they've got to get a 100, 200, 500, 800% gain, or the trade, or they lose money. That isn't true. It can happen that way, but it's not true. But that's one reason why options buyers tend to lose more often than options sellers. The second issue for options traders is the reliability of income or profits from their trading activities. And selling options has a higher probability of success. So for an options trader, there's value in moving to the other side call it the dark side if you want, of the transaction between the buyer and the seller. For people who are working investors, near retirees, or people who want to retire early, one of the most important factors that you will learn and or discover here is how to leverage your portfolio for faster growth. That's accelerated portfolio growth by using what you have to generate income that can then be reinvested into your portfolio. It could be reinvested into the S&P 500 index fund once a year, every year for up to 30 years. And for retirees, it is a way to boost your income above safe money asset low returns. I'll share that with you here in just a couple of minutes. Or to avoid the high risk of high yield stocks. Those are usually the stocks that have 12 to 15% dividend yields. You buy them and then you discover the stock falls 30, 40, 50%. So the yield looks great, but the stock price and the value of your money afterward, not so much. So any of these groups should consider selling options. And as I stressed for retirees, this is the biggest problem for you as a retiree. Safe assets, like safe money assets, savings account, money market, CDs, treasury bonds, safest investment in the planet, and even the S&P, second safest investment on the planet. It takes so much capital to generate any relevant income that it makes it more difficult for you to do anything beyond these steps to supplement your income. Or if this is your primary source of income, you risk living at or just above the poverty level, which nobody wants to do that in retirement. But this is between 100, I mean, you're looking literally at $100,000 per category here. It takes $500,000 in these categories just to get $21,000 a year. Can you do better? Yes, you can. And that's why we're here. That's what we're here to discuss. So some realities here. Most traders have bought options and lost money. I've done these webinars for over 15 years and on selling options. And I can tell you there are two things that I've heard consistently. And the number one is always, oh yeah, I've traded options before and lost money. Yep, the options buyer tends to lose money because options tend to either end at zero, worthless, or not be exercised 80 to 85% of the time. Now, that's a little bit of a misleading statistic, so I'll not mislead you. The reason is because options chains are very long, and you can have anywhere from 30 to 50 different strike prices in an options chain that would never get exercised in the first place. So bear that in mind. That does still mean, however, that the options buyer tends to lose money. But if the options buyer is losing money, who's making the money? And the answer is the options seller. The options seller has more advantages over the options buyer, and they start with this point. When you sell a put or call option, you are collecting cash first. Just like any other transaction, the buyer is paying you for the right to that option, for the right to exercise that option. What this means for you is you are managing money you have already made. And this is where selling options is different than buying options, because the options buyer is managing the risk of the trade moving in their favor, whereas the options seller is simply managing the risk in the money moving in their favor. And 80% of the time, it does. Now, there are risks to selling options. I will cover a few of them for you at the end of this presentation, but it's no different than any other asset. There is always the risk of loss associated with options, stocks, savings accounts, etc. So again, the options seller will begin their trade with an 80% probability of success. Probability, not guaranteed, but probability. And some key points about option selling. To sell a put option, first of all, if you've ever heard the term naked options, please don't sell a naked option ever. Not a naked call, not a naked put. That entails way too much risk of loss to you. The last thing you want is that margin call when you don't have the money. So trust me, follow these two steps right here, 1 and 2, and you will be okay. To sell a put option, you must have the cash value available in your portfolio as collateral in the unlikely event you are assigned shares. That means that the put option seller is leveraging cash in their portfolio, or the cash value in their portfolio, to generate income. To sell a call option, you must own 100 shares for each contract sold of the stock, which means the call option seller is leveraging shares of stock to generate income. So the difference here is, or the advantage to you as a seller is, you have the ability to leverage both the cash portion and the stock portion of your portfolio, and to use that to generate consistent income. That income can be every day, every week, every month, every quarter. That part depends upon you, your trading style, what you prefer, or how you prefer to trade. To generate that $10,000 that I talked about a little bit ago, that $10,000 in annual income that we would then reinvest in the S&P 500, yada, 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 right? It really requires $50,000 or more in dedicated money dedicated to selling options, meaning that $50,000 is not the base portfolio value. That $50,000 would be either cash and stock value as part of a larger portfolio. So I still recommend $100,000 is the minimum, especially with stock prices being where they have been today, or where they are today. Stock prices being so much higher, it does require more money, more capital to leverage options when selling options. There are other tactics, other strategies that we teach which can reduce those capital requirements, but at a minimum, to generate consistent weekly income, that $100,000 level is the starting point, and of that, a minimum of $50,000 to get up to $10,000. That's the math behind all of that. A couple of quick points, simple points. Yes, you can sell puts and calls in an IRA, unless, of course, you live in Canada. Canadian investors cannot sell puts, but they can sell covered calls in a retirement account. I believe that's the RRSP. Sorry, Canada. Frankly, the only thing we really want from Canada is Lord Stanley's trophy. Outside of that, I really wish you folks would get better luck with your retirement accounts. But do be aware, if you're a Canadian investor, there are limitations. You can sell puts in a regular trading account, but not in a Canadian retirement account. And as I drew out on the little median chart here, again, in the middle age groups, 45 and up, this is where selling options should become a part of what you do. It does not need to be all that you do, but I'm willing to bet once you start getting the foundation, the concept, and the income, that it will become a larger portion of what you do. Not because you're going to be, billionaire style, but because it is consistent, it's repeatable, and most importantly, it is scalable. I'll come back to those points here in just a couple of minutes. Now, we set out our simple investing plan goal a little bit ago at $10,000. That was the minimum target to invest each year. You're not limited to that goal. When you're selling options, we have, as members of our services, have portfolios that range up to $2 million and some that are a little bit higher than that. So these are folks who are leveraging significant capital to generate consistent income. So you're not limited to $10,000, but it's a good starting point. But the biggest lesson that I can impart is to always break that number down into a smaller, more reasonable number, to a weekly goal, for example. And in that case, that weekly income goal would be $192. Now, surely you know how to create, in any of your trading, how to make $100, $200 a week. The option seller has more paths to making that income available to them because of the breadth of companies offering options, because of the different times that are available, weekly options, monthly options, even longer dated options. So because of that, the importance in that goal is, number one, you don't have to make a lot of trades to reach that goal. You don't have to make trades every single week to be able to reach that goal. You can be as conservative or as aggressive when selling options as you want to be. So that gives you more flexibility, more choice in how you leverage this strategy. So let me bring in my props. For those who are less familiar with trading options, selling options specifically, I told you we had a thermometer, water, and hot chocolate. This will all make sense if you just look at the thermometer and visualize a stock chart. This is how we're going to uh, share with you the process, the transaction process of selling an option, because it does differ from the buyer's process. So let's meet the Joes. The Joes have kindly made themselves available to be our guest losing traders today. So apologies to all the Joes out there. You are about to lose fake money today. Joe number one thinks that the temperature will rise above 80 degrees by Friday of this week. And he offers to buy the rights to your water, that water that we showed you on the last slide, for $100 because he believes the water will be worth more before the end of this week. So you collect $100 from Joe number one. Joe the Deuce, or Joe number two, thinks the temperature is going to fall below 40 degrees by this Friday. And he offers to buy the rights to your hot chocolate for $100 for the same reason he believes that the hot chocolate will be worth more. In each instance here, the Joes are the options buyer. They believe that the value of something will be worth more by a specific point in time, in this case, Friday. So we've collected $100 from Joe number one. We've collected $100 from Joe number two. We are treating these as two separate transactions because we have water over here and hot chocolate over there. So we're not treating this as the same trade. So let's go back to Joe number one. By Friday, the temperature has not reached 80 degrees. So Joe number one offers to sell back the rights to your water to you for $25. You take back that, you give Joe that $25. And who made the money? You did. You made $75 on that transaction, and you have the water returned to you. Joe number two, Joe the Deuce, by Friday, discovers the temperature hasn't reached 40 degrees. So he offers to sell back the rights to your hot chocolate to you again for $25. You give Joe, oops, that should be Joe the two. You give Joe number two the $25. You made the money again. You made $75, right? So in each of these transactions, something did not happen. And because it did not happen, the two Joes were faced with a loss. To mitigate that loss, they offered to offer back to you the rights to your water or your hot chocolate for a small percentage of the original money that they spent, that $100 each. You accepted that, which is a good move, and everybody's done, right? The transaction is over. In each case, you made $75. Now, one of the complaints about selling options is often that the amount of money is capped, because it is, and too small. When you sell an option, your income is capped, right? So that $100 that either of the Joes gave to us for the rights to our water or our hot chocolate cannot be more than that $100 for us as the seller, right? They're the ones who are hoping that it will be worth more than $100. What we're hoping for is that it will be worth less than $100. That's the option seller's shift or twist. The objective as the option seller is to sell high, buy low. We're all trained in exactly the opposite, right? Buy low, sell high. Once you learn to switch that to sell high and buy low, that's the option seller's gift. That's the goal of the option seller. So the second complaint I hear often is, $30 or $50 or $70 isn't worth my time. And I can't answer that for everybody, but I can tell you this: annualize it, and you'll never complain about that again. Here's an example: $75 times 50 transactions a year, right? If we could do this 50 times a year, and that would mean 2 weeks of vacation, and 50 times we're selling the rights to our water or our hot chocolate. That would be $3,750 times 2 different transactions is $7,500. That's literally the equivalent of 2 trades a week. The key here is to remember that selling options is an income strategy. We're leveraging cash, we're leveraging stock assets to generate income as a return on the capital approach. We can sell options, as I said earlier, this week, next month, even 90 days from now. But the buying option side is an outcome strategy. Both of those Joes needed to get the temperature and the time correct. And when that didn't happen, the value of the option for them fell and would have kept falling and allowed us to cash out on the buy low side. So that's the option seller's approach. That's how the option seller makes money. This key in annualizing numbers, I'll take this a bit further here in the next few slides, but you take any amount of money between $30 and $100, multiply it by 26 to 52. How many times can you replicate a trade during the course of the year? That process of annualizing can show you how rapidly that money can actually grow for you. For example, here's a little table, the potential annual income on a $100,000 portfolio. I mentioned that's our starting point. The income potential here is greater because you're leveraging less capital. Remember the slide that I showed a few minutes ago with savings accounts, money markets, treasury yields, right? It took $500,000 across all of those combined, and the best you could do was about $21,000 in income on an annual basis. But here, using small returns between 0.5% and 0.6% per week on our capital, gives us anywhere from $26,000 to $31,000 in potential income per year, which beats the pants off of all those safe money assets by a lot. So you not only are you able to generate more income, have more income potential, you're also using substantially less capital to do so, which then frees up capital in your portfolio for other trading activities, other investing activities. You want to buy that one hot stock, now you have the money available to you to do so. You need to cash out so you can buy a new house, a new car, take a trip, whatever. Now you have the cash available to do so. So let me share with you, remember I said to treat results hypothetically. I want to show you actual trading results from March to May of this year. And it's important, and I'll show you why it's important on the next slide. This is a 60-day period from March 6th to May the 5th. May the 5th be with you, because not the May the 4th. This was a real money IRA. $150,000 was the base value at the start of the year. Our maximum working capital at any point during this period was around $45,000, so about 1/3 of the portfolio we have dedicated to selling options. With the exception of 2 trades in this table, all of these trades were opened and closed in this 60-day period. So we sold the water and then we bought the water back, right? The 2 exceptions were trades on Netflix and the GLD, the gold index, that were opened in mid-February but closed in the period. I left them into here simply because they were part of the closing process. So bear with me on that. But over this 2-month period, 26 trades, look at the symbols, look at the stocks that we traded: ExxonMobil, the SPY, the GLD, which is the gold index, NVIDIA, everybody knows NVIDIA, GE, Netflix, Eli Lilly, Domino's Pizza. Yes, Domino's Pizza. You can sell options on Domino's Pizza, and you don't have to wait for 30 minutes for it to arrive either. You can sell options on companies like Philip Morris, the FEZ, FEZ, that's the Euro Stocks 50, Lockheed Martin, Capital One Financial. So what you see immediately is all of these are strong fundamental companies. They're companies that you know. I mean, for the most part, you know most of these companies. These aren't weird stocks you've never heard of. And what they all have in common is consistent availability of income by selling options. Typically charts that are tradable, have enough volatility that it supports the income that we want to generate from selling an option. And more importantly, they're stocks that we can repeat trades on throughout the course of the year. You'll see an example of that here in just a minute. But for the 60-day period, across those 26 trades, total income of $9,120. Remember, what's our goal for the year? $10,000, right? So all I need is another $900 and I'm done, and it's not even June. That's the power of selling options. When you learn how to leverage your capital, whether it's cash or stock assets. And notice, we're not using our full portfolio here either at any one point in time. Markets have been so screwy, so nutty, so up, so down. We pulled back and reduced the capital that we've been using in the last, really over the last 4 months. But we were barely using a third of our total available capital. And yet still were able to generate results like those. And that's why it's important. We have weathered the storm. We've been bullish, we've been bearish, depending on what we were trading. So let me go back for a second. We've been trading the GLD relentlessly. Why? Because the GLD has been in a massive uptrend. So we've been bullish on the GLD. We traded the SPY bearish throughout this first half of this period. We've traded other positions in here like NVIDIA on both sides, bullish and bearish, depending on how the chart led us to the right trade, whether we wanted to sell water or hot chocolate. You guys are going to be so thirsty by the end of this presentation. I really apologize. I should have used beer. You know, what was I thinking? Anyway, all right. So, I mean, you can see on this chart, it's been, I mean, if you're just a regular trader, you look at this and this probably scares you and says, you know what, I'm just not going to trade because I don't know how to work this out. But when you learn and understand the foundations to selling options, you'll never be afraid of the chart like this. And the reason is because the income potential when stocks, especially when stocks are moving lower as a collective group, the income potential is higher. Premiums for options are higher. They are increased, driven by an increase in the VIX. So the volatility index, the VIX. And that's what allowed us to get some outsized wins in that 60-day period. So if you look at some of the income here, $170, not exactly exciting. $114. Nobody's going to write a Facebook post and say, I made $114 today. Maybe if they got the $1,170, but what you see here is stacked small results adding up to a significant income. That's the option seller's game. That is the approach and the process that we use. So looking at our full results so far this year for 2025, this is January through mid-May, 73 total trades, 71 wins. We've had 2 losses. Nobody wins 100% of the time. Total win rate right now, 97.3%. Total income year to date, over $13,000. So we can put $10,000 aside, save it for January of next year. It goes in the S&P 500. And we have $3,000 for lunch money. I don't know. Our return on capital year to date is about 8%, which means annualized, we're running about 26% this year, despite how crazy the market is. And last year, for the full year, we made 259 total trades. That's 5 trades a week on average, right? 5 times 52, 260. That's it. We made about an average of about 5 trades a week. So we're not trading all day, every day, 5 days a week. We don't need to. One of the things you'll learn as an option seller is less is more. Fewer trades usually leads to more profitability. 259 total trades, 242 wins, 17 losses, 93% win rate, still can't win 100%. $34,635 in net income, that is inclusive of losing trades, or a 23.1% annualized return on our $150,000 IRA. We rebalance that IRA each year to $150,000 because it mirrors the average portfolio in the US. In other words, we're trading like the average investor. So we rebalance that each year. And then we use the cash for other things, company parties, things like that. So last year, our annualized return was a little lower, 23%. But $34,000 in net income is pretty nice. We enjoyed that. So I mentioned less is more, fewer is better. Trade the best stocks and trade them often. Out of those 2024 results, just 3 stocks accounted for 30% of the net income last year. Three stocks, and 17% of all of the trades. Those 3 stocks were Netflix, which I continue to advocate as both a stock to own and a stock to trade this year, NVIDIA, and a company called Vertiv Holdings, stock symbol VRT. We traded those Netflix 10 times. We had 10 wins, no losses. There's the 100%. NVIDIA 17 times, 15 wins, 2 losses. And VRT 19 times, 19 wins, no losses. Total income, total trades across those 3 stocks, 46. That's less than 1 trade per week. 44 wins, 2 losses, $10,617. So just 3 stocks traded on average once per week still hits that $10,000 goal. And it doesn't prevent you, at no point are you prevented from expanding and trading more issues, more stocks. There are other stocks that we don't trade them frequently, but we might dip our toes into them, like a Philip Morris is a good example. We have other stocks that we can only trade using monthly options, so we can't trade them as frequently, but it doesn't mean they're not profitable or that they can't produce the same percentage returns or income. So we will take on those types of stocks and use them as needed, but depending on the amount of time you want to spend generating income, your expertise or knowledge in this realm, you don't have to make a lot of trades in order to generate even just a small amount of additional income. Now, again, you're not limited. You can certainly do more, but the biggest and worst kept secret about selling options is this: the process to average $200 per week. That's that $192 goal I set earlier for you. The process to average $200 a week selling options is exactly the same as it is to average $500, $1,000, $5,000, even $10,000 per week. I told you a little while ago that some of our members have portfolios that range from $1 million to $2 million. One of those individuals at $2 million generates over $500,000 a year. On the face of it, that sounds insane. But if you work the numbers backwards, that's $10,000 a week and 25% a year. That's a 25% a year return on capital, which is consistent with the numbers that I shared with you earlier about that we've achieved between 23 and 26%. Right? So it's not like a mega portfolio has any substantial advantage that they're doing 50 or 100%. They're not. They're actually hitting roughly the same numbers, but they are leveraging their capital, they're leveraging their stock assets, and they're leveraging it relentlessly to generate income every single week of the year. Let's talk about risk. The primary risks when selling options can be traced to 3 key bullets. There are other risks, but they're more complex, more complicated. For time purposes, please allow me to simplify. The number one primary risk is buying back an option at a loss. That means that Joe number one was right. The temperature went above 80 degrees. The value of that water rose from $100 to $200, and you had to buy it back at a loss of $100. The second is assignment. When selling puts, if the price of the stock falls below the option you have sold, then you risk being assigned shares of the stock. That in and of itself does not guarantee the loss. Where the loss or the risk occurs is if the price of the stock continues to fall further, for our example here, more than 10% below your assignment price. Now, this is still not the end of the world, but one of the number one questions I get and have received over the last 15 years is, what happens when I'm assigned shares of the stock and the stock falls 20%? It's almost always 20% because we equate that with a bear market. So one little tip when selling options, avoid earnings. Earnings are almost always equated with those significant moves, 15% down, 15% up, etc. However, in other instances, anything can be leading to that. There are other tactics available to the option seller that are not available to the options buyer that can prevent assignment in the short term, delay assignment, prevent a loss, or buy time to recover a trade. So, like I said, some of these are more complex in their explanation. So, as I said, I've left them out simply for expediency and time purposes. And the third primary risk is on the covered call side, where the assignment of the shares get called away, the assignment of the shares, where those shares were held over a long period of time, meaning you risk creating a taxable event if you lose the shares, or if you've held the shares for, say, you've held 1,000 shares of Apple for 15 years. Well, you don't want to lose those shares. So tip number 2, don't sell covered calls on shares you can't afford to lose. One of the things we'll teach you is how to rent stocks to generate income by using covered calls. You buy shares, sell a covered call, exit the trade. You do not want to own that stock for a long period of time. And on the put side, never, ever, 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 just in case I wasn't clear, do not ever sell a put on a stock you would not be willing to own if only for a short period of time. Never. If I wasn't clear, never. Key factors that determine the maximum potential income from selling options. Number 1 is the total value of cash and stock assets used collectively to generate income. The bigger the pool, like the $2 million portfolio, the more cash income can be generated. Again, this does not mean you have to use your entire portfolio to generate income. If you're just getting started out as an option seller, I don't even recommend doing that. Use a portion, build a foundation, learn the process, master the process, and then scale, then build. The second is volume of trades. That should be obvious, but the more trades, the more opportunities to generate income within reason. In any given week, we typically have 5 to 7 trades working. No more than that. Could we do more? Sure. Do we need to? Nope. So we don't. And the third factor is velocity of trades. That's how quickly you turn over your capital from one trade to the next. So think, for example, if I can open a trade on Tuesday and close it on Thursday, then I can open a new trade on Friday, rather than I open a trade on Tuesday and then I have to wait 3 weeks to close it, right? The faster that you can close a trade, the sooner you can open the next trade. A subset to that, a sub item to that, is why when we sell that water or that hot chocolate, we typically target 50 to 75% of the initial cash collected. So we showed you in those transactions that we collected $75 on each one. That's the 75% target. We do not target 100% because that creates more time and risk. By exiting as early as possible, we also free up our capital or our stock to be able to sell another option or to move on to another trade. So if all you did, literally all you did, was learn how to leverage cash or stock assets to generate that $10,000 per year, push that $10,000, oh, that was no fun. I lost everything. Hang on a second. My bad. There we go. No, I don't want an emoji, but let's try again. There we are. Sorry about that. So if all you did was learn how to leverage cash or stock assets to generate that $10,000, push that $10,000 into an S&P 500 index fund at the beginning of each year, how fast would your portfolio grow in the next 5, 10, or 20 years, right? That 10-30-7 formula, applying that consistently gives you another path to building wealth. It's a weird path, selling options to generate the income, but if you think about it, your portfolio is producing the income that you reinvest into your portfolio to grow your portfolio faster, and repeating the process on a regular basis. I told you there was one question. Only you can answer this question. And that question is option selling right for you? I cannot answer that question for you. I would ask you to consider it, but the best way to answer that question is not to immediately start selling options. The best way to answer that question is right here. This is called the Weekly Income Plan. It's a 1-hour training program designed to fast track you, to help you build a foundation in understanding the process of selling options. Remember, I said a little bit ago, the process to create $200 is the same as it is to create $500, $1,000, $2,000, $5,000, $10,000. It's exactly the same. If you can learn that process, with us in 1 hour, no fluff, no weird stuff, just straightforward execution of how and why you should be selling options, from the keys to the strategies and tactics you can use, how to find the right stocks or ETFs. Like I showed you with Netflix, Nvidia, and Vertiv, how did we find those stocks? Why did we leverage them? And most importantly, how to set an income goal and build a plan around that goal to meet or beat it each year. That is the key behind this. This weekly income plan is a training program we developed over the last couple of years. It includes on-demand videos. They are easy to watch modules, 5 to 10 minutes per video. They include live transcript and closed captioning inside the video, so you can read what's being said, whether hearing impaired or whether you like to see the words on the screen. It's your choice. You have full video controls, so you can start, stop, pause, rewind, what have you. They include slide decks and transcripts, so you can take notes, so you can refer back to specific points or videos inside of the training program. We also include desktop cheat sheets and a 34-page guide. This is where I take you more broadly, or excuse me, more in depth into building an income plan and the risks associated with selling options. So all of those complexities that I couldn't cover here due to time are covered in that guide for you. You can access anywhere: mobile, tablet, desktop, laptop. Our new members website is mobile compatible, tablet compatible, everything compatible. The biggest thing that I suggest, and we've been doing this even when we hold live events, plug into a big screen TV. Plug your laptop in, broadcast to a big screen TV. It feels different, and it's weird to say it, but trust me, if you do it, you will have an entirely different learning experience. And I promise you, there ain't nothing new on Netflix for the next 3 weeks that you need to worry about. Trust me, I've looked. My wife keeps telling me that there's nothing on Netflix, and she's mad about it. So what you'll learn inside of this program is the foundation. If you start here, in less than 1 hour, you'll have a secure foundation in being able to answer that one question: is option selling right for you? We provide you with the evolution, how we came up with this plan from our 15 years of teaching and trading with people just like you. Then we go into the in depth to the how to sell options, the basics, how to find stocks, how to sell an option. We walk you through and share with you on what would have been a live screen, but it's recorded, the actual process. We also share with you how to build that action plan, right? That plan for you. Now, I set $10,000. Your goal may be higher, and good. I hope it is. So not only do you need to know how to build that plan, but you also need to know how to scale it. Then cheat sheets. These are execution pieces that help you with the process of trading, so that you know whether a trade is a thumbs up or thumbs down, and so that you don't skip or miss any of the steps in the trading process. So one last piece, and you can actually get this right now on tradersreserve.com. It's our weekly income report. Every week we publish our wins, our losses, the good, the bad, the ugly, in a special content piece called the weekly income report. You can read back through the last 8 months, something like that, and see how we've made money, what we've made money on. So weekly income plan, it's $49. This will give you the foundation. It will help you answer that question, determine whether or not selling options is right for you. It will help you build that plan so that you can get, at a minimum, that potential $10,000 per year, which you can then invest in the S&P 500 over the next 30 years to reach $1 million. That's the shortcut. For everyone here at Traders Reserve, Fausto, I want to thank you again. That ran about 8 minutes longer than I expected to, and I know you have 2 minutes left until the next speaker. So if you have questions, that's our email address, support@tradersreserve.com. Just email us, and either I or my partner Dave will get back to you. So I apologize for running so long. I think we have the link in the chat. I don't know, Fausto, if anybody can. I can't see anything right now. So there it is. Okay, yeah. So $49 weekly income plan. It's an hour and 8 minutes, but it will give you the foundation that you need to know whether this is right for you. It is not right for everyone, but it may be right for you, and I hope that it is. Fausto, thank you for your time today. Thank you, all of you, for being a part of CTU's May event, and I hope to see you again in a future event.
John, thank you so much for being here, and that was amazing. Like I said, one of the features of today's event, understanding a little bit more of a really cool, really good option strategy. Like I told you, if you saw him on my podcast, it was a very engaging. A lot of people want to know a little bit more about it. So now here's your opportunity to get a really good deal on it, to learn a little bit more about it. So when you get a chance, ladies and gentlemen, go out there and register. In the meantime, I'm really excited to bring in our last speaker of the day. So our next speaker is someone I've been looking forward to having here for a while now. Hold on, I'm just to bring something up here really quick. Sorry about that. There we go. All right. So it's someone I've been looking forward to having here at the Cyber Expo. Her name is Anka Metcalf. And if you ever wanted to learn how real pros trade with the accuracy, and have basically a chance of what to follow and how these things move in today's market, it's been around for a while. Anka is basically the one. I've seen her. She's been on here several times at Cyber Trading University. She's also the founder and CEO of Trade Out Loud, and she's been a full-time trader for over 20 years. But that she worked in investment banking. So she's been in the financial world for a long time. She's also an expert on both futures and stock trading. And what makes her stand out is how persistent she is when it comes to reading the market. She's also created her own powerful trading, supplying and helping traders to find high odds trades by using support and resistance levels, timing, and chart patterns. But the best part about her is she knows to explain it in a way that actually makes sense. So she's been running live futures trading room and one of the most respected mentors out there. I'm thrilled to have her back here today and to share her knowledge with you all. So let's give Anka a big warm welcome. Anka, welcome to the Cyber Expo, and the stage is all yours.
Hi, Fausto. Hi, everybody. Thank you so much for having me here today. I really appreciate it. Such a great team of traders today. I really enjoyed. I kind of chimed in a little bit on the presentations. Phenomenal. So thank you so much for having me. You guys are having a great event. So let me know when I can just get going.
Yeah, you could share it. You could take over the screen.
All right. Here we go. Okay, so thanks so much, everybody. The market has one more hour into the close, and let's just wrap up this phenomenal event that Fausto put together with the 10x formula, how I swing trade, and I'm going to be sharing some of the trading secrets and how to supercharge your portfolio. It's so important because this year is such a volatile year, and everybody has many chances to making tons of profits from this volatility. So let's just turn this volatility into profitability. So thanks so much for the presentation and the intro. And once again, my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com. I have been a professional trader for more than 20 years. 10 years in investment banking, and I specialize in high velocity trades. And I will explain in just a few moments what these velocity trades mean for me. This is our agenda for today. I am going to share the 10x swing trading blueprint, learn the core strategy to scale your portfolio using really clean, repeatable swing trading setups designed for traders who are ready to level up. And they're very simple because truthfully, if they weren't simple, I wouldn't be able to do them either. So you have to have like a super simple system in order to follow it every day and to make it fun. We're also going to dive into how to swing trade 10 minutes a day. I literally trade 10 minutes a day when I'm swing trading. And this is really great for busy traders because you just get in, get out, and you get the results without sacrificing your lifestyle. You can do all the important things that matter to you. And also, we're going to talk about refining your edge, cutting the clutter from trading, saying goodbye to analysis paralysis, and just focus on what moves in the market and grows your account. This is how it started, guys, and everybody knows. So we had a high in February, and then tariff fears took over, and we had a big dump into the market. This is how the hot map looked. This is how it started. President Trump, Liberation Day, April 3rd, reaction, everything was red. fear was in the market. The VIX was seeing like literally all-time highs, and stocks were seeing really huge pullbacks, even 15%, 20%, some of them even into the 30 and 40%, even more pullbacks, depending on the sector affected. So here is the S&P 500. The S&P 500 down from this high, from the February high to the low, more than 20%. So February 19th through April 7th, more than 21% down. Plus, we had this little gap down here. You can see it with the breakdown and acceleration lower. We've officially erased Liberation Day losses, and that began on April 2nd with the S&P now up, and that was a couple of weeks ago, was up 0.5%. So it took about 2 weeks. So we had 2 weeks of panic and then 2 weeks of recovery. May 21st, this is where we're at right now, and you can see this is the bottom right here, and we're going to be talking a little bit how to identify these types of bottoms. And the bottom line is that you're not going to be able to nail the very bottom, but you could have a strategy to enter trades on confirmation around this bottom, so just a little bit higher, and I'm going to show you how I do it. So as you can see here, we have almost totally recovered. This is a chart that I took just a few minutes before I came into this presentation. Wanted to have an update chart, and here is that February high. So we are very, very close from that February high. So on April 7th, if you guys recall, the U.S. stock market saw trading volume reaches its highest level in 18 years, with markets trading about 29 billion shares, surpassing previous high volume. And again, this is the volume that we have been trading. Look at the volume that the market had been trading before in 2024, 2023. This is the volume that in which we are trading right now. So we're back into normalcy, but we are still seeing a little bit above average volume right now into the market. And speaking of volume, this week, I'm not going to put on a ton of extra trades because this week, I mean, we are heading into a long holiday weekend, even though it's patriotic not to short stocks, especially American stocks, into the Memorial Day long weekend. We're still seeing the market pull back a little bit, and I'm going to show you what I'm talking about. But take a look at this. April 7th, we have President Trump post on X. This is a great time to buy the dip. Like, this is just perfect. But was it just the post from President Trump, or was it something else? And I'm going to bring you arguments, and I'm going to tell you it was something else. It was coincidence that President Trump said, yes, this is a great time to buy the bottom, but the reality is it's a technical bottom into the market. These are the three corrections that happened from 2020 all the way to 2025 here. This is the pandemic correction. And as you can see here, the price pulled back to around the 200 simple moving average. Then we have the 2022 pullback, the little downtrend, about 20% down. And you could have and you could see here that the price action rotated again around the 200 simple moving average. Not too shabby, right? And then we have the 200 SMA pullback here that is very interesting because it literally came around the 200 simple moving average as well. So in my perspective, I think that it was a coincidence that we got the post for President Trump because the technical levels were already pointing out a rotation. Plus, we had a confirmation. So I'm going to go back here on the chart, and we had a confirmation. Oops, I can't see it here, but I can share this with you. This is the SPY. This is the chart of the SPY. It was not only that we were here on the 200. Oops, sorry. Here we go. Not only that we were here tapping the 50 SMA as well. This is a correlation with the 50 simple moving average. So we had a lot of elements that coincided, and that was great for price action.
Today, would you like to use self-service?
No.
Okay, so
battery 50%. Connected to FLORIDA.
Okay, just let me know if you guys can hear me. Type a one in the chat box if you don't mind. I think I just lost the speakers, but I just wanted to confirm with you guys. So if you could just type a one in the chat box, that would be very helpful. I would really appreciate it. Okay. I know this is crazy. You can hear me. Okay, sorry about that. So it's crazy, like with technology has been all over the place. I appreciate it, guys. All right, so as you can see here, we also had the pullback, also a technical pullback. So I'm referring just to technical. I could care less what everybody else is, posting on X or posting on any other social media outlet or, talking about on CNBC. I didn't care less what they're doing. But what I care about is how these stocks, indices, ETFs are reacting to the major levels, to the major support levels, resistance levels, moving averages. And in case you're wondering what kind of moving averages am I using on these charts, where I'm using super simple moving averages. The red line right here is the 200 simple moving average. I really don't know a trader that doesn't use the 200 moving average. It is such a staple. It is the daddy of all moving averages. Then we have the 50 simple moving average. This is the moving average that a lot of hedge funds are using. They're loving the 50 SMA and the 200 SMA. And we also are using the 20 simple moving average. You could use the 21 simple moving average. I'm actually using the 20 simple moving average by an accident because instead of typing 21, I typed 20 many, many years ago. So I just stuck with the 20 simple moving average. But the 21 is the one that actually is the let's say the holy grail of moving averages, especially when you're referring to trends. Once the price is trading above the 20 SMA, then you are going to be bullish above. And once the price is trading below and setting setups below the 20 SMA, then you're looking for shorts. And as you can see here, we had a blip all the way down to the minor support zone. So no coincidence. Again, no post, no nothing. It is just technicals. And especially algorithms, right? Algorithms don't pay attention to posts on social media, right? Even though there are some very smart algos right now that are not only responding to the levels in the market, but they're responding to certain phrases or words that are being said. So here we go, huge bottoming tail right here, beautiful doji, indecision candle that turned out into a gorgeous decision onto the monthly. And you can see here, like the recovery was phenomenal, like from the bottom here, from the very low all the way to the high that we had a couple of days ago. You could see that the market has recovered more than 20%, so 23% into the market. So this is, again, very, very, very conducive for a bullish market as we're heading into the summer months. So again, turn volatility into profitability, trading the tariff war. And I know it's not simple, but I'm going to show you how I am doing it and it's how I'm tackling the market. So here is how you can scale your portfolio. These are my rules, my trading plan that got me up to here. So first off, I start with a top-down analysis. So I start from the really highest time frame. So don't laugh, but I start with a yearly chart. Then I move to a quarterly chart. Then I move to a monthly chart. I move to a weekly chart, and then I move to a daily chart whenever I want to pretty much find an entry into the specific stock that I'm interested in or a stock that I have on my watch list. And then I focus on the key moving averages that I just shared with you, the 10 exponential. The 10 exponential is that pink line, is the closest to price action that is in a power trend. This usually shows power trending motion. So if the price action is above the 10 exponential moving average, for example, on the daily, on the weekly, then that shows massive strength into price. As long as the price action is not piercing through the 10 EMA, or even if it's piercing through the 10 EMA, but ever so slightly, you can expect the price action on minor time frames, 1, 2, 5, 15, or even an hourly to have a bounce from that location and have a rotation off of that point. So these are very important, especially the 10 and the 20, especially when they are let me take you to, okay, this is good enough, okay? Especially if they have a really good channel, they are equidistant, they show the traction. They're like railroad tracks, and this is the little train, the price action train that is following through. And you can see here that we have been in power trend mode since April 22nd, and we have been above this 10 exponential moving average. And I was mentioning earlier that we are seeing the tap into the 10 EMA. This is not danger zone, but it's caution zone. So that means that if we're going to get a red close throughout the trading session today, there are still times tomorrow, for example, we could have an inside day, or we could have a little bit of a tap down here. You can also see that we have a flat 200 simple moving average. This is a really hard surface for stocks, for ETFs. So when they pull back to the 200 SMA, you're always going to see some type of reaction. Like you saw in here you saw a rejection reaction, and here you saw like a bit of indecision around the 200 SMA. So when the price went down and then went back up and then went back down, so it was a decision point. So the market has a way of showing us what it plans on doing. Only trade clean setups. Like, what is a clean setup? A clean setup is when the price action is pulling back, let's say into a moving average or a prior support zone, or a prior resistance area. That is my favorite. That is a minor support zone that shows that the price action is likely going to rotate into that area, and it's going to continue higher. So look for really, really, really clean setups. Look for tight consolidation breakouts, bull bear flags. Those are the buy setups, the buy setups or the sell setups if you are in a downtrend. Look for the rotations, right? Or retest at these moving averages, or prior highs, prior lows, like I've mentioned before. So no chop, no clutter. I don't like to see the price action tangled into the moving averages, because if the price action has an overhead, let's say it has a 10 exponential moving average overhead and below has a 20, the price action is going to go yo-yoing around between the 20 and the 10. It's going to go bang, 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 bang. It's going to hit its head on the 10, go back to the 20, back and forth until it reaches a decision. Decisions are usually taken based on, of course, news, media, everything that we have into the let's say into the open, right? And of course, economic data. Economic data is very important. Now, tomorrow is a very important day because we have some data coming in at 9:45. We have some very important data. It's actually the highlight of the week because we haven't had any high impact data, but watch for the data tomorrow because that's going to be relevant on how the market is going to run into the long holiday weekend and mostly into next week. So that's going to be very, very important. So look for those really clean, clear setups. Another thing is look for earnings, because earnings come with fundamental power on their side. So this is the way the market only moves on news, right? So outside sources moves on fundamentals, inside sources, and also it moves on rumors or, breaking news, and those kinds of, let's say sources. So those clean setups are very important. Look for volume confirmation. Look at the very bottom. It's very simple volume. If you're seeing like an increase in volume, it means that you have institutions that are legging into specific stocks or specific indices or specific ETFs. If the volume is relatively flat, then the price action in that stock may be relatively flat as well. So there are very simple elements that you can look at a chart to become a really good chartist, and trades are going to come to you. And of course, one of the most important things that for trading and for your account, and your account is going to literally thank you for this, measured risk per trade. Position sizing is key for trading, whether you're day trading or swing trading. I call it the holy grail, and literally it's the only thing that is going to grow your account consistently. And the only way that your account is not going to suffer big drawdowns. Because if you don't position size and if you're all over the place, your account is going to suffer, and it may be very hard for you to come back from a loss. This is the only thing that is going to save everybody from a potential really big loss. Decide what your percentage is, what your risk is. Look at your account size. Decide whether you're going to trade between 1% and 3%, whether your risk is going to be between 1% or 3% per trade, and keep it like that until your account grows by 50%. And then when your account grows to 50%, then you can recalibrate your risk per trade. Let's take a look at this chart here. We talked about it earlier. This is the SPY chart, and we saw from bottom to top right here, we saw an increase of over 20%. And not only that, but look at the volume increase here. So the fact that the volume increased here just shows that everybody that wanted to be short was short and exited. So this was the time when you needed to watch the volume very, very carefully. I also watched the William percent R. If you are not used to watching it, it's not mandatory. I think it's more relevant when we have the volume, but typically the William percent R needs to have a reading just very low into the -80 in order to show an oversold condition. But you're not going to trade, so you need price confirmation, so you cannot trade alone on William percent R. So how to scale your portfolio, exactly how to do that? Well, there's a 3-tier exit plan, right? So basically you need to have, with all the trades that you're taking, minimum of 10 targets, because if you have just one target, you're going to be tempted to go take the first target and run, and you're going to leave money on the table. Usually when the market is dynamic and when the market is rallying, when you're having good volume in the market, you need to place at least 2, 3, 4, even 5 targets to any kind of trade. Target 1 is usually a great target. You have momentum from the algorithms, from the intraday algorithms, and it's a great idea to scale. For example, let's say half the size into target 1. Target 1 is the easiest target to achieve because it comes with that great momentum. And then into target 2, for example, if you're trading at all-time highs, right? Let's say you're getting very close to all-time highs, or you're getting above all-time highs. I typically calculate extensions beyond all-time highs, and I use Fibonacci extensions to create a measured move, right? Remember that institutional traders do not trade without a measured move, and institutions do use these measured moves. Also, algorithms use the measured moves. Otherwise, we don't know what the next target would be and where we would need to take some partial profits out. Also, a target 3, I usually leave it open. So that means that, for example, if I have, let's say I have a target at $20, I have a target at $30, and I have another target at $50. So I take half off at target 1, I take half off at target 2, and what I do is at target 3, I let it run and I trail it. I trail it based on pivots mostly. So I'll either look for daily pullbacks and rotations, or I trade by price action. So I trade, for example, if I have a massive day, up day, let's say today, and the price action just ran up, let's say $5, I'm going to put my stop below today's low because I don't want to give anything back. Because what happens is that the next day, if I don't continue in the direction and take out, let's say today's high tomorrow, then the price action is going to rotate. And if it's going to rotate down, if it's going to get rejected, and if I trade below today's low, the price action is going to reverse. It's going to produce a sell setup. It's going to produce a rotation to the downside. It's going to enter a pullback. So if you don't want to live through pullbacks, you don't have to. So there's a way to eliminate that and just take advantage of that strong momentum. Also, compounding with size scaling. Like I said, I do love to position size and scale and avoid over trading. Actually, I had a little lecture with my traders yesterday about over trading, and we talked about an hour and a half about over trading. But select quality over quantity. 2 to 4 trades a week is enough to grow literally significantly your portfolio only on really clean setups. And when you're trading and when you decide to trade, you probably don't know, whether you like day trading more or swing trading more. If you're an investor, you don't really know. You're just diving into trading. You don't know, what your preferred style is. But if you have all day to yourself and you go like, yeah, you know what, I could do a little bit of everything, then go ahead, you could do a little bit of everything. But if you're, let's say, a short-term trader, you're not sleeping well at night, if you're holding positions overnight, then you're a day trader. It's fine if you're a day trader. When you're a swing trader, you take advantage of high intensity momentum. And that's what I do love, because when you have setups that are developing on higher time frames, on these really strong high momentums with good volume, continuation, good news, let's say, from the market, then the price action is likely to continue higher. So you can take advantage into day trading and swing trading from the same momentum. And if you don't have time, investing is for you. I carry all the hats here. So I'm a day trader, I'm a swing trader. I've always been on the investing side before even diving into day trading more than 20 years ago. So let's talk let's talk about like the real good stuff, right? So do we have a bottom? Signs of capitulation, right? Because I have an example for you. I get so many questions about UNH. Is UNH a buy? Has UNH bottom, right? So let's take a look at the market and see how the market bottom and how that compares to UNH. Does that sound fair? Okay, so first off, you need to see a spike in the volume. Massive surges in volume often show us that the price action is done going down. It's basically resumed and it's about to stall. It could potentially go down if the volume is continuing to be increasingly high. So if it's going to be above average high, but it typically shows a slowdown in momentum. High volume. You can see it right here. You can see the massive volume that came in right when we put a bottom in. So at this point in time, we don't know if there is a bottom because you can see here, this is a crescendo. It's climactic. It's going higher, right? And then we had a stall here. We had an inside bar, and then we had the price action move higher. This was the clue. This inside bar was the clue that we have a bottom in. Once this price action traded above this prior high, and we had the breakout here, this was the clue that we are going higher. So you just needed to wait 4 days. So in 4 days, we were able to determine whether we have a bottom in or not. And this was a temporary bottom then. We took advantage of it into the swing program. Also, sharp price drop, climactic selling. So when you're seeing the price action just fly down, just snowball down like this, so you have gap. You have gap, price action lower, the next day gap again, continuing lower, and again the price action open, boom, down again. So you're seeing that waterfall. That is also a sign. Oversold conditions, we talked about the William percent R. It needs to be under 80, but don't just go by the William percent R. Like I said, William percent R is good, but look at the volume and price actions, all these three things. And they're super simple, so you don't need a special indicator, or you don't need like an algo or whatever to tell you where the bottom is in. It takes you like probably 10 seconds to look at a chart and determine everything. And then again, you're going to look for reversal candlesticks, right? Because price action is so important. You're going to look for either a hammer, a bullish engulfing, a morning star, a doji with a huge wick, right? You're looking for some kind of information. And in this case, the confirmation for me was the inside bar, because inside bar shows, clap your hands right now, boom, compression. So remember, when you have an inside bar, it shows boom, compression. So it shows that the price action is getting chunked in, it's getting like captured into the prior day. So trading here is going to be super easy because it's going to be bullish over the highs, or it's going to be bearish under these lows right here. So super simple. Now let's take a look at UNH, right? Does UNH have a bottom? We have the volume here. Like look, a few days, like last week, it was like pure volume. Like it was the highest volume that it had ever traded out, right? Okay, and then what happened? Volume started to decrease. Now, here's the thing. UNH is totally different than the market right now, because UNH's hit, in my perspective, is like it's not a properly run company. So I don't think that. But we're not going to get into this. And I think that we still don't have a bottom yet. Okay, even though we have here, you can see that the William percent R stayed below the 80 for a relatively really long period of time, right? And specifically for a month, right? Because it dropped on April 21st and it's May 21st right now, and the price action is still not recovering. So this is going to be the key right here. If tomorrow, and it's going to be a day-by-day case. So if tomorrow we're going to take out today's high, whatever today's high is going to be, we're going to have a higher low. And therefore, boom, you're going to get in, right? You're going to get in. You're going to place your entry above today's high. You're going to place your stop below today's low. And you're going to wait for the price action to take out the 10 EMA. This is a counter trend trade. It's not a trade with the trend, okay? However, if the price action, I would go actually on a higher time frame, on a weekly time frame, and I would see how the how UNH is going to close for the week, and that's going to be bullish above this week's high next week, speaking. Next week, we're going to be bullish above this week's high or bearish below this week's low. And that's going to be the confirmation for me. Let's talk about the VIX, right? Let's not ignore all the factors that go into finding good bottoms or good tops into the market. So volatility explosion, we had a huge VIX spike. Take a look at this, went all the way to 60. So the VIX is the fear factor, is the volatility index, and it shot up sharply when the market dove, right? Often hitting 30, 40, 50 plus. And here we had a quota of 60. Super, super duper fear into the market. It shows fear, it shows uncertainty, and when it's trading at extremes, it's just really hard to trade. And where is it right now? You can see here that for the last few days, it has been basing below the 200 SMA. And today we saw a little bit of spike up. Now, this $20 is not a safe zone because the more it trades and the more it gravitates above 20 bucks, it has room to be pulled into the 20 simple moving average, because what these moving averages do, they pull the price up to them or either pull the price up or pull the price down depending on where they're at, because these are really algo rich zones. There are a lot of algorithms that are built into these moving averages. That's why they work so good. That's why price rotates at these moving averages. That's why price action reacts into these moving averages. Consider these moving averages as magnets because they pull the price into them or they drag the price into them, like so, like here. All right, let's talk about gaps, right? When you see gaps in price action, yeah, there's something going on. So whenever you see really good news happening in a stock, you're going to see gap up, gap and go, gap and go. You guys know the expression. It's a gap and go thing. This is a gap and go to the downside, right? And when you see like a large gap down at the open followed by intraday recovery, right? Then that's pretty okay. But when you see a gap and trap scenario where late shorts get squeezed, and these often form the key support levels after panic selling. So you have to be very attentive to these levels. So do we have a bottom and signs of capitulations and how to trade it? Wait for confirmation via reversal candle and volume. Exactly. This is a recap what we have been discussing within the past few slides. Look for breaks back above or into these moving averages. So remember, when you have a setup that is forming in between moving averages, the price action is going to go yo-yo on you, okay? You want to wait for the price action to either form a setup above a moving average or form a setup below a moving average. It's not enough to tackle that moving average. Watch sectors and stocks that show relative strength or relative weakness compared to the market. Why? Because in a really strong market, if you're nailing and you're narrowing into some really strong sectors, this is what I do. So when I scan for strong market environment. What is a strong market environment? Q Spice, Diamond strong, okay, and Russell strong. All of them are strong. Then I look at the strongest sector. And I scan through sectors, and let's say tech sector, right? And then I go into the tech sector and I scan for the 10 most powerful stocks. And those are going to be my watch list, for example, for that week. It's actually super simple. You don't need like super sophisticated scanners or anything like that. And I focus on those. And if I have setups, good setups, clean setups in those stocks, I'm going to go long in those stocks. Why? Because it's going to be so much easier to go long in the strongest stocks because they're going to go up faster than the rest. So your money's going to work for you. You're not going to be a sitting duck. Okay. So here is what I look at. So I look at the sectors and notice here that we've noticed on that massive pullback in the market of 20% when we had the tariff war, right? The Liberation Day. We noticed that right after that, when the volume started to increase, when we probably would have hit a bottom, which later on we proved that we hit a bottom, we saw that technology and consumer discretionary was strong. So what do you think we did? We looked at technology stocks, right? All right. So this is, by the way, this is the SPX, and this is one of the things that I love. This is one of the patterns that I love. Look at this huge bottoming tail right here. When the price goes above it, boom, it's going to go back up. And I have something else for you. Before we reach that point, you have to decide whether swing trading is right for you or not. And I don't see why it shouldn't be. I think it should be like everybody should be swing trading aside from day trading or investing, because this is like the sweet spot. It's something in between, right? It's not as aggressive as day trading, but it's not as long as I don't have to wait 5 years in order to make money, or 2 years to make money, or 5 months to make money. Okay, I can make my money in 3 days to 2 weeks. So if you want freedom from the screen, if you want to detach yourself to the screen, but still trade and make money, make your money work for you, this is great. This is for you. If you like medium time frames, and if you want to hold positions from 2 days to about 2 weeks, sometimes a little longer depending on the market environment, because if you're having a sideways market like we've had last week and this week, like you're going to be in a trade probably longer than 2 weeks. So the market is going to dictate how long you're going to be in the trade. And if it feels manageable and exciting, this is for you. If you want consistent growth without the burnout, you're aiming to growth your account with a proven edge, but also keep your life in balance, this is for you. And you could follow a plan. You're willing to learn a strategy, stick to it, entries, exits, risk, position sizing, without emotional decision making. Everything should be like mechanic. Nothing should be emotional, right? Nothing. Like you have the setup, you have the chart. Like there's no emotion. There's no mumbo jumbo psychology. Oh my God, I can't, my head is spinning. I'm thinking about, I don't know, golfing or whatever. I can't focus on it. You either have it into you or you don't. You're okay with overnight risk. So you can, you're not like day traders. Most of the day traders can't stand the thought of holding something overnight. This is for you. Swing trading is not for you. If you want fast-paced action, then you're going to go into day trading. If you hate holding position overnight, it is not for you again. If you're not interested in technical patterns or charts, or if you don't like trading whatsoever, this is not for you. You really have to love what you're doing. This is our April. So April was the month with that shake and bake into the market. And let's take a look at some of my April 2025 trades. We had 12 trades in total. We had only one stop and 11 winners. These are the trades that we had. Most of the trades are closed by now. IWM was trailed out today at 205. But we have 91.7 win ratio. It was one of the toughest, most volatile markets, but we made it work. So don't be afraid of volatility, but actually, if you have a good sifting process through the market, for the market, you're going to make a lot of money. So let's take a look at May, and I'm going to show you some charts from April and May as well. These are our trades right now for the month of May. We have one more week, and you can see that most of the trades are still open because they're not doing really anything. They're not really, they have been basing for a while. BLTR was a trade from last month, and it was an ad here as well. You can see that we held it through earnings. We sold half at 125. Our entry was around $99, was at $99. And we exited half at 125. And I said that we're going to be waiting for a pullback and a rotation. This is what a rotation looks like, right into the 10 EMA. Look at that compression bar. Remember the clap? Boom, compression, inside bar. Here it is. And inside and out, we added at 114. We made another target happen into the 125. And here it is pulling back into the 10 exponential moving average. And we have it on watch again because we may add to it again. This is Costco. I absolutely love Costco as a stock. I opened a small IRA account, like $7,000, a new IRA account last year, and I bought Costco when it was trading at around $590, and I bought 10 shares. And look at where the price is right now. So you can make a lot of money with little money. Okay, even if you have a small retirement account, that account is going to work for you. And that's investing, right? We're not going to swing trade in that small account, but look for really good stocks. Look for stocks like Microsoft, like Nvidia, Broadcom, etc. So Costco is one of them, right? JP Morgan, I have noticed this theme with relative strength and financials for the last few weeks. And again, you can see the pullback to the 10 EMA. We also have support from this prior high right here. So this is looking very good. We are in JP Morgan and we're possibly going to look to add, but right now reacting to the resistance here, and it has support over here. So it's pretty much going to, I think it's going to balance now. BJ is gonna, this is the wholesaler, and it's gonna report earnings tomorrow. I just posted to my traders that I'm gonna be holding it through earnings. You're gonna see here that it has had a massive base since the past earnings season. That was on March 3rd, and we're waiting for what it was like March. It wasn't March 3rd. It was something else. It was beginning of March anyway. So we're waiting for earnings on it tomorrow. I'm still in this trade. You can see like huge, huge, huge. And this is a long-term trade as well. ITA with the theme of defense and, you know, all that. This is aerospace defense and defense ETF. Look at it. Look at this beautiful move, more than 12% from our entry into the 155. And again, you set it and forget it. You don't need to work for your money here. It's not like you're day trading and you have to stock every single time. This is IWM. Finally, we scaled out of it at 205. You could see here, this is something that I sent to my traders as well. So is it true? Do I only swing trade 10 minutes a day? Yes, I do. Swing trading is not strategic, not reactive. You're not glued to the screen or trying to catch every single tick. Instead, you plan your trades in advance. I plan my trades a Saturday and Sunday. I dedicate a lot more time to looking through charts. And you only act when the setup appears. I place a lot of alerts. I watch stocks. I watch probably 50 to 60 stocks every week. But out of those 50 to 60 stocks, I sift and I only look for the cleanest one. And I automate my entries and my exit. I place limit orders for my buys, and I place alerts below the limit buy, so I know that like very close to the buy limit, and so I know that the price action is nearing a entry possibility. It reduces your daily workload to quick scan and execute routine. The rest of the time, you just live your life. Here's an example in gold. You can see here that my platform alerted me that I had an alert at 33.65. By the way, this year has been the gold year. Made massive profits. More than 75% of the profits from day trading are from my futures trading room. Day trading is coming from swing trading because that room covers only futures. In swing trading, we only cover stocks and ETFs, but gold has been relatively massive profits this year. You just set a limit buy order and you just forget about it. Okay, so every year, this is what I wanted to end with today. Every year, stocks will move about 20 to 30%, maybe more each year. You guys agree that the market has pulled back 20%, right? And to the downside with the Liberation Day, and the market recovered 20%. Right? The market recovered to 20%. So far we have over a 40% move in the market, because remember, we're swing traders. You can also short in your portfolio. You don't have to go long all the time, right? And this happens at least a couple of times a year, minimum, a couple of times a year to a few times a year. So it's only May, and we've already had over a 40% move in the market. Now you can imagine that, yes, this is going to be a very volatile year. So we're expecting even more than 50 to 60% move into the end of the year. That means money, ka-ching, ka-ching. So here's what I prepped for you guys. Daily swing trading routine. My routine for 10 minutes or less. Number one, check your watch list. I showed you earlier how I compile my watch list and what I do with the relative strength and relative weakness. So when you pre-build your watch list of swing-worthy stocks and ETFs and futures, make sure that they're into those clean setups, right? Make sure that your strategy is going to be implemented into a clean environment, no moving averages above, right? You want the market to be, or the stock to be, in the clear. So in the clear means that it has to break some kind of a resistance point if you're going long, and some kind of support if you're going to the short side. Ignore everything else. Please don't chase and don't guess. Like, don't have that FOMO feeling. make sure that you are looking for tight entries as well, right? Pro tip, use a scanning tool, for example, in order to find some trades that are really on the move. You can use FinViz, that is for free. Also, review open positions. It takes you about 3 minutes, right? Because here it takes you 3 minutes to check your watch list. I have my watch list on charts. So I don't have it as a list. I don't have it on a piece of paper. Oh, watch Microsoft, watch this. No, I have it on charts. So it's so super easy because I have a screen with probably like 20 stocks. And out of the 20 stocks that I'm in or that I'm watching, right? So I have those charts on the daily. So I pop up my platform, I see those 20 stocks. It takes me like probably less than 30 seconds to see all of them because they're on one screen. So it's super, super easy. And there are like little tricks that you can use that really make your life easy. And this is one of them. And yes, prepare to take partial profits or exits. Don't forget to set alerts. And no emotional micromanaging, okay? You've already set your plan and you just need to respect your plan. And also order adjustments, maybe let's say 4 minutes. That is if you're very slow in doing this for the first time, because all you have to do is drag your stop order, because once you have your entry, you have your stop, drag your stop order to the trail that you desire and you're done. So it takes like probably 5 seconds to do that. So you're managing the trade before the action happens. All right. So this is something that I have received a couple of weeks ago from one of my members. And he said, you're the real deal. Thank you for all the hard work you do to find high-odds trades. 100 shares of PLTR have paid for my yearly membership. I'm in for life. This is Robert. And he actually showed me his snapshot of his P&L here. And you can see that he got in a little late, right? Because I called the trade at $99, but it's fine. $99.22. And he made over $2,500 on this trade on 100 shares. On 100 shares. Needless to say that this happened before the ad. Okay, so this was before the ad. So he actually doubled this. So it's like $5,000 in about 2 weeks or 3 weeks or something like that. And here is Nate with his family. He took his family on vacation to Turks and Caicos. And he's saying, this is a milestone. I'm incredibly proud. And yada, yada, yada. He couldn't have done it without us. These are real people. So I'm here to share with you what I do. And if you want to join the Stock Swing Trader today, I'm going to share with you what you can expect from the program. So the Stock Swing Trader is an email that is delivered each Monday. Sometimes we deliver it on Sunday and sometimes we deliver it on Tuesday. It depends on how the market is reacting, because if I have nothing to add and if we don't have any kind of trades or any kind of context, then there's nothing to add. So the plan that we had from a week before takes into effect into, let's say, the first day of the week. But needless to say, most of the time, 99% of the time, the Stock Swing Trader is being delivered on Monday morning. And you get a comprehensive market analysis. You actually get a video analysis as well, of macro to micro, so all that top-down analysis from higher time frames to smaller time frames. You get new market focus and themes, just like we've noticed the financials that are stronger, that are performing strong, and also the tech stocks. Also, you're getting the sector performance, you're getting the market performance, you're getting the earnings calendar, you're getting the economic calendar, and basically you're getting everything that is highly to impact the week and the reaction that you could have to the week. So we discussed that as well. You're also going to get access to a live performance portfolio. This is real-time access to performance portfolios. So if I make a change in the portfolio, you're able to see it. You can have that on your screen all day long, whether you're at work and you cannot chime in to, we have a private feed where I post updates, but if you don't want to be there, you can actually have that live on your screen. There is a way to enable notifications on that one every time I do an update. And you're going to see there if we have a trail, if we have a new trade, if we make any changes to positions, etc. You're also going to get a pre-launch access to my investing picks, and this is a program that is going to launch this summer. You're going to get a private X feed, real-time market commentary, analysis. I'm going to show you what that is all about in a second. You're also going to get platform layout. If you're trading on Thinkorswim or any other platform, I'm going to share with you a snapshot of my platform. And if you're using Thinkorswim, I'm using Thinkorswim. I've been using it for many years. I'm not affiliated with them. I don't care what platform you're using. But if you want me to share my layout, I can send you the link. You just pop it in your platform and you're done. You get suited personal support via email. So what happens here is that if you have a question about one of the stocks that we're in, or if you, let's say you scan and you find a stock that you love and you want to get in, if you want my take on it, just email me that. Also, you get a risk sheet. So again, remember, position sizing is important. So you're going to get access to a position size calculator that is included with the program. And you get some money management cheat sheet, what to do at target 1, what to do at target 2, what to do at target 3, and all that fun stuff, and how to scale and how to better manage your positions. So the stock swing trader is $299 a month. The price is going to go up at the end of actually next week to $349. And if you're interested in hopping in on the stock swing trader for $299, all you have to do is click this link right here. That is going to take you to this page. If you want more details, thank you so much, Fausto. Thank you. So if you want to go to this page right here, you're going to find more details about the program. I'm not going to sit here and bore you with that because if you have any questions, feel free to ask me. But here you have all the details. There are 2 plans that you could actually purchase today. There is one for $299 and one for $2,099 right here. And what you get, so you get the newsletter. It's kind of like a newsletter where you get all the information, good news and bad news here. You can see the details below. And we talk about the market. We talk about a lot of things here. So you can read this. You don't have to listen to a video or anything like that. Other than that, these are my conclusions right here. You're going to get access to the 2025 portfolio, which looks like this. You're going to get the access to the portfolio like so. This is the April portfolio, and this is, excuse me, the May portfolio. And here I'm going to make comments. I'm going to say, okay, lift your stop, half the size, etc. If you, okay, oops. Okay, here you go. Here you're going to have the earnings. Here you're going to have the economic calendar. You're going to have the weekly sector performance. These are the stock performance, S&P stock performance for the week. And here you are going to get some trailing tips and trailing suggestions. You're also going to get access to the stock swing trader. We have over 400 people into the program. 122 decided to follow on X. Most of them don't have X, obviously, or just follow here. And because when I make a comment here, okay, then you're gonna get instant access to it. You get instant access to it. All right, so okay, so here you can see that you have some updates. These are some very active traders that are in here into the X feed. And for example, here ITA trail 170. So you're going to see that yes, it is posted here on ITA. Here it is. ITA trail 170. So not only that you're going to have it here, but you're going to have it here and with the chart. IWM trailed out today. BJ, I'm holding through earnings, ready to add if it dips. So you're going to have a lot of details here, a lot of charts. You can see that you have some, we have a chart here, for example, BULL that stopped out. So you're going to have all transparency in here. So everything that you need to know. So if you have any questions, thanks so much, Margaret. I appreciate it. Appreciate your comments. And this is pretty much what you get. And also I wanted to share with you guys here that you have the investing. See, these are some of the things that I have added in 2025. You also have access to a 2024 investing list that I have. These are just the newest names that I have added. You get a position size calculator right here. So you can just type it in here. I'm sorry, click in here, and you're going to have the position size calculator that is going to pop up. You have the indicators that I'm using. You have option expiration dates. You have the holidays. You have the Q&A explained. You have guidelines, disclaimer, etc. So you have a lot of information in here. So if you're ready to tap into swing trading, I'm more than happy to help you achieve your goals. I have been doing this very successfully for close to 30 years because first I was an investor and swing trader, and then I dove into day trading. So thank you so much, Fausto, for having me here today. I hope the sound was okay. I have some issues with my Bluetooth, but other than that, everything, I think it's okay. So
Thank you so much
for having me.
I really appreciate it, Anka.
Sound. This is perfect.
Good. You can hear me good. Well, everyone, thanks. And definitely check out Anka's promo here. And we'll be seeing you all tomorrow for the part 2 of Cyber Expo. Bunch of whole great lineups too. We got Jay Trader. We're going to have Wise Trade, with the Wiz from Options, Top Gun Options, and a bunch more. So we'll see you then. Make sure you register for it. And if you can't make it, don't worry. Everything will be recorded. If you missed any of the speakings today, you'll be able to watch them later on this afternoon. We'll get them up and running for you. So thanks for listening, everybody. Enjoy the rest of the evening, and we'll see you bright and early tomorrow morning here in the cyber trading floor. Thanks, everybody. Thanks, Anka. I want to have a great day.
Thank you. Have a great night, everybody.